А,
Точно так думаю.
не работает?
Работает. Сейчас пойдем. Подожди, я ссылку.
Ссылку поменяй. Ты сохранил? Нажми на сохранил. Something went wrong. Something went wrong. Смотри, это просто
А, я не поменял.
не удали просто.
Сохранился.
За 8 просмотров. Нормально.
Блогеров, которые найдут.
Это наша ППС. Каналы.
У нас стоит материал в общем.
А ты добавил, да, там два блоги. Три, да?
Раз, два. Не надо.
А, да, вот это блог. Why?
Double forms.
I don't know, maybe she's a volunteer.
Double forms.
Не надо. А, все, нажми на W поменять. Нажми на W поменять. Make sure it don't work. Здорово, мы с тобой здоровались?
Привет, нет.
Вниз прокрути. Ну что, работает все? Нажми Virtual. Нажми Virtual. Окей. Проверь ссылку туда.
Все, да. Здесь у меня там все готово. Супер, спасибо.
Ты можешь спрятать, да. Никто не увидит, что ты делаешь.
Окей.
Hello guys, welcome to Global Working Forum. Today's the second day of data. Thanks for being able to join us online. I hope you will not disappoint you. Thank you so much. Я пойду завтра.
All right, good morning. Welcome thousands of attendees who showed up for the 9 o'clock session. Well done. As you know, if you were here yesterday promptly at 9 o'clock, you got the treat of the day with Michael Harrington walking into the crowd and involving everyone in the discussion. So the people who are here early get the best stuff. The early bird always catches the worm. So you guys are the smart ones in the audience today. Everyone's going to wish that they had been here to see Jeff McDonald speak today. We got Scott Walker and Devin Sun speaking today. Bill Barnheit from Abra. Later on, we're going to have Dan Moss and many others. Reese Jones from Singularity University is going to be doing a very interesting talk. And one of the most exciting things I think today is going to be our global investment battle. So we're going to have the West versus China. As you know, there's a whole lot going on in Asia in investments in blockchain. So that's going to be very exciting. And this is welcome to the Global Blockchain Forum. This is day 2 of part 2. Our first forum was in April earlier this year. This is our second part. And this might be the most exciting part because of where the industry is today. It's in a very unique place. Scott Walker was just telling me he's been in the industry for, was it 2012 when you started with Brock? And people don't realize how much has been going into this industry for a decade. And there's so much more to come. We're just on the cusp. And a lot of our discussions yesterday were about discovering that killer app for blockchain. And the truth is, there's not just one killer app for blockchain. Now, right now, there aren't really apps or dApps or things you can use, and that's a big problem, right? People are saying, well, what's going to get people to start using blockchain? What can you actually do with it? It's coming. It's coming. And a lot of our discussions yesterday were about what could be coming. Some of those, as Jeff Walker was so kindly to raise his hand in the morning yesterday, some of those may be in non-fungible tokens. That's one-of-a-kind tokens and collectibles and tradables. Imagine that in the gaming industry, embedded into gaming, and you can just barely imagine the kind of money that could be made in the industry just with that one element alone added to gaming. There's the security tokens, which Polymath will be discussing later. We can tokenize any asset. It's unbelievable the amount of money that's going to unlock in the economy and in other countries for the third world. Alex Mashinsky talked about the importance of having an impact on the third world. And in fact, on his panel, sometimes we don't think about it, on his panel he kept bugging everybody on his panel. Have you thought about the third world? What are you implementing in the third world? How could this be implemented in the third world? These are things that are going to impact billions of people, not millions, not hundreds of millions, billions. So it's very exciting what we're discussing here today. And because of this down market, because there's only a few Spartan souls here at 9 in the morning in this room, we have the chance to be in that inner circle of people who really are making a difference. They're in this room, and more of them will be here today as they wake up. But this is going to be a very exciting morning, afternoon. Please stay. Please don't ever be afraid to go talk to the speakers, to brainstorm with them, tell them about your projects. That's why we're all here to collaborate. So, to get us started, we're going to have a speech by one of my favorite people in the industry, Jeff McDonald from the NIM Foundation. Jeff is the vice president of the NIM Foundation, a nonprofit organization set up to promote the NIM blockchain technology globally. And he's also the co-founder and CTO of LexTag. And Jeff is going to, well, I'm not going to spoil it. He's got a great talk and presentation for you this morning. Please welcome Jeff McDonald.
Thanks, Ryan. Funny. Yeah. So yesterday we had a lot more people in the crowd, and I was kind of sitting in the front, and this is what Ryan was talking about just a minute ago, and he said, "Who thinks that non-fungible tokens are going to be the future?" And I raised my hand, and I'm like, "Yeah, non-fungible tokens." And then I kind of look around, and this place was full. And I look back, and like nobody else has their hand raised. Like it was just me. I was the only one, and I was thinking, oh man, what's going on? So later on in the day, it was funny. Jeremy Gardner was sitting on stage in a fireside chat, and he's the co-founder of Augur, and he broke out in his speech too, and they asked him, what do you think is the key? And he said, I think it's non-fungible tokens. And I think that was kind of interesting, and I was like, oh, there's one more person here. But he started off with blockchain in 2013. And I also started off in 2013. The project that he co-founded is now worth $150 million. And the project NIM that I was a part of the team that launched, and I was the co-founder of the NIM Foundation, is now worth about $1 billion. And I'm definitely not the smartest person that's going to get on stage today. Scott is smarter than I am. He's coming next. Please listen to his speech. But I have been around for a long time. And so I have a kind of unique perspective on what blockchain is and where it's going. And the other day, I was kind of listening to this guy on TV talk. He's on one of those CNN shows or NBC or something, and very rich, prominent guy. And he said, "I don't believe in Bitcoin." Right? And I started to think, like, man, how many times have I heard that? Someone say, "I don't believe in Bitcoin." And to me, that sounds a little bit weird. I know what he's really saying, right? He's really saying, I think that Bitcoin will not be successful. That's what he's really saying. It's not like when I say, I don't believe in aliens, or I don't believe in the moon landing, or, because there's people that really, I don't believe in evolution, right? Whether it's scientific data or not, the lack of that, or with it, people don't believe in some things. But I think everybody can believe that there is something called Bitcoin, and it's really there, right? Yeah. It's not a myth. It's not aliens, right? And it frustrates me a little bit to hear people go on TV shows and say, I don't believe in Bitcoin. And I ask myself, how long is Bitcoin going to have to work before you admit that it works? Bitcoin's been here for 9 years, and it's been working for 9 years. When are people going to stop saying that it doesn't work? Right? That's what I'm a little curious about. Now, it's true that Bitcoin doesn't do 1 million transactions per second. It's true that Bitcoin is not the promise of the perfect blockchain that we all want it to be, right? But I think that the Lightning Network is coming, and soon it's going to make Bitcoin a lot better. And it's the same thing with Ethereum, right? With Ethereum, I heard a lot of people get up on the stage and say that Ethereum's broken. Ethereum doesn't work. But again, it has been working, and it does work. It doesn't work as well as other people want it to work, but maybe it doesn't have to, and maybe Bitcoin doesn't have to, because they are proving a purpose, and they're serving the world, and they're making things better. And it's the same thing with NIM. NIM is what's called an altcoin, and I hear people on Twitter say that NIM doesn't work, or NIM is not real, right? And I have an app in my pocket, right, that has real functions. And I have to say, when does my app in my pocket that has real function, how long does it have to work for you to stop telling me that it can't work, right? So this is kind of where we're at with blockchain. I'm not going to go too much into it, but blockchain does some really cool things. And it is not just a network, but it's also a new kind of network. And it's not just a database technology, but it is a new kind of database technology. And when you combine this kind of new style of network and this new kind of style of database, you get to do some really cool things that you've never done before. So I'm going to start to talk just a little bit about why blockchain is so important. Because yesterday I heard a lot of people come up also and say the future of blockchain is just sending money back and forth. And make no mistake, I think there's a huge market for that, and I'm going to talk about that in just a moment. I think that we can send money back and forth with blockchain and do lots of things, but I think there's a lot of other things that blockchain does where it's going to see exponential growth in the future. The first is security, right? And when we talk about security, the blockchain is hack resistant, it gives you privacy, and it gives you 100% uptime. Who needs this? Anybody that's getting hacked needs this. Facebook needs this. Equifax needs this. If you have personal data and they're putting it on a server somewhere in the cloud and people are trying to hack it, there's a great opportunity for that company to incorporate blockchain. Right? Another great use of the blockchain is trust and auditability. right? And it's super good for auditing in a public way. It's really good for supply chain. It's really good for proof of existence, right? Who needs trust and auditability? Voting. All the elections in the world. We know that Russia tried the metal. We know that they were trying to look into hacking voting machines. But did Russia hack the voting machines? Do you know that? There's no way to know. But we know that 2 or 3 months ago, there was a hackathon in Vegas, and within an hour, the hackers had already started to own the voting machines that people brought in there. Right? And this is the type of thing that you can't tell after the fact if those machines were hacked. So there's a lot of different use cases for trust and auditability about the blockchain. But I'm going to come to the big one, the one that most people think about. And this is creating or serving underserved markets. I'm going to break this down into a few categories for everybody that are really cool. The first one is the one that everybody's talked about, censorship resistant. You can use the blockchain to send money and nobody can stop you. And I think a lot of people stick on this because this is how Bitcoin first became famous. People think about Bitcoin as the first transaction being a 10,000 Bitcoin pizza. But that was what I call a novelty transaction. It was a transaction for fun. It was just some guys playing around. It wasn't a real transaction of money for a good. It was just doing it for the sake of doing it. But when the Silk Road came, and when Satoshi Dice came, it was a gambling website and a website to buy certain things on the internet, the Silk Road, like drugs. Then people were spending money in a censorship resistance market, right? And Bitcoin proved itself that it can be used for money, but there's other ways that blockchain can be used to serve underserved markets. It can be used to serve the ignored or the poorly served. And this is what we're talking about, somebody in Africa. If you live in a village in Africa, like I used to, this village that I lived in Africa was way out and didn't have a bank, didn't have an ATM, and the banks didn't want to put an ATM there because it's too expensive. And so people in that village, in that remote village, they don't have access to banking. Because, and it's not illegal, nobody's saying you can't have a bank. It's just nobody wants to serve them. They're ignored. And there's people all across Africa, India, Southeast Asia that don't have access to banking or they're not being served. And the blockchain can serve them. It has nothing to do with censorship resistance. It has everything about creating a new market and serving people. And the last area I want to talk about is creating new business models. And to me, this is the kicker. This is where we start to see blockchain become crazy. So we think about this. People got up on stage yesterday and they talked about blockchain and the health markets, right? And how it's going to revolutionize the health industry. And I want to focus in on that just for a minute. I'm going to go back to the internet and Wikipedia. Before the internet, we had encyclopedias. And those were the source of truth. And when Wikipedia first started off, I made articles on Wikipedia. I was there on that first year making articles. And my friends told me I was stupid. My friends told me Wikipedia doesn't work. I don't believe in Wikipedia. That's what they said. I don't believe in Wikipedia. It can never work. And yet I made articles. Now, admittedly, a lot of my articles sucked and they've been deleted. But some of my articles that I started on Wikipedia are still there today and have become amazing articles, not because of me, but because of the other people that came after me and expanded those articles. And this is a little bit where we're at with blockchain right now. Some of the things don't work very well, but they work. And other people are going to come after us and make them great. And so Wikipedia was only enabled because it allowed people from all over the world to contribute to it. And it created a new model of information. And that's what blockchain is doing. It's allowing people from all over the world to connect and contribute. And just like Wikipedia changed encyclopedias, which were siloed sources of information that were hard to access, and Wikipedia allowed anybody to contribute or anybody to make it and made this giant network, I can see the same thing happening to health records. We can create new business models, new ways to think about our identity, new ways to think about our information. And these new business models, I think, just like Wikipedia revolutionized the internet, Airbnb changed the way we think about hotels, Uber decentralized taxis, the blockchain is going to start to do these new things. And this is just a natural evolution of the internet. The internet has disrupted one field, then it disrupted another field, and then it disrupted another field, and the internet with the blockchain, this new kind of network and this new kind of database is going to revolutionize even more fields. So that's what I think is going to happen. This is a doll. This little girl in America, Victoria, saw some of my speeches on YouTube, and she made a doll about me and sent it to me. And I put this doll on my phone here, and this doll has its own certificate. It is updatable, it is transferable, and when I am an old person and I want to give this doll away to one of my ancestors, I will give them the certificate on the blockchain for this doll. And they can prove that it's the real doll that Victoria made. And starting next week in 7 days, we have a Swiss watchmaker, and they're starting to ship Swiss-made watches with certificates for my company, LuxTag. And I think that what we've done, been able to do for this company, is we've completely updated their system. We've skipped a whole generation. When they were doing their certificates before, you would basically get a piece of paper because these are very expensive watches, they're handmade, and the person that handmade the watch filled out the certificate with paper. And now they're going directly to blockchain. They're having this big leap. And I think that the blockchain is going to allow people to create new business models just like that. In fact, my company has 5 other contracts. We don't have an ICO. We don't have a coin. And we have so many contracts that we can't deliver the contracts for the companies that we have. We're struggling to hire our engineers and deliver those. And I think that it's a great way that blockchain's happening. The apps that we're making are not killer apps, but they are apps and they do work. And I'm super excited about seeing the things that blockchain is going to bring and all the exciting people here today that are building on blockchain. Because a long time ago, just like anybody could contribute to Wikipedia, even me, and go on to have these articles that became good articles, blockchain is still so early that anybody right now can still get into blockchain and contribute it and help make something that's going to be great. Thank you.
All right, thank you, Jeff. Jeff is definitely one of the most likable guys in the industry, so please pick his brain today, have a great conversation with him today. He's here to educate and to teach, and he really believes in the future of blockchain. He's a part of it. Really great guy. Thank you again, Jeff. Now we have something very, very exciting. And before we get into it, I just want to mention, Jeff talked about voting, and there are actual governments that are going entirely on blockchain. Dubai government wants to be entirely on blockchain by 2021. That's their stated goal. Imagine if every vote could be traced on a blockchain. How would that change elections, not only in our country, but in countries around the world? Imagine if we could see all the payments that were being made by our government. That would really change the world. then trillions of dollars wouldn't just keep going missing, right? You ever seen that in the news? So our next guests are going to talk about something perhaps even bigger than anything we've talked about so far. And if you think about blockchain, the internet revolutionized communication. Communication basically is your phone. It's sending information from one person to another. How valuable is that compared to what's coming next? What's coming next is the transfer not just of information but of value. So if you compare telecommunications industry to the financial industry, how much more valuable is that transformation? And that's what the gentlemen that are coming up next are a part of. It's a real treat to have Scott Walker, one of the founders of the DNA Fund. I hope he can tell us a little of his story because it's fascinating. And he's going to be doing a fireside chat with Devin Soni, who is the founder of Polymath. And they're going to tell us all about what's happening in the world of security tokens.
Test. Yeah, it works. Thanks, guys, for coming out. My name is Scott Walker. Really, by way of a 30-second background, Bitcoin miner from 2012 with my partner Brock. Became investors, early stage investors in 2013. Really spent several years kind of back and forth.
It's a fireside chat.
Okay.
Relax.
All right. Okay. So really just spent many years doing this, and we've been really, really lucky to meet a lot of great companies, great entrepreneurs in this several year time period. So what I wanted to do with just the first few minutes is give you what I believe the entire blockchain industry history in like a quick 2-minute overview. So as we all know, back in 2009 and 2010, Bitcoin was created. Bitcoin created what I would call the first little mini bubble. And by like 2013-ish, we had a $10 billion market cap around cryptocurrency, something no one in the world had ever seen before. Following that, Ethereum was created. And many people don't really realize this, but when Ethereum was created, all the way between 2014 and 2016, anybody in the world could have bought basically as much Ethereum as they wanted to for less than $1. Okay? All of us had the chance. Right around November, I don't remember the date, but late November of 2015, something really important happened that a lot of people are unaware of. But a guy named Fabian Vogelstetter, kind of an odd name that maybe very few of us know, wrote something called the Ethereum Request for Comment. An Ethereum Request for Comment, this was the number 20. Now it's very well known as ERC20. And what ERC20 gave us was a simple way for entrepreneurs to actually take their project, their vision, their ideas, and build it on top of a blockchain. Only one blockchain that worked with this particular code called ERC20. That blockchain was Ethereum. Now, once that launched, there was a little bit of excitement around this ERC20 protocol as entrepreneurs started to recognize, hey, I think I have an idea that might actually work. So beginning in 2016, you saw the price of Ethereum gradually go up from $1 to about $10 to $15. And then, of course, there was the DAO, the first decentralized autonomous organization. And of course, there was the DAO hack, where they actually took Ethereum and split it into two different Ethereums. It was very, very weird. People didn't really understand it. And this is another interesting thing that a lot of people don't know. By the end of 2016, almost 3 years later, Ethereum was back down to just over $5 per token. We could have bought as many of them as we wanted for $5 or $6, as late as the end of 2016. But what people didn't recognize was there were thousands of entrepreneurs busy working on projects and ideas and concepts. And as those got released, the only way that you could invest in those projects and concepts was by buying the Ethereum, increasing the value of Ethereum, increasing the value of the tokens underneath. And during the year 2017, everybody remembers it was an incredible bull rush from basically nothing to hundreds of billions of dollars in value. By 2018, now you have a multi-hundred billion dollar market capitalization industry. It's not going to continue to grow because of the next $10 million or $20 million ICO. Now you need institutional money to come in. And institutions come and they're looking at the utility tokens underlying these protocols, and they're recognizing that they lack one really important thing, and that is utility. And so what we believe at DNA is, now that we've seen, let's call it the crash of the 2017 bull market, coming all the way through 2018, as we see this new utility token model starting to transition into security tokens, I think we're going to see the biggest boom that the world has ever seen around this new transfer. And it's not security tokens, it's actually tokenized securities. And I wanted to introduce my friend Devin, who actually has already been introduced, to talk about how Polymath, we think, is going to actually be a very important player in this.
Well, thank you everyone for joining so early. I'm one of the co-founders of Polymath. And Poly really got started during this kind of great boom of 2017 that Scott mentioned. And, Trevor and I and a bunch of other kind of co-founders and team at Poly were investing in a lot of these projects, kind of watching the market. And at the time, we were doing something a little different. We were, investing in different kinds of digital assets. We were buying, web businesses and software businesses, and we wanted to tokenize them. And what we realized really quick, just like all these other ICOs were raising a ton of money, we're like, holy crap, why don't we just tokenize our fund and raise money? And as we tried to do this, we realized that it was actually just really, really difficult, because we came up with a big, giant roadblock called the SEC. And as we're investing in these projects and trying to find, the real utility in the utility tokens, we realized that there were so many projects that were, literally just like trying to contrive this utility, trying to sort of skirt these SEC regulations. Well, you can't issue dividends, but how about we token burn instead? How about we, create this, construct of, algorithmic upside potential, because the people really buy these things were investors. And what we really wanted to do was we said screw this. Why don't we just go out there and launch something that can do what we want it to do? We want the price to go up. We want people to get paid for holding the token. And after we started looking at this, we realized there was a lot more people like us that just wanted a really easy way to raise money, to use the benefits of blockchain, use the benefits of sort of cryptocurrency and crypto tokens, but do it in a compliant manner. And that's kind of how we launched Poly, and because we realized that the market was just so much bigger than our little fund. It was the tens of trillions of dollars of assets that are locked up on people's balance sheets. It's private equity funds, it's real estate, it's the deed to Joe's Pizza Shop. All these things are completely liquid. You invest in a Sequoia Capital, and you're sitting there for 10 years, sitting on your hands, waiting for those juicy distributions. And tokenized securities can really make this a lot easier, which is why we built a platform, and borrowing from Fabian and our friends at Ethereum, called ST20, which is really a standard for people to launch security tokens just as easily as people can launch ICOs today. And what it does is it really lets people kind of program their own compliance. And one of the things that people don't realize is with security tokens, they think, is the SEC going to allow these things? Are they legal? You realize that in 1933, there was a giant Securities Act that said, this is what a security is, and this is how you can sell it. And if you follow those rules, we see no issue with, complying and launching a token. Token for security is not really that different from a share certificate, and it's actually in many ways better for both holders and regulators. So, we decided to kind of bake in, the Act 1933 and all the little things that make a security compliant natively into our token and make it user-friendly so that someone can go to our website and in 5 minutes, decide how much they want to raise, who they want to raise it from, what kinds of investors they want, the jurisdiction they're in, and out pops a compliant security token that can then be sold to your investor base, again, in a compliant way. So that's kind of what Polymath is and what we're building towards. And I think just like we saw this big boom in 2017 of sort of ICOs, we really hope that 2019 or 2020, we're going to see people understanding the value of security tokens. We're going to see more intermediaries, exchanges, and accounting firms, and other companies that launch that are going to make it much easier to launch your security token, just like Ethereum and other platforms have made it easier to launch your ICO.
So I'll ask you a couple of questions around that idea. From what your experience and from what you're seeing, what are the types of security token companies or projects or businesses that are coming to you today and getting funded and going live?
Absolutely, and because there still is a little bit of that legal uncertainty, most of the products that are trying to tokenize their equity are tend to be funds that are raising a little more money. I think the average check size we're seeing, the average raise size is $25 or $30 million, and these are traditional kind of investment funds, whether that's a real estate fund, private equity fund, a venture capital fund. Those are the folks that are really kind of spearheading the move into tokenized securities.
So I remember the first time I took a look at the Polymath product and how easily it could take a business idea, transition it into a security token. And as an entrepreneur, I've been starting businesses my whole life. The first thing that I thought of was, oh my God, there's going to be 1 million business owners that once they understand, they can take their software company, their hardware company, their vision of whatever their company is, tokenize it and allow it to trade. The amount of businesses that are going to be coming on this is going to be crazy. But from what you've seen so far, it's mainly funds and like money-raising products or projects rather than actual businesses to date.
Absolutely, I think. There's a lot of companies on the sideline that do want to raise capital using a token. But what we really do expect is that as some of these kind of templates and frameworks and success stories launch over the next year, and the one slight difference between STOs and ICOs is that an STO can't trade right away. With most ways you launch them using Regulation D filing in the US, and that means that once you actually sell the equity, you can't trade it liquidly for 12 months. So there's a lot of companies that raise capital in the next 12 months are going to that will start trading, that will see that liquidity premium sort of liquidity discount in the market go away, meaning the valuations for tokenized projects are higher than non-tokenized projects. And when people really see that, I think that the bandwagon is going to start moving very, very quickly.
What we believe in the security token market is, up until now, there are or have been 0 security token exchanges approved to trade these assets. Once the first one turns the corner, and whether that's Malta or US or Bermuda or Japan or any of the different markets, once that first exchange shows the way, I think there's going to be hundreds of exchanges. I think hundreds of thousands of businesses, literally millions of businesses all across the world will begin using these, and the on-ramps to taking tokenized securities, building them out and putting them onto exchanges is going to be incredibly valuable. That's one of the things I love about the Polymath model.
Absolutely, and I actually think it's also going to be a very global model, just like traditional ICOs. Where Scott and I were just in Asia a couple weeks ago, and meeting exchanges and companies in places like Korea, where there are literally hundreds of thousands of companies that are looking to tokenize, and I think the first wave is going to come from there because there is a little less kind of fear of regulators. But as that booms and as these exchanges launch, I think we're really going to see a really interesting liquid market for many more companies than you have today.
Completely agreed. So in closing on my side, what I like to do is I like to take the big picture view and give you guys a indication of what we think security tokens become. So what we saw in 2017 was the culmination of a little bit of a utility token bubble, and the few thousand projects that that successfully raised money created this $600 or $700 billion bubble. And comparing that to the millions and millions of companies that we're going to see tokenize their assets, tokenize their cash flows, tokenize their equity, it's going to make 2017 look like little children playing in sandboxes, and so we're really excited about that.
No, same here. And the one thing I'll just mention to folks in the audience is twofold. One, I think if you are raising capital today, you should seriously consider having the option of tokenizing security, because we are seeing a lot of investors that are kind of moving into the space that really want to invest in compliant liquid tokens. And then secondly, as someone in the space, both of us just see a tremendous need for entrepreneurs to build infrastructure and build tools to make the security token movement move even faster, whether that's compliance or reporting, kind of this boring stuff that's going to be really needed to be to actually get this market going off the ground. I just see a giant opportunity for entrepreneurs to build on top of some of the stuff that's already been built in exchanges and issuing platforms like ours.
Thank you, everybody. I think we ran out of time.
All right, tokenizing everything. That's pretty exciting. I hope you saw the value in that, the potential of that in the world. Somebody is going to make a ton of money off of what Polymath is doing, so let's hope it's you. Learn more. I mean, Devin is right here. Have a chat with him later. This is a big movement that's coming. And up next, we've got another fantastic talk with an amazing person in the industry. Bill Barhydt from Abra is going to talk about Bitcoin as the future of banking. And Bill is CEO and founder of Abra. He also is the first ever person to give a TED Talk on Bitcoin back in 2012 when Bitcoin cost about $2. I bet you wish you had heard that talk back in 2012 and bought some Bitcoin afterwards. Please welcome to the stage, Bill Barhydt.
All right, good morning. I'm going through a bit of a cold, so it's not puberty, I assure you. Okay, they gave me 10 minutes, so we're gonna move quickly through this. So I built a time machine, as all people in Silicon Valley do, and went a few years back in the past, in the future, I should say, and found some things out that I'm going to share with you, and then figured out how it's all going to happen, which I'm also going to share with you. So I went to visit a village in Kenya, found a boy named Michael here who actually has a solar lantern in his little stone hut. For the first time, is able to do his homework at night because his family bought this solar kit via this company based there. They sold millions of these things in the meantime. It uses IoT connectivity combined with an M-Pesa wallet to make a lease payment. And they announced the day that I was there that they're bringing this product global for the first time, so that in 175 countries, you could actually make a micropayment to have instant on lighting via solar kit. Pretty cool, okay? My next stop was in the Philippines, where I met this woman. She called herself Mary, who's a farmer who's actually quite successful with a product, and she's been making small deposits into this micro investing service, which in the same day announced that they were going global, so that in 150 countries, you could actually make micro deposits and invest in things like US mutual funds. Okay? Well, how are these two things possible when I would posit that they're actually not possible today? Meaning if I challenged you to launch a global micro investing service and a global pay-as-you-go service for solar, it would be physically impossible, both legally and technically. You couldn't do it. Okay, so I figured out how they did this, and I'm going to share it with you today. Given the title of my talk, you may guess it has something to do with crypto. But there are basically three requirements that I uncovered. It's got to obviously be global, since the service was global. It's got to represent a stable store of value in order to make a payment, especially with micropayments. The money can't be moving all over the place, and obviously it's got to be internet-based because they're doing it from a phone across over 100 countries. So I'm going to quickly tell you how I think this shouldn't be done, and then we'll get into how it should be done. Now, if you've spent 4 seconds looking at this slide, you've probably figured out the common thread. These are currencies that have failed. Actually, let me take a step back. All currencies have eventually failed. These are currencies that have failed spectacularly, okay? Now, this is a slide that shows what happens during hyperinflation. We all think about what happens with the red line, which is when the price of bread goes up to ridiculous amounts of money. But what people don't usually focus on is the green line, which happens to the actual money supply at the same time that the price inflation is going up. Now, that's the price supply, the money supply during traditional hyperinflation. This is what the money supply in the United States has looked like over the past few years as a result of quantitative easing. Now, I'm not telling you what's going to happen. I'm just telling you that the past leaves clues for the future. And if the past is any indication, this is a very worrisome slide. Okay? I overlay that on what's happened since we've moved from a commodity standard to a fiat standard, and it looks even more troubling. Okay? Because this isn't something that really has been happening overnight. It's been brewing for a very long time. So one could easily make the case that it may be time for a new commodity-based standard in banking, right? Now, let's relate this to what I've seen over the last 20 years. I've been doing this for a long time, about the future of the past and the present of the internet itself as it relates to Bitcoin. A friend of mine made this very interesting quote. Bitcoin has 2 proven use cases after 8 years, criminal activity and speculation. I went and trove the internet and found a relevant quote about the internet itself. I predict the internet will soon go spectacularly supernova and in 1996 catastrophically collapse. And this is from the creator of Ethernet itself. Now, obviously, the statement on your right is provably incorrect because it's already transpired that hasn't happened. And I'm going to show you why the statement on the left is also provably incorrect because other things are already happening with cryptocurrencies that don't involve her two use cases. These are the businesses that have been completely either wiped out, transformed, or in some cases just rewritten because of the internet. These are the businesses that I believe are in the process in some way of being transformed because of the creation of Bitcoin and its underlying technology. I'm going to skip this, but what is this killer app for Bitcoin now, right? Meaning today. Right? So I'm going to show you that, and this is where I'm going to hopefully give something back to you because I want you to be able to take this back with you and look at the slides online and start to talk to your friends about why this isn't just speculation and dark web nonsense. And you can go out and explain why Bitcoin really is useful today. So there really isn't one killer app in my opinion. Right now, I'm going to give you 3. So the first is what we call cross-border payments or remittances. The remittance market is about $1 trillion in global volume, half of it on the grid, half of it off the grid. Off the grid meaning farmers literally carry money home during the off season. The rest is sent via bank wires, Western Union services you're familiar with. Generates enormous amounts of fees. The average transaction fee plus FX spread probably puts the fee on the order of 9 to 10%. We've done an analysis which says if you were to just move the middle rails, not the consumer-facing pieces, to be Bitcoin-based, anywhere from 100 to 300 basis points would go right back into the hands of the consumers. 300 basis points on top of $1 trillion is a lot of money, especially when you're making, $1,000 a month as a migrant farmer. Okay, this is a big deal. All right, we did some tests at ABRA on this, where we launched cash teller networks in the Philippines to facilitate money transfer, and it works great. The consumer doesn't even have to know that they're dealing in Bitcoin; they can just see pesos. And that leads to the second killer application, which we call decentralized investing. If you saw our announcement yesterday on the Abra Index token, this is the underlying technology for that. I mentioned earlier also this idea of micro-investing. Well, if you have a single app that allows you to store 80 different assets and then convert between them in a single interface globally, right? You can't do that and be a custodian of funds. It's just impossible from a legal perspective. Even Citibank can't do that. But this synthetic asset-based model of what we call decentralized investing, using collateralized Bitcoin contracts, means that for the first time you can store anything on a smartphone. You can store a synthetic dollar, you can store a synthetic peso, you can store synthetic equities, you can store synthetic index funds like the one that Abra launched yesterday, all based upon simple multi-sig Bitcoin contracts. We've done it now to the tune of hundreds of millions of dollars for hundreds of thousands of people. It works beautifully, right? So this is important because it lays the basis for a global banking system to transition from fiat to crypto without the consumer having to understand crypto. Meaning I can store dollars on a phone and still have it be based 100% on Bitcoin. Okay? That's a big deal. And that's the basis for all of the work that we do at Abra. The last thing I want to mention is this idea of consumer asset finance. Now this goes back to the solar example I gave you before, which works great in Kenya and Tanzania because the penetration, particularly in Kenya of M-Pesa, is like 100%. It processes something like 40% of GDP now. Okay? What if you wanted to extend this not only globally, but to other products? Dishwashers, basically anything large that's electronic, right? So that we do lease payments for people that couldn't afford the retail cost. Well, how would you do that in places like Indonesia or China or India where they don't have a single mobile phone-based micropayment solution? This is where the cryptocurrency model combined with that synthetic currency that I just described in the last section actually creates an entirely new trillion-dollar opportunity because now consumer electronics retailers, right, can offer their products via micropayments using IoT connectivity embedded in their device. So the person in the village in Indonesia can pay in synthetic rupiahs. The money lands in Samsung's corporate account in Korea in won and has no idea what currency the person in Indonesia paid in. And I would posit this can't be done any other way. I've tried. There's no other way to do this. Credit cards won't work, right? Bank integration won't work. There's just too many countries. If you're trying to do this globally, I believe that cryptocurrency is the only viable technology today to make this kind of micropayment work with combined IoT connectivity. And you may have read last year that we're working with Foxconn, and this is one of the reasons why they invested in Abra. So, sorry I went through this really quickly, but again, 3 applications of Bitcoin that I believe can't be done without Bitcoin, at least on a global scale, right? So I'll post these online and feel free to share them with your friends and start kind of evangelizing the fact that this isn't just about speculation. So just coming back, I believe that you're going to see press releases like this from entrepreneurs who start using these crypto rails, right, as the basis for the future of banking. Globally accessible, very simple, stable store of value when you implement a synthetic currency, and obviously internet-based. So we write about this a lot at Abra.com. If you want more information, I'll have the slides up later today. I'm Bill at Abra if you have any other questions, but I'll be around for a little bit. Thanks for your time.
Thank you, Bill. As you can see, Abra's doing some really impressive stuff that can totally transform the lives of people in countries that don't have what we have here in the United States. Next, we're going to have a great panel called Blockchain Business Models, Transforming Business Across All Industries. Our moderator today is going to be Jordan Woods from StarChain Ventures, Chris Mosler from PeerNova, Ravi Sarkar from Hexaware Technologies, David Moss from StrongBlock and Block One, Shyam Nagarajan from IBM, Craig DeWitt from Ripple, and Josh Frazier from Origin Protocol. Welcome, gentlemen.
Hello, everyone. So my name is Jordan Woods, and I'll be moderating this panel. We've got a pretty exciting group of people here who have a lot of experience in enterprise, and specifically enterprise blockchain. What you've been hearing over the last couple of days is that we're looking for real use cases, and there is a thesis that real use cases are going to be primarily in the enterprise in the near term. And so what we're going to be focused on with this panel is what real use cases there are and what's being rolled out. And I think you're going to be pretty excited by what we've got. We've got a great lineup of people. Right here so my name's Jordan Woods, and I'm with Star Chain Ventures, and we're focused on enterprise blockchain and foundational protocols. So obviously I'm very interested in this area. Got Chris Mausler here from PureNova. PureNova is one of the leading providers of solutions in the fintech space for enterprise blockchain solutions, dealing with post-transaction processing, reconciliation, and compliance. And then we have Ravi Sarkar. He's from Hexaware Technologies. I believe that you've flown in from India. Is that correct? So Ravi is heading up the fintech and insurtech practice for Hexaware, and they've done quite a few implementations already, and he'll be able to tell us a bit more about that. Then we have Josh Frazier from Origin Protocol. Origin's actually been out there for quite a while, and they're doing decentralized marketplaces, helping developers and businesses using both the Ethereum blockchain and IPFS, if you're familiar with that, for decentralized storage to build out the sharing economy, but in a decentralized way. Then we have David Moss, and David has actually just come off a very exciting launch, which is the EOS launch. He's currently he's with Block.one. So if you're familiar with EOS, that was the group that helped to not only create EOS, but also to launch it. And now he has a stealth company called Strongblock. And he'll be telling us, hopefully, a little bit more about that I guess he won't, but he has the keynote right after this particular panel, and he'll be able to tell you at least something more about what he's interested and excited with. Then we have Shyam Nagarajan from IBM. He's a director of the growth networks for the IBM blockchain business, and has been working on hundreds of different deployments, primarily on the Hyperledger Fabric platform. And if you're familiar with that, Hyperledger Fabric is a permission chain, and many of the enterprise blockchains and what's going on in the enterprise is permissioned primarily for privacy and security. And Shyam will be able to tell us a lot more. There's really a long list of pilots and deployments that he's working on right now. And then Craig DeWitt from Ripple. I think most of you are very familiar with Ripple. Maybe you're familiar with the coin, the token. It's been in the news, obviously, a lot. But the reason it's been in the news is because there have been a lot of real-world deployments, a lot of interbank transactions that Ripple does, and they're very real world. Obviously, the largest banks in the world are very conservative, and Craig will be happy, I'm sure, to tell us about all of those. So maybe we'll go in the reverse order, starting with Craig, and we'll do a little bit of just kind of like a level set, do some basics here in terms of, what is the real reason for using blockchain for business applications? So why is blockchain such a good foundation? And we can just, go down the line here. Craig, what are your thoughts on that?
Thank you very much. So We really view blockchain as just a tool within the overall set of products that we deliver to our customers. When dealing with financial institutions, the value transfer piece is very important, but where we really had to start, and this is the foundation of RippleNet, is really with messaging. That messaging is just a bi-directional communication between financial institutions so they can do all their AML checks, their sanction screenings, and then give their customers complete visibility into the total cost of transactions, which is just not something that exists on today's creaking infrastructure for cross-border payments. Where blockchain really comes in to play here, or should I say where the magic is value transfer. And in today's world, you have these major financial institutions who have these things called no-stro accounts that locks up trillions of dollars that allow them to facilitate cross-border transactions. And that's crazy. What blockchain allows, specifically digital assets, is allows a trustless model where value is able to be instantaneously transferred across borders. And up until this point, that technology did not exist. And that's where we're seeing people move forward, specifically using XRP as a medium of exchange.
Thanks. Sean?
I'm going to build on top of what Craig said. The concept of value transfer really breaks down into, for a business, it's all about cash flow. How do you manage your cash flow? How can you do a business with minimum amount of cash capital so you can be more profitable? So if you take that and further break it down, it's about ease of doing business without any friction. How can I reconcile with my business partners quickly, and therefore we both come to an agreement and can buy, sell, any kind of transaction. And that's where this technology is incredibly impactful. And to that concept, we have seen this apply across all different kinds of industries. Obvious ones that are out in the market and you see in the financial services world, but what you don't see yet is places like supply chain and supply chain optimization, food safety, energy, cybersecurity, defense areas. At the simplest level, the individual's right to own and manage data and their own identity. All of this is possible because of this technology. And this is at a business level. And we're not talking about public and cryptocurrency. They all help in the process, but really the technology and the principles of the technology allow you to make it viable. It comes down to cash flow and really value transfer between individuals and business.
Great. David?
Hey, so love what Craig and Chumbo said, talking about the data part. I think that's the area that, one of the areas I've really been focusing on. And first of all, there's massive duplication of data and been stuck in various silo systems. And I was talking with a gentleman earlier about energy. And one of the things that you look at is that, well, everybody has the same data. They're essentially a node, but they don't communicate with each other, or they keep a lot of that data captured. And then if you look at decentralized systems, I think on the data side, if you look at Airbnb, let's take Uber. We're all probably riding around getting Uber rides here. Okay, great. Well, it's a decentralized economy, isn't it? No, it's not a decentralized economy. It's a decentralized. The rider and the driver have a nice interaction, but all the data is going to a centralized place. They have all the data on you. You don't have your own data, or you have a small amount of that data. And looking at where that data goes, what if you were to build a decentralized Uber, a decentralized various other things? Do you need to really have all of that there? So all the infrastructure, does someone need to own it centrally, or can other providers come in a consortium and build that out? So I'm very fascinated, coming out of Oracle Corporation, which is where I started, looking at data as one of the big things that we can really make a big difference in. And then the decentralization of that, and the ability for us to just do simple transactions with each other without that information going to a third-party central thing that's keeping it all and not letting us have it and then using it against us.
Great. That's a great segue to Josh and decentralized marketplace.
Yeah, absolutely. So, coming out of Oracle here, a lot of businesses make the mistake of looking at it as like another database decision. Do we use Oracle, or do we use Postgres or MySQL? What should we choose here? And what I always remind people is, like, when you're choosing to build on a blockchain, you're choosing the slowest, most expensive computer in the world. You better have a damn good reason if you're going to use it. And so I think there are interesting properties on why you might want to build a decentralized Uber on the blockchain. And it's about how do you cut out that middleman? How do you reduce those fees? How do you remove that single point of failure where centralized Uber is getting shut down, but decentralized Uber can't be shut down because it's a truly pure system, and shutting it down means shutting down the internet. You can look at emerging markets, people where they can't use Uber because they don't have a credit card, because they don't have access to traditional banking systems. And just like cell phones were able to leapfrog landlines, I think we're going to see the same thing with this technology where people are just not going to bother getting a bank account because they have an inexpensive Android phone, therefore they have access to cryptocurrency. And we're going to see a whole new range of applications being built on this, serving people who have never had access to traditional services before. And those are the types of use cases that I find most interesting versus trying to swap out a traditional database but still have all of the corporate control and structure that we're used to with businesses.
Robbie, back to fintech.
Sure. I will just add to everything that you have heard and go to the ground floor of what's actually the technology out there. So I believe that the data before the blockchain technology was orphaned. Every piece of data, there was no way to really track and trace the data. You had to rely on a third party, trusted third party, to tell you that this data originated from this point and it's an authentic data. So blockchain provides that trust capability. Every data now can be traced back to its origination. And when we lay out the business and transactional aspects on top of it, you can track and trace the payments, you can track every asset, and there are multiple use cases on top of that. So I believe that's a very important aspect which blockchain brings, which was never existing.
Awesome. And Chris?
Yeah, so a slightly different take on the views is we see enormous potential for Nova in simplifying business processes around the business transactions. They're typically today held in different systems, they're processed differently, they're enriched differently, etc. So in our case, we're addressing the banking capital markets side of things. So think about transactions going through a front office, a middle office, and a back office at a major institution. It'll go through hundreds of applications. It'll be stored in many different databases. So what we do is we provide a platform to link the data together. We call it front to back event lineage. So you can see how the data transfers, how the state of the data changes. And what that enables you to do is simplify all the business processes that go on at the major financial institutions, because most of the cost involved is processing the data, exception handling for data that doesn't match. And so once you get the data in a blockchain or DLT format, both within the institution, you can then share it and reconcile that with all the counterparties, regulators, etc., in a much easier way, and bring costs down the system, which is one of the promises of the technology.
Yeah, maybe I'll just mention here that we have a thesis that there's really 4 key pillars to blockchain, and actually most of them apply to business. So I'll just quickly go through those. The first is this ultra-secure, immutable ledger, and that really helps you to build trust. So this is kind of like this trust layer that doesn't yet exist in the internet or in the web. You've got these decentralized transactions, so we heard about taking out intermediaries, right? So if you can do these trustless transactions, you can start doing peer-to-peer, and that reduces cost. And cost reductions that we're seeing are somewhere around 20, 30, 40%, which is pretty meaningful, especially when you're at scale. Then you have a token, and gamification can be quite useful. It helps to align incentives. But it's not just aligning incentives, and it's not just about gamification. In the case of, like Ripple or like what IBM is doing, you're transferring value, right? So obviously, if you're familiar with Bitcoin, you're transferring value in a peer-to-peer way. Well, you can do that in banks and put that on a secure ledger. And now you have the ability to make wire transfers internationally rather than take 2 to 3 days or a week. You could do it at the same speed as email. And then you have this open source infrastructure which is really pretty heavily disruptive. It's not really ready for business, or business isn't ready for it. I think this is one of the questions that we're going to have in terms of the truly disruptive potential of blockchain. But I don't want to speak too much more about this because I promised that we would get into use cases. And so what I'd like to do is just have each of the panelists talk about the favorite use case that they have, and also if they've rolled out the specific use case, you know, maybe either who's using it or, you know, what's the big advantage for business in using blockchain in their system. So Chris, why don't you kick us off?
Yeah, so this will follow on to the business process simplification. So in the area of post-trade processing in the industry, no matter what instrument you're talking about, a very complex set of business requirements that global banks have to do. So one of our customers in the derivatives trade reconciliation process, they're using our system to essentially do what they have to do fairly manually today. So the challenge is to match their trades from global institutions, or their own trades are a little messy, different legal entities, etc., and match that to the 25 plus counterparties that we do business with around the world. And classic example of all those entities sending them their data sets of what they think their trades are, and they have to match that against theirs for regulatory reasons as well as just plain business reasons. This is a process that can take many days because, again, the data is processed differently in various systems by different customers. And so by using a system like ours, where they have a very clear event lineage of view of all their transactions, we have an automated way they can automate the reconciliation of their data with their counterparties and speed it up in a matter, generally all reconciliations will be handled within the day at this point. And the cost savings actually have been in the 80-90% range.
Okay, that's a lot higher. Not 20-30%. You're talking 80-90%, and a reduction of days.
Yeah, they have roughly, between them and the people they outsource this to, they have 5,000 plus people around the world on this one business process, doing post-trade reconciliation in just derivatives.
Okay, yeah. Amazing. Robbie?
Yeah, there are a couple of use cases that I will talk about. Trade finance, one of the use cases you must have heard about. Now, why it's important is you must have heard a report from Asian Development Bank where $1.5 trillion of trades are not even getting financed today. So blockchain eliminates the inefficiencies and the time that it takes in getting the trades financed. It's a very valuable use case because that will fuel the economy, that will increase the efficiency in the process. And so that's one of the use cases. Number two, I would say, is the commercial real estate. It's a very illiquid asset at this point, and blockchain tokenization and technology, it can really bring in all the liquidity that is required. And the fractional ownership of very large scale, large value commercial real estate can be achieved by leveraging blockchain. The number three is in the capital market custodian bank space, where Luxembourg, which is centered towards, there's a great amount of population that is engaged in the fund management asset servicing space. So the transfer agency work which is done there, it's very inefficient at this point. It takes 1 to 4 days in order to process it. And so transfer agency on blockchain, a smarter transfer agency work that adds a lot of value. So these are some of the use cases that we are implementing and working with large enterprises.
The amazing thing for me with blockchain is, traditional VC, we deal with billion-dollar markets. In blockchain, it's multi-trillion-dollar markets. So a totally different level. Josh?
Yeah, it's funny. Last week I was doing an AMA, a WeChat AMA with China. So I was up at 6 in the morning doing this AMA, and this random guy drops in, Vitalik Buterin, and he asked this exact question, the founder of Ethereum. And he says, what are the use cases you think are going to take off in the Origin platform? And for me, it's all about where are the use cases where you have these egregious fees the middlemen are charging, right? In the sharing economy, we see lots of examples. Standard is 20, 30, sometimes 40%. And for things like Uber and Airbnb. And these services, if you think about it, 99% of what we're doing is just making an introduction. WAG, the dog walking service, 40% of every transaction. And really what we're doing is just introducing buyers and sellers. So we cut out the middleman, both the buyer and the seller get a better deal. Again, we've seen these services get banned in cities all over the world. Whenever you have censorship or overzealous regulation, I think blockchain is really interesting for that. Emerging markets, again, is a huge category. There's lots of other areas that I really believe blockchain is going to disrupt every industry. But I think there's certain ones that make a lot more sense in the near term, given where we're at in the development with the software that we have and the scaling challenges that we see. So I think we're going to see it. There's going to be certain use cases which we see first, and that's where the biggest pain points are.
Okay, great.
Yeah, following on with what Josh said, I think that there's a lot of low-hanging fruit out there, things that you can obviously do right now. And what we're seeing with the enterprises that we're talking with is a lot of pilot projects, proofs of concept, probably the same things that IBM is seeing, where they're working on things that they believe they can get quick return on value and they can see an ROI coming in very quickly. And but it's very interesting to see the entire landscape. There's some things, we were joking as a panel here earlier, that we're just never going to go on the blockchain. There's people get too granular. And what I always ask people is that when we were talking about chocolates, I went to saw a chocolate shop yesterday, and it's like you're taking one chocolate and you're saying, I want to put this on the blockchain. And just this for to sell caramel, that's it, and we're just going to do that. It's like, well, why did we put chocolate provenance from cocoa bean farms all the way to the end point? Because that's really where these things lie. And I've seen a lot of those as head of developer relations at EOS as well. I talked with 500 plus companies, and we talked remittance is a very big one. Cross-border payments is a huge, huge thing. There's an extraordinary amount of money that goes back and forth, and there are central organizations like Western Union and other companies that are taking a huge cut out of that. And usually it hits the unbanked especially hard. So I'm very big on anything that can do reduce the friction and the cost for the unbanked in the world. I'm also very big on food provenance. That's one of the things that we saw a lot of, is figuring out how you go from food, food to mouth, or basically from farm to mouth. Medical data is a huge one. Holding medical data and being able to own your own medical data, own your own DNA information. Right now, 23andMe is another example, of Ancestry.com, another example where, well, you're giving them your DNA data. Why don't I own that? Why don't I have that in my database, and I can tell them when they can use it for studies and things like that? So that's one of the really big ones for me. And then supply chain, we're talking with enterprises doing massive supply chain things. So there's just a lot of different great things out there. So I think it's whenever you can see that there is an ROI, that it's going to disrupt a lot of stuff, but it's not going to disrupt the people who just sell to sell caramels.
That's great. Sean?
David touched on quite a bit, different industries, different formats. I'm going to try and see if we can bring unusual industries that don't typically work together. So at IBM, we've done so far about 600 different projects worldwide, about close to 70 production networks in different forms, pilot, growth, all those kind of things, different industries. Some things, I'll just call out things that are interesting. Obviously, application and supply chain and food provenance. IBM jointly, along with a number of retail organizations like Walmart, have come out with something called as IBM Food Trust. It allows to be able to trace the provenance of a food. You realize we had a lettuce salmonella outbreak or a spinach contamination, those kind of things. These organizations and the consumers suffer as a consequence of that. There's tremendous amount of waste that happens. So every time a food incident occurs, the Walmart or Kroger or Albertsons has to go take that, even though it's not contaminated, take it off the shelf. That's tremendous waste. So having a system that allows you to quickly find out whether this piece is contaminated or not, or even inform their consumers about this contamination even, and to tell them their food that they bought is safe to eat, so much value. Now I'll take it to the other side where we've been working with an organization called Plastic Bank. You all know the terrible influence of these plastics in today's natural, globalization, climate change, all kinds of things. So Plastic Bank is a not-for-profit organization. they actually have built a very sustainable economy where in some of these places where it's fully littered with plastic, and people who are poor and can't support themselves can collect and deposit these plastic and redeem for actual cash or redeem for actual payments in a ecosystem of all grocery shops and banks and telephones and all those kind of things. It's possible because we apply this technology to such a thing. Right? Lastly, I'll talk about a unique case where, look, this technology allows you to build new market models. A great example is a bank was looking for, and this is a real use case, we're working on it, I can't talk more about it, but a bank looking to expand new revenue sources figured everything today, anything and everything today is digital. And the second thing is they are all participant in some form of a payment structure. So a bank worked with a car manufacturing company, a car parts manufacturing company to create what you call as a car e-wallet, a wallet for a car. And they then work with an ecosystem of a gas station petrol companies and toll booths, insurance companies, in the way that you actually buy a car, rent a car, own a car, and transact while in the car. It completely changes the way that you're thinking about transportation first. So it's an interesting technology that allows you to do new business models.
Thanks, Sean. I'm sure with 600 different, cases, plenty to talk about. And Craig?
So mine is really simple. You have migrant workers all around the world today who go to another country and they have to send money home. These people, they'll spend about $150 sending that home. In today's correspondent banking network, it's about a $40 cost. So think about that $40 cost, and then multiply that across millions of people around the world today who are sending money home to the people who need it the most. And the use case that I'm most excited about is one that we have in production today in multiple corridors, but I'll focus on a single corridor, and that is migrant workers from Thailand who go to Japan and they send money home on a monthly basis. And what we've been able to do, working with the financial institution Siam Commercial Bank, dominant player in Thailand, and SBI, a dominant player in Japan, is that these workers in Japan can send back instantaneously and near free money home to their families in Thailand. That means more money in the pocket of mom, dad, brother, and sister, and it's being powered by a blockchain technology. That's the beauty, that's the value transfer, right? That impacts people's lives. And this is what we're doing across corridors in all over the world. So US to Mexico using XRapid, instantaneous value transfers from USD into XRP and then MXN. Low cost, really cheap, really fast. That's what's changing the game, and that's what's impacting people's lives using the Ripple technology today.
That sounds pretty disruptive, and it's not just disruptive for businesses. We're hearing a lot of cases here where consumers, not in the ways that we've been hearing, not about crypto and not about gambling and things like this, but in terms of food safety, in terms of being able to do remittances, healthcare. There's a lot of different real-world applications that really is going to lead to massive adoption because it impacts all of us every day. We only have about a minute left. What I'd like to do is just ask one question for, obviously we don't have a lot of time, maybe 10 seconds for a response. Maybe start here with Chris and just say, is blockchain going to lead to a new economy where there's going to be the rise of a new set of players that are going to have the potential to change the landscape in business? So that's a little bit broad, but is this really a disruptive technology that's going to lead to a new set of new companies?
10 seconds, huh? Yeah.
Yes or no?
So now, slightly contrarian view to answer that question, but I think blockchain in itself can't be viewed as a panacea or a cure-all, right? So like any entrepreneur, you're going to start with a business problem you're trying to solve. And blockchain may be a piece of the answer, a piece of the solution. In our case, we have a big data platform that we build elements of blockchain into, provide immutability of data and so forth. But you got to be able to, it's not just the only answer, right? So it's going to be a combination of that with other technology.
Great. So part of the answer. Ravi.
Yeah, so everything that we as a humankind use around us, it's an asset. Now, all of those assets today, we cannot actually exchange and put a financial services around it. And that's where blockchain helps in digitizing those assets. And it enables that frictionless financial services, frictionless exchange of those assets. And that's exactly what it means when someone says that 10% of GDP will be on blockchain very soon. So all those assets that we use will be digitized and put in blockchain.
Okay, so a big part of the future. Josh?
Yeah, it's very disruptive. It's going to change everything because it allows communities of people who don't trust each other to transact with each other. And that unlocks a whole lot of new applications and like the ones we've been talking about today.
Okay, great. David?
Well, yes and no. I don't think it's a revolution as much as just an evolution of a lot of things that have already been out there, but there's some parts that are truly revolutionary. So it just depends on what sector you're talking about.
Okay. So,
just as the way internet was disruptive, I believe blockchain will be disruptive, at least for the businesses. Next 5 years, you may not visibly see it. The next 10 years will be living it. So.
Great. So yes, disruption is real. Craig?
It depends how it's approached by the incumbents. This can be amazing enabling technology that allows them to revolutionize the customer experience. If you resist it, just like if you resist the internet, it's going to be incredibly disruptive to your business.
Okay, so it is an existential threat to businesses. If they adopt it, they can become part of the revolution. If they don't, well, time will tell. But 5 to 10 years, that's how much time everybody's got. Well, we're out of time. So thank you all, and we'll go on with the show. Thank you very much.
All right, thank you, gentlemen, for that great panel. And now we have something very exciting. You know, 240 years ago or so, we had a group of entrepreneurs and farmers and politicians and philosophers who created a more decentralized, fair form of governance with 13 nodes, also known as states. And it really changed the way that the world saw governance and created what we could say is the most benefit to humanity that's ever been created in a nation. Well, just a few months ago, a project imitated this and launched a mainnet with 21 nodes. And this project is known as EOS and has been a huge talking point over the last year in the blockchain community. And one of the main developers of EOS, one of the men responsible, is David Moss, current CEO of StrongBlock. And he was the SVP of Technology Operations at Block One, leading the EOS technology development. He also was the co-leader of the EOS mainnet launch, launching those 21 nodes with the worldwide block producer community. So he's going to tell us about that today. Please welcome to the stage, a true pleasure to invite up David Moss.
Hey, thanks everybody. You all awake? It's Friday morning. It's been a long week, huh? Where are people come from? Are you coming from all over the world here? Or you just drive in from San Francisco? Okay, well. As my introduction says, I'm from Strong Block, and we're not really going to talk too much about Strong Block, just a little bit of ideas about what we are doing, but really talk about what's going on out there right now. And basically, it's like my year in Provence. My year in EOS was, I was brought in as by Dan Larimer. It was August in 2017. I was asked to fly to Blacksburg, Virginia by Brendan Bloomer and to talk with Dan Larimer, who was working out of his home at the time, to be able to get EOS started. And we put together a plan about how we were going to actually build EOS and put everything together. We had teams in Hong Kong. We had various contractors, but I was essentially the first employee after Dan to come in. And I also had head of developer relations, so got a chance, for those of you who were just here, nobody left the building. I was also got to talk with over 500 companies who were planning on building on EOS to find out what they were doing. I left Block One, and this was timed. This wasn't some big thing that we were having some big conspiracy theory. Dan and I agreed I wanted to be on the outside for the EOS launch because the mainnet was launched by the community, not by Block One. We just delivered the software. And so we did launch that, and I was honored to be essentially the co-leader of that launch. I was the person who selected the anonymous block producer that started the entire thing with the Genesis block, meshed everything together. So I was really happy to be able to be a part of all of that. This is proof of presence. This is Dan Larimer, Thomas Cox, and I. Thomas is now one of the leading experts in the world on blockchain governance. And he's also part of the Strong Block team. And this is us. You can see all of our little sticky notes up there where we were laying out how the software should be built. And if you read really carefully, you can kind of, well, maybe I shouldn't show the slide too much off, but it kind of shows everything that we had laid out. This was from last October when we were kind of laying out the structure. And I ended up, right after this meeting, I ended up taking the team over to build the first testnet. And so everything that came out on December 4th, that was my work with my team. And it was really a blast doing that. Meanwhile, other things were happening. We had to be heads down while we were building all of this stuff, but there was a whole bunch of other stuff going on. This slide is actually really dated now because EOS actually took in 4.1 billion, something like that. A lot of Ether, so a lot of Ethereum. So a lot of other things are happening out there. This is, I don't ever think that I'm in an EOS-centric world. There's a lot of good stuff out there. There's great stuff out there, and I'm a big fan of Ripple and NEM and a lot of the protocols that are out there and what they're doing, of what IBM's doing, what Oracle's doing. It's a big, big world, and lots of things need to get done. And I'm just happy to be a part of all of that stuff. But we were talking on the previous panel, well, what's happening out there right now is a tectonic shift. It's coming. Right now what we're seeing is people are developing blockchain strategies. I had the honor of working with a group in early June that had 30 Fortune 100 companies, Federal Express, Intuit, Verizon, a number of other companies, and was lucky enough to be able to find out what they were looking for in blockchains and what kind of proofs of concept they were doing. And they said, well, they're developing a strategy. And in some cases, they had a proof of concept that they were working on, but none of them really had anything in production yet. And so what we see is over the next 2 years, you're going to see a really big change. This is what we were all talking about in the previous panel. You're going to see a big change in people starting to really adopt, having low-hanging fruit use cases, things where they can actually see that 20 or 40 or 90% reduction in costs and really make a difference in some of those things. But then 3 to 5 years from now, it's going to start really changing. People are going to be using blockchains. You're going to see disintermediation like you haven't really seen it before. And I guess I'm a very practical person. That's why I was brought in to build EOS with Block One. Is I like to see things actually get out the door. And I'm not looking at stuff that's going to happen 10 or 20 years from now. I'm looking at what's really going to make a difference in the next 3 to 5 years. What's the time horizon for that? There's some amazing stuff that's going to happen. I'm really looking forward to being a part of that too. But you need some basic things out there. And I'm going to talk about EOS just briefly here. And the way that we looked at it is
the blockchain needed an operating system, right? And what we were trying to do is figure out how to just take away all of the other components that were running a blockchain and extract them out, make it its own operating system, make it the Linux for the blockchain. And so that's what EOS essentially was when we were putting everything together. We call it a third generation blockchain. If you look at Bitcoin being first generation, Ethereum being second generation, EOS being third generation. And again, I'm not trying to exclude anybody else that's been working on other various projects and protocols. There's different things in there that I look for in terms of governance and all the other various capabilities that you need to have in order to really create a great, robust blockchain that anybody can build on. And so the code release was great. Like I said, I got to work on that. I am still one of the 3 signatories on the GitHub project for all the block producers that are used out there. There are 21 of them. By the way, somebody asked me this earlier. For Strongblock, for example, what are we doing? The basic idea is, well, the only thing I can point to is this is an MIT open source license. And for those of you familiar with MIT open source, what does that mean? It means that anybody can build on it. You don't even have to contribute back to the source coding. Dan Larimer was very specific that that's what he wanted. He wanted this to go forth and multiply. He did not want just a single mainnet. But we did all these other things out there. We had hundreds and hundreds of block producer candidates. 21 actually got elected. They were elected by vote, by token holders, and then there are 21 block producers. There are roughly 30 to 40 standbys at any given time, and they're all compensated by minting new coins in a process called inflation. So you're taking about another 1% of new tokens, 10 million tokens a year that are actually out there and generated, and we're using those to pay the block producers, and they can, because there's EOS is a widely exchanged token, you can take that token and you can go out there and get it on an exchange and get your money pretty quickly. So here's the issue though. Third generation blockchains are not really enterprise ready yet. What's the issue? Well, it's kind of on the mainnet, but let's look at some of these things right now. We're looking at 4 areas. The security versus performance. Typically it's, you probably heard the phrase in software, like I said, I came up out of Oracle years ago, and one of the things we always used to say there that I'm sure was wide in the industry at the time was fast, cheap, reliable. Pick 2. And that's really what the trade-off is right now, is you have to figure out what you want to do. Well, EOS is fast. My gosh, it's really fast. One of the myths that's out there is that Visa runs at 27,000 transactions a second. That's a myth. Visa runs at its maximum speed at about 1,700 transactions a second. EOS, at its maximum speed, runs at 4,000 transactions a second. That's 400 times faster than Ethereum right now, but you have smart contracts, you have governance, you have constitutions, you have all the elements there to build really great blockchains, but there are still some general issues. We didn't really build it with a lot of privacy in mind. We have some possible governance issues with collusion out there right now. You've probably been reading about this. This is all public knowledge that there are some block producers that have been potentially colluding with each other. That happens all the time in Bitcoin mining and other mining areas. So you can also exfiltrate data. So we need to think beyond mainnet monoculture. And I always like to put this slide up because basically there are a lot of people that want to build blockchains, and everybody wants to have one of their own, maybe put, again, the Florida Silk caramels on it or something like that. But if you get part way through this, you realize, well, do I just need one mainnet? If I have one mainnet, what I have is not independent block producers. I've got IBC or inter-blockchain communication issues, and one size does not fit all. You can't go out there and run it. If you haven't heard of the noisy neighbor problem, there's a real interesting thing that's been happening out there with a company called Block Twitter, and I don't want to call them out. They're just trying to run their app on top of EOS. But they would every single second or milliseconds would broadcast, "We love BM." Well, that was Bytemaster or Burning Man or big, I don't know, whatever it was. It ended up taking up so much bandwidth and RAM that nobody else could even run, and they had to be graylisted because they were taking up all of the available bandwidth, and everybody else's applications would slow to a crawl. In other words, it was traffic congestion, something that you'll be experiencing a lot of today, given all the other stuff that's happening in San Francisco this weekend. So, Fortune 100 see the value in blockchain. Government agencies are ready to implement it. They don't really like the idea of all the other stuff. So, We're working on solving these problems. A team of us, and again, everybody that's on this list here, myself, Thomas, Corey, and Brian, I brought them in. They'd all worked for me. I worked with Thomas. We started at Oracle together. We've known each other for over 20 years. Corey the same, and Brian was my CTO at a couple of other different companies. And so we have been working on solving a lot of these other problems, and that's something that, again, that's about as much as we could go into. But we're really looking at one area, not in particular, but one area that we're focusing on is governance in general, making sure that we are attacking governance and making sure that you can actually get the governance that you need for the kind of blockchain that you want. And so once you do that, it opens up a whole new world. There are so many different areas, like we were talking about on the panel. There are so many wonderful worlds out there that you can open up and really use blockchain on once you solve some of the problems that are still out there. So my question is are we ready for blockchain? It's a Schrodinger question, which is, is it yes or no or maybe? And the answer is yes, no, maybe. So the answer is never going to be, yes, it's going to completely revolutionize the world and change everything that you do. The internet still can't deliver, the internet itself, we can't send actual physical matter through it. So yes, it revolutionized certain things. Blockchain will revolutionize a lot more, but overall, I'm very up on EOS and up on blockchain, and thank you very much for sitting here and listening, and hope you all have a great rest of your day and weekend. Thank you very much.
All right, thank you very much, David. And up next, we have a very interesting panel on energy. If any of you have any interest in energy, you're going to want to hear this panel all the way through. In your energy industry, blockchain in power, Jordan Woods is going to be our moderator, and our special guests are Paul Breslow of the EDF Innovation Lab and Robert Trenier of the Energy Authority. Please, gentlemen, come up on stage and give us your fireside chats on the energy industry. Is Jordan here? Does David Moss want to do another 5 minutes? I'm just kidding. We'll have them coming soon. If you have not checked out EOS yet, go to EOS. Check out the website. Check out all the projects and dApps that are building on top of EOS. And here they are. Okay, I'll announce them one more time. Jordan Woods, Paul Breslow, and Robert Trenier here to talk about blockchain and energy. Welcome, gentlemen.
So, hello everyone. Good to see you again. How's everyone doing? Everybody having a good time? We have a great panel here on blockchain and power sector. How many of you are familiar with the power sector? Just a couple of you. Yeah, so we have a great set of panelists here. We have Rob Trenier from Power Authority, and I'll let him give a little bit of intro for himself, and then Paul Breslow from EDF, which is Électricité de France. A little bit of a different profile for each, but Rob, why don't you get us kicked off, and then Paul, you can follow.
Sure. Yeah, my name is Robert Trenier. I'm managing director of a trading company. So we're very focused on the wholesale trading markets.
Great.
Hi, Paul Breslow with EDF. So Electricity of France, we're the world's largest power producer outside of China. Based historically in France and the US, we have a lot of operations involved in renewables generation, as well as all of your traditional selling of energy, primarily to large industrial and consumer commercial entities. And we have an office out here, part of EDF R&D, and I manage our innovation activities here.
Yeah, so what you can see is that both of these gentlemen, they have very large power generation, trading, transmission kinds of operations. And that's really, what a lot of the infrastructure looks like. If you think about your own home or apartment, there's some large utility that is generating power, or it's working with, others and buying power from them, and then transmitting that information, transmitting that electricity, to your home. There's a lot of stuff that happens in there, like energy trading, which we don't hear so much about. But what I'd like to do is now ask a question about, what's the applicability of blockchain when you plug something in at home? You're not really thinking too much about blockchain. So, what are the real, applications for blockchain to the energy industry?
Yeah, so whenever I look at blockchain technology, I'm looking at what problems are there that need to be solved. So there's certain things that I think opportunities that blockchain technology can help in. So we look at increasing the price elasticity of demand of consumers, right? So there's a lot of devices, whether they're sensors or smart thermostats, but ultimately we want to incentivize customers to make good economic decisions. And right now, there is not as much data as we would like, where they're getting incentivized with real-time pricing signals. So I think that's an area that blockchain technology can perhaps help in. The other thing is the flexibility of the power system. Electricity, there's not really a good storage solution for electricity, and the variability in demand is great, right? A hot sunny day, a cold winter day, even during the day there's a lot of peaks and valleys. So there's a lot of capacity that is expensive that has to be kept online or kept available in our power system, that if we can increase the flexibility of our system and utilize blockchain technology to enable that, that will be a great opportunity. And then on the corporate side, in the area I work in, there's a great opportunity for reducing the cost of transactions when we transact. We do a lot of transactions in our markets, and if we can reduce those cost of transactions, that's a massive opportunity.
So that's interesting, Rob. So basically what you're saying is that there is greater transparency that you can get with the blockchain. We hear that a lot. And then also you can have a cost reduction. There can be efficiencies, which is an interesting thing. Often you hear that blockchain is an inefficient technology, but as we've seen with our last panel, for business it actually creates a lot of efficiencies for things like reconciliation, which actually doesn't actually have to happen. You can just look at a ledger where you can see what you've written down and also your trading partner, and you can reconcile it just with the blockchain itself. So that's interesting. So cost reduction and transparency. Paul, what are you seeing?
Sure, yeah, maybe to follow up on that, I think some of the words that you used I really like, and I think the key one is flexibility. And that's the one where, whether it's at the wholesale, with the giant centralized power plants, whether it's the commercial industrial sector, whether it's residential in your home or your electric vehicle, the ability to attenuate some of the charging, smart charging, or V1G as it's called, it's all flexibility. We see the same thing in the transportation space with Ubers. We're identifying the labor and supply and being able to match the two and finding those. And I think that's going to happen in many, many different sectors. Energy is no different. Now, that's true. Whether or not blockchain is the best technology for those different use cases and when, I think is a separate aspect. But I might categorize the use case into three. One would be enterprise level, which could be anything. For instance, EDF has started using blockchain to be able to validate our press releases coming out of France. Another one would be data, and I think that was mentioned here earlier. There's metered data. Somebody was saying that's a huge aspect, and of course, I might have a copy of it, the utility may have a copy of it, the regulator may have a copy of it, the storage of all that data, the sharing, the transmission of it, the validity and the reconciliation aspects. And then the last one I would say is operation. That's a catch-all for a lot of different things. But I think it's important because right now, a lot of people are really excited about some of the more peer-to-peer and other types of exotic things that sound really interesting, but being able to really integrate blockchain operationally into that is different than being able to say, to your point about cost savings on the back end, hey, if we can just have a record of who was buying some solar from here and who was producing it from here, then we can reconcile that in the back end and have some cost savings and some new business models.
Great. So opportunities not just for cost savings, but also maybe for new revenue generation as well. In terms of real use cases, maybe we can just talk about like a case study, or maybe your favorite. What's your favorite usage of blockchain? Where do you think it will happen first? Maybe for your companies or in the industry. Paul?
I think those are two separate questions. My favorite and which one's going to happen first.
Okay.
I love the big long-term vision of having a truly transactive grid. Transactive energy is one of the topics I've been working on for the last couple of years, and we wrote a lot of internal papers really trying to tease out transactive energy from blockchain because they're so intimately related. These ideas of having peer-to-peer or perhaps virtual peer-to-peer, where I might have the three of us are solar producers and you want to buy solar. It doesn't necessarily which one of us you're buying from is that important, as long as it's green energy, as long as it's solar. So I think that use case is most interesting, not necessarily being able to buy from your neighbor, that direct peer-to-peer, but more about the flexibility system. And I think that aspect is most interesting. Conversely, what's going to happen first is more of your standard back office processes. And so I mentioned we were chatting earlier, I'd done a little bit of a project for our trading group, and it was the mid and back office where there's a lot of easy, a lot of wins, a lot of cost savings, which is not necessarily affecting some of the operational stuff on the front end.
Definitely. Rob?
Yeah, so I certainly agree with the transactive grid. I think one thing we're working on, and I think that's important when we, especially when you're talking to corporations and bigger companies, and blockchain technology can be quite a difficult concept to understand. I think showing somebody the true, like something can work, I think is really important. So one thing we've been working on is just in the energy trading space. We have a ton of counterparties, we process a ton of transactions, and going from entering the transaction, we have our own system that we enter our transaction in. It's an expensive system, so do all our counterparties. And these transactions get checked multiple times, and then at the end of the month, if we disagree, there's a reconciliation process. And so we see value there. It's kind of low-hanging fruit. And a lot of times you can talk all you want about blockchain technology and do this and do that, but when you actually get into the details, you can actually make it work in a physical energy trading space where there's all these complications. Then you really see the true value and potential of blockchain technology, and that's something that I'm really excited about.
Yeah. So very interesting points of view from both Rob and Paul. If you were here for the earlier panel on enterprise use cases, I think what we're seeing is that there are so many areas, low-hanging fruit, where you can have significant cost savings, right? Be it in trading or just back office activities, reconciliation. And those can lead to, if you heard the last panel, 80–90% reduction in costs. So something that businesses are definitely interested in adopting because it creates this trust layer and it reduces the workload very significantly. But like what Paul was talking about, and I think what Rob was hinting at, is there's this kind of disruptive future. It's not just the existing players getting more efficient. We have the opportunity now with renewables. Like if you think about coal or you think about natural gas, they're pretty energy intensive. Very few people are going to go out and have their own coal mine or have their own their own natural gas production facility. But it's pretty easy to have solar, right? You can put solar up on your home, you can put it in your backyard. If you have some land, you can have maybe not a wind farm, but you could have a single wind generator. And there are small ones as well. So the opportunity, which is disruptive just in general with renewables, becomes even more interesting when you can actually go peer-to-peer. And Paul was talking a bit about this peer-to-peer capability. So I'd like to look at that in a little bit more detail and get your thoughts, both Rob and Paul, in terms of, when do you think this peer-to-peer future might happen, and what would it look like in your particular industries, or how would it affect you?
So I'll say on the one hand, it sounds great being able to do peer-to-peer transactions. I think the statistic is something about 6 minutes per year is what people spend on looking at their utility bill. Most of us, when you've kind of looked at all the options, maybe you'll respond to something and you'll buy Nest or some thermostat or whatever. The chances are you're going to do nothing. You may choose to go renewable and check the box. You might get solar on a roof and feel good about yourself, and that's great. You should do that if you can. But I don't think people necessarily really are going to care. There are people that care where their gallon of milk came from, or where some fruits, vegetables, and other things. And I think maybe that's more connected to people in a visceral way. I don't think people really care that much about energy. They want to do whatever their activities are. And so that's on maybe the consumer, the retail, the homeowner perspective. I think at the commercial industrial, when you get to a certain size, they want to be able to save energy, and for some, like supermarkets, a huge portion of what their revenues are, especially net. And so I think they have energy managers, and they're willing to do things, so they're going to engage more. And those are, I think, where there's more opportunities. But I still think it needs to be more thought of in a humbler way, that energy is as a resource, and it needs to be managed as much as possible in an automated way. And I think that we are just a subsector of IoT. Their devices, whether they're energy loads, generators, or storage, and they need to be automated as much as possible. And I think there's going to be those agents behind that are doing that, responding to the signals, as identifying their flexibility. And that's why I think that's a useful part of having that transactive market at the retail level. The wholesale market already is transactive. So I guess I'm a little bit of a proponent conceptually to enable people to do it. At the same time, I don't expect much adoption.
Okay, very interesting. Rob, what are your thoughts? Do you agree with Paul, or do you have other thoughts on that?
Yeah, I think blockchain technology is going to impact more on the corporate side, on the utility side first. I think that when we get enough smart meters rolled out, and as kind of Paul has alluded to, like when people start paying more attention to their bill and what the potential is, and when folks get more solar panels on their roof, and if they have battery storage in their garage, and there's going to be some opportunities for, certainly on blockchain, to there's already some coins that have been created by some pilot programs in order to help manage the grid, right? Because there's this transmission grid that needs to be optimized, and it's an asset that needs to be optimized, and so somebody has to kind of help out and help control that. And what needs to happen is if we can incentivize behaviors that help manage that grid and keep that high-cost generation or supply, not being required to be available anymore, that'll have a significant impact. So anything that can be done like that, so whether it's with electric vehicles in the future, not charging them straight away at a peak time, or whether it's allowing your battery storage product to be optimized by the utility or by somebody else to help manage the grid, and be rewarded through a token for that good behavior. That's the kind of stuff I see a great opportunity in the future.
That's interesting. I think taking what Paul said, what you just said now, Rob, and some other things that we talked about in the Speakers Lounge, sounds like blockchain is more of a foundation for trust and maybe some disintermediation. But Paul, you talked about IoT, and then previously, Rob, you talked about AI. So maybe a combination of blockchain with AI to because the consumer and maybe even the business is not necessarily interested in staring at their utility bill or their real-time usage, maybe having an AI bot working with IoT sensors, then having token, sounds like it could be interesting. Thoughts about that? Maybe when it could happen, and who would be the adopter?
Certainly, I do think that's an opportunity. Like, customers do not want to try and figure out every hour whether they should be storing their electricity or selling it back to the utility, or selling it if there's a market for to sell it to somebody else. So definitely an algorithm type product would definitely be something I think we need to see a lot more adoption. The battery storage economics need to improve greatly for that to really become a reality.
Yeah, maybe a simple way of visualizing that would be there's an interesting company down in Texas that launched for $10 a month. You can get access to real-time pricing. And one of my colleagues down there said, okay, he gets the alert, price is going up. He calls his wife and tells her to shut off the air conditioner. That's not going to happen for a variety of reasons, not the least of which she's just going to say no. But the point is, if you can imagine an IoT and AI-enabled system plus blockchain, where all the devices automatically understand, they have their big curves, and they're able to respond to that. But I think you start getting into a world where, if you imagine right now, I pay in PG&E territory 25 cents, and you can get batteries and solar and those types of things for less than that. At a certain point, you start looking at the cost of energy going down, the cost of the grid going up. And having that grid enables people to continue to monetize the assets and provide value, to be able to co-optimize both private gain as well as the social benefit of having the grid, because it is better if we can do it and have it all together. When you start having disincentivized outcomes, potentially.
That sounds great. That's a very exciting future. We only have a few seconds left, but time frame for adoption. We've heard, enterprise probably in the next few years, right? Low-hanging fruit kind of use cases. More businesses and consumer, not utilities. What would you say? Are we looking at 5, 10 years? What kind of time frame?
Probably something like that, and going, as we said, kind of from the highest level first, where there's back office, least chance for looking something up, but being able to provide real value and see that quickly, and then rolling that over a couple of years. Then the C&I customers, where they're engaged, where they have energy managers who are interested in buying products that have a positive NPV, and then sure, customers will try some things, but it's going to take time for mass adoption.
Okay, and Rob?
Yeah, I'd agree with that. Like, we're working on corporate solutions right now that we expect to be happening in the next year or two.
Okay, awesome. So blockchain here now for business in the power sector, and coming in the next few years, maybe 3, 4, 5 years, to a home near you, but probably AI and IoT enabled. So that was it. Thanks for your attention, and we'll go on with the show. Thanks a lot.
All right, gentlemen, thank you for that talk on energy and blockchain. That is a massive energy that's going to be totally disrupted with blockchain and improved in many ways. Now I'm very excited to introduce to you one of my favorite speakers. I got to interview him at the Mars Finance China Summit a few months ago. Rhys Jones from Singularity University is here. He's an associate founder at Singularity University, founder and chairman of Cambrian Genomics, and was one of the first advisors to Facebook. Please welcome to the stage Rhys Jones. What he's going to teach you today is going to amaze and enlighten you. Welcome, Rhys.
Thanks. We're going to talk about how blockchain is similar to biology. And this is something that may give you some ideas about the future of blockchains, how they evolve, and what likely can still be discovered and invented new in blockchains, both as a protocol but also application. So when the internet was developed, it left out a few important things, and blockchain adds these things into the internet that creates new possible applications or improves ones that already are existing. And the most important of which is trust, in that can you trust when I send you something that the thing I sent you is valid and useful, and there isn't a duplicate copy somewhere. And that's the main advantage of blockchain in particular as it relates to Bitcoin, in that it allows us to send money to each other, to other people, and it eliminates the double spend problem, and it does this in an efficient, decentralized way. And when we send things to each other, we mutually agree upon the transaction, and we agree that that transaction was truthful at the time, and that is recorded into the ledger. And so in the case of accounting of money, many of you are familiar with something called double entry accounting, which is a way of keeping track of my debits and my credits and totaling them up. And if the totals don't add to the same thing, there's something wrong that needs to be investigated. So this is a form of accounting that was invented about 500 years ago and is led to sort of modern way of keeping track of money. And so what blockchain adds to this is a sense of essentially triple entry accounting, where I keep my debits and credits, you keep your debits and credits, we can transfer things to each other, but we both agree to write our transaction out to a blockchain, which is a third ledger that is essentially what we agree on as the nature of the transaction. And it's an immutable ledger that can either be private or public, but it's something that creates a better form of accounting for transferring money and keeping track of it over time. And so this ledger is essentially the truth of the transaction as we agreed on it as the parties. And it's not stored in one central place, it's distributed across thousands of computers in a decentralized way, such that we can refer to the truth by looking in other places. And if somebody were to compromise one of those nodes or one of those computers and change something, the other computers would disagree, and so you would say this has been compromised in some way. And blockchain, as used by Bitcoin, isn't the first instance of doing this kind of distributed cryptography of sending trusted information across time. And that there's a company, Surety, that has been doing this since 1995, a long time before Bitcoin started. And that when a transaction is done, a digital signature, a financial transaction, they collect all of those for the week of those people subscribed to the service. They make a hashtag of all the transactions for that week, and then they actually publish it in the New York Times Lost and Found Wanyat section each week with the hashtag, so that if somebody were to try and change it, you would say that you would look at the paper and say, well, this number is different than what you tried to change, or even if they fake the newspaper, there would be thousands of other copies of the newspaper out in the wild that you could compare that these are changed and this is somehow compromised. And so the inventors of Surety are 3 of the 8 references that Satoshi Nakamoto references in his white paper in describing Bitcoin's blockchain. And so it really is a legitimate predecessor to Bitcoin that's been in use since 1995 and is still in use today. And so it's something that this sense of cryptography as a way to send information across time is well established. There's other tools that are emerging in the market to, for example, track who handled the money in this chain of transactions across the chain. And these are used for sort of forensic analysis of the history of where this money has been and who touched it, how did it get into the blockchain, where did it come out, and so forth. And these are basically information flows across time. So another system that tracks or records and uses information across time is genetics, in that the information is stored in DNA as genes, and it replicates across time. And the Human Genome Project, or Humans Genomes, are about 1.5 gigabytes on a computer, or 3 billion base pairs. And Bitcoin's blockchain this year is already many times larger than that. In fact, Bitcoin's blockchain passed the human genome in about 2012 and continues to grow in this exponential pace. And that a block on the Bitcoin's blockchain is written every 10 minutes. And if it takes longer than that, the algorithms become simpler. If it's faster than that, the algorithms become slower or more difficult to be slower. And so that you can predict that Bitcoin blockchain is going to write a new block every 10 minutes for the next 100 years. And you can also predict roughly what it's going to be in size. And so the graph on the right is the size of the Bitcoin's blockchain of the next 100 years. And so when people describe blockchains, they often talk about some characteristics that are unique and that it's decentralized and not on one computer. It's distributed across thousands of computers all around the world. It's borderless and that the transactions don't need to notice whether it's going across a government border or not. It's a replicating system in that the entire history of transactions is replicated each time a block is written by a node. And then it's a framework for storing information and it's a protocol for transmitting information. And so other things that are like this, remarkably similar, is biology and genetics, in that genetics and DNA is also decentralized and it's distributed wherever the organisms may be. They don't recognize borders. It's a replicating system, and it's a framework for storing information about how do you grow the organism, and it's a protocol for how that is replicated and then metabolized. And so in replicating a organism, you need energy. And the energy in biology comes from either food or photosynthesis. And the energy for replicating the information on a blockchain uses electricity to run compute power. And the graph in the center is the amount of processing power that is needed to, or currently needed to replicate a block on the blockchain. As you can see, it's going up at a super exponential kind of pace. And even though the computers and the nodes for mining Bitcoin's blockchain are getting more efficient and more customized, specialized processors, it's still growing in terms of the compute demand and growing in terms of energy demand. But in either case, you need energy from electricity for mining or energy from food for replication. And so diversity is important in biology, and that if we were to step, like with my shoe, onto a petri dish, which is the food for microbes, you would see something grow like this, where there's many species, if you will, of microbes growing there, and they all have DNA as their central blockchain, if you will, or their way of information, but the different species survive or fail based on their differences in their characteristics depending on the environment that they find themselves in. And so you see the same thing with blockchains over the last couple of years, and that there's now more than 2,000 different kinds of tokens. Many run on the Ethereum's blockchain, but there are many new ones. We just heard about EOS and others that are being introduced that have slightly different characteristics, just like different species. And so, if you will, some of the blockchains are like birds, other like bees, other like fish, other like plants. And that they coexist in an ecosystem of blockchains. And they generally don't talk to each other at the moment very much, but they're expanding in diversity rapidly. And whether one succeeds or not is based on the environment that it finds itself in. And so a natural selection decides, is this blockchain better for paying parking meters or paying real estate transactions? And so the different characteristics of blockchains are a function of how well they fit their environment and application, whether they will thrive and flourish or whether they'll become more or less abandoned and go extinct. And so if we were to standardize on one standard kind of blockchain, sort of like the internet has done with TCP/IP, there's a disadvantage of that in that you then create a system that is fragile and brittle, in that if a bug is discovered in that particular standard, or even if it's not discovered, if it just happens, it can crash the entire system. And so there's a concept in biology that monoculture, or a standardized system, breeds disease, in that it creates a target, a rich target that parasites exploit. And so a monoculture isn't necessarily the best thing for biology. For example, all the potatoes in Ireland were clones of one another at one time, and an infection came in and wiped out all of the food in the entire country from one transaction, where if they'd had a diversity of different kinds, some of them would have been wiped out and some would have survived. And this is true of blockchains as well. And the natural selection isn't just based on bugs in the code, but it's the ecosystem that it's in. So part of the ecosystem for a blockchain or a token is, for example, a regulatory environment. And different governments are pressing down on different kinds of promises made by tokens, and which will cause some of them to go extinct, and some of them to be incompliant and survive. And so this diversity that happens in biology is also happening to blockchains, and it's probably a good thing in that there are many different kinds. So here's a graph of the tree of life, essentially going back 4 billion years, and in the center of the graph is the original DNA-based life forms and how it's evolved over time. And that there's microbes and fungi and plants and animals and people and whales and so forth. And each one is based on the DNA type of information storage and with minor variations. And so everybody is a cousin of each other, all the different species. Some distant cousins, some close cousins, but they're evolving in relation to each other. Blockchains seem to be doing the same, and I would suggest that blockchains are kind of an extension of the DNA information, creating more kinds of species that are still related. And so what happened in the past in biology is there was a small number of species for a long time, and around the time that eyes and brains were invented, there was something called the Cambrian explosion, where about 500 million years ago, where the smaller number of species changed into 3.5 million different kinds of species. And this is when the species could see each other and process the information like AI on a blockchain, in a sense, with brains, that created predators and prey and many different strategies to survive in different niches to fill. And so in the further future for biology and computer information is sort of a migration from biochemical information to not just what is in my genes from my parents, but also all the food that I've eaten in my life and the things I've learned in school and increasingly things like my financial history, my medical history, or my Facebook posts, or other information that describes me that isn't in my genetics. And so we're changing what is a person from being primarily biochemical information to being cultural and then digital information. And blockchain is a part of that, in that it's this immutable long-term storage of transactions of information that are part of each of us. And so we are information, and that information changes over time, in that what we start with, or what we were yesterday, is not the same as we are today, and will be different again tomorrow. And so our experience of life is like surfing across this change of information, that we're not the information that we are in a static form, but the information is changing, and our life experience is like surfing in the information. We're surfing on water. The water doesn't move sideways, it just goes up and down. However, a surfer can move across the water by going with that energy. So in this way, or several ways, blockchains are quite a bit like biology. Certain things about the future, for example, blockchains at the moment, all of them, store all of the transaction, all the details, where biology actually throws away a lot of information. So it's likely somebody will invent in the future a blockchain that is more selective about what information is replicated compared to everything. So there we have it, how blockchains are kind of like biology.
right. Thank you, Reese. Will it be Bitcoin? Will it be Ethereum? Will it be EOS? Will it be a million winners? Thank you, Reese, for that analogy. That was fantastic. And you can read more of my interview with Reese if you want to know how blockchains may make us immortal. It's a very exciting topic. Now, we have another great keynote from David Nayer, the COO of Arcade City. He's CEO of 3 other companies. He has 690 inventions. He's been a part of 21 startups. And most exciting of all, he has 115 juggling world records. He describes himself as a builder and a champion of invention. Please welcome David Nayer to the stage.
Thank you. I'm here talking about Arcade City. Arcade City, in contrast to what you've been listening to, is an application in search of technology rather than technology in search of an application. Arcade City is genuinely decentralized. You've heard people speak about how Uber is a decentralization of transportation. We view Uber as a centralized application, exploiting some of the sharing economy phenomena. But Arcade City is actually fully decentralized. Button. So that's Christy. Christy is a moderator of a guild in Austin that's about 190 participants. Austin has 42,000 users on the Arcade City platform. She was one of the authors of the articles which describe how the guild operates, the governance. She's a moderator in the technology channel that decides how people use and access the community. She's also a driver, and she happens to be has a degree in film, so she chose where that picture would happen. Just notice, that's the 20th century woman in the picture. Oh, let's see if I can get it right. That's the 19th century symbol of femininity and liberty in the picture. That's the 21st century version of it. The moderators in the Arcade City Guild are about twice as many women as are typically among Uber drivers. And there is an absolute equality in pay. So Arcade City is the intersection of 3 different phenomena: sharing economy, which is double-digit growth, platform cooperativism, and blockchain. I have about 18 minutes worth of slides in 10 minutes, so I'm going to go very quickly through some of the market descriptions. Please reach for me if you want to know more about the detail. The sharing economy's economic value is based on its very high utilization. So as a specific example, cars are typically used 4% of the time. If you own a car, you're driving it 1/25th of the time it could be driven. A rideshare driver is probably driving it 1/3 of the time. And a driverless, fully automated autonomous vehicle would probably be driving about 90% of the time. So there's a 7.5x scaling up by going into the sharing economy, and then there's probably another tripling by getting rid of the driver. And we're not trying to get rid of the driver. The drivers are probably more economically empowered to bring in new technology like driverlessness than a centralized player would be able to do that. And we don't see that happening for 4 or 5 years, and we are not afraid of it because we actually think the drivers are more likely to be innovative about using new technology than any central player would be. I'm just going to touch on platform cooperatism. You're familiar with platforms. You probably heard 15 variations of platforms here. Platform cooperatism is a little bit different because it's owned and operated by the participants in the platform. It's typically federated, and specifically it's more localized because it's a federation. And interestingly, it has way higher safety standards. And this is analogous to a cop on the local beat who knows the community that he's in is much more likely to know what's going on in terms of safety than a centralized police force that's riding around the city in police cars or is on vacation when a crime is happening, somebody who lives on the block. There are more than a dozen features out of blockchain which Arcade City is using or interested in. and they go along with this peer-to-peer topology, and I'll talk a little bit more about it. We're interested in resilience in the system and data permanence, but also it has to convert to transparency and privacy at the same time. Those three things look like they're different and incompatible, but in fact we're able to do that with different aspects of the blockchain. One of the differences in sharing economy state between Uber and Arcade City is the driver is overwhelmingly taking the largest share out of the dollar in the Arcade City platform. The platform takes 5%, Uber typically takes 40%, the driver typically makes 35% in the Uber platform. That means they're making like doubling of the income in our system, and we would describe that as meeting fair trade standards. They're not being exploited or extracted from. There's also a very high social aspect, which you wouldn't see in an Uber car, which you would see in an Arcade City car. If you sit in the front passenger seat of a driver, you're likely to see that it's this ongoing block party where people will literally ride around in the car just for the fun of being in the car, not to get from one place to the other. It's the difference between working in an office or going to WeWork and seeing why people are hanging out around the beer tap. Sit in a car and ride around with one of the drivers and this is something special. It's a continuous block party. This platform, one of the unique characteristics of this is it's able to grow completely in parallel. So we can see a launch of 100 cities at the same time. In fact, when we've released new versions of the software, we see simultaneous operations arrive all over the world. And that's something that a centralized player like Uber can't do. They need to set up operations within the country, and they need to manage those operations. And why, if you're tracking the news with Uber, any economy that's running at roughly 1/3 of the US standard of living, they're typically pulling out of because they can't support their operations center there. And for us, it's an opportunity to go in and help in the local economy, in the local currency, with local culture and localization. Our token model is much more robust than a single token. Well, I'll explain it to some extent. Please look for me if you want more details. For me, it's a very rich, inviting topic. I could talk 30 minutes on it, and I'm sad that I have 15 seconds. We're looking at blockchain pieces as a make-buy decision. Is this something we need to build because it doesn't exist currently in the ecosystem that we just saw a couple of lovely slides in the last presentation? Or is it something that we could use that's already there? And our focus is on trust building, not trustlessness. The distinction being we're interested in social interaction systems where people are offering a proposition and it's accepted by a recipient. And that isn't something that's a yes or no, that's something of a learning process, the same way you might build a relationship with your spouse or your friends. This shows if you look at the red portion, that goes back to the driver. That's why we have overwhelming viral adoption by drivers. They're happy to add Arcade City into the portfolio of what they already do. They're already seeing riders from our competitors. Then they recruit them immediately in. So we have an almost zero cost of customer acquisition, which is remarkable for a high growth business, and combine it with premium services, not stripped down services. So every driver pivots to what they're already good at doing something else. So you have examples, if you're in the Caribbean and you're a scuba diving instructor, you sell scuba diving lessons while you're driving into the hotel. Or if you're a hairstylist or you do something else. There are over 80 pivots of other professional services. So thank a service worker if you see one today. They're likely to take over the world. The central piece of how the decentralized organization works is through guilds, which are locally operated. I'm sorry to skip that slide. This is Manila, the first week of version 2.2 launching. We're in 110 cities, 24 countries. We have 8,000 engaged builders, which is not just the engagement communities. These are people who volunteer and step up and do stuff. There's at least 500,000 rides we don't know because at the edge of the interaction we don't have fully operating tracking software yet. So I imagine that it is 5 to 10 times that, and the revenue may be in under understatement by about 10x as well. This is annualized revenue. Arcade City has generated something that most blockchain-based services today can only dream of. Users, actual living, breathing customers, 3 years of traction. This is the standard model of reality. 17 pieces to how the physics of the world works. All of it, notice that the electron and the photon survive that model construction. You can think of it as Bitcoin and Ethereum. And ours is actually 4 different pieces. They have different characteristics. So in order to operate a fully functioning decentralized service economy, you need things that are scarce and things that are abundant, things that are objective and things that are subjective, things which are transferable, things which are not transferable, things which are private, things which are public. Each one of these characteristics are important around building this web of trust. I could talk through specifically how they operate, and I'm at 0 in terms of time. This is what's currently operating through a heterogeneous set of technology pieces. Those 4 central characteristics, which were the columns. So you have belonging and roles, sponsorship and staking. The blue section is actual contribution in the community. When there was a panel here that talked about governance and whether, say in China, your contribution to society would be measured and whether you'd be excluded. We have a way of demonstrating your contribution in the same way you would see valued customers or valued suppliers. And that increases your rank and access to services within the community. But there is also trust building and other ways of gaining valued services, and they're badges for things like I have a valid driver's license and I have a valid insurance policy. They are temporal and they are stamped and durable, but they are also non-fungible. This is by the end of the year, added pieces coming in, and this is about 9 months out, the full explosion of capability you need within the functioning ecosystem. There are about 9 blockchain pieces to getting this full piece rolled out. Some of them are built internally by us, and most of them are adopted by blockchain protocol on pieces that you've already seen on stage. The thing to take, this is an open source project which we are sponsors of. About 99 out of 100 transactions are in something other than blockchain. If you're actually operating a running economy, you need to be able to take cash. The blue bar charts at the bottom are indicative of that. That's why I called that yesterday 5.8 million active Bitcoin users. That's not 700 million active credit card users. So we have an open source wallet that combines the 2 of them because we need genuine commerce to work. There's a gentleman in Austin that pays in breakfast when he's picked up for a ride. He's a great chef. He's competed for by drivers. That's an ongoing team. It's quite diverse. If you want to talk about what it takes to get a decentralized organization running, there's all sorts of different types of people. The bottom 9 or so are advisors who are largely builders, not builders. We're open to, if you want to earn, pledge, swap, stake, belong to our economy, and you want to contribute, engage the white paper. The white paper's gone through 82 revisions. It's a public document that's available as a Google document. Reach for me, we're super excited about it. We're looking for another $2 million of investment. What you see here was shoestring budget of $1.2 million. And before we go to a larger offering in the public space, we would like to see 10 million users. Come find me. Thank you.
All right, thank you, David. And the only thing more exciting than Arcade City will be watching David juggle in the VIP room. If you ask him, he has 115 world records. Our next talk is going to be very fun. Blockchain and AI with Radhika Iyengar-Emmons, Dr. Rand Hindi from SNPs, and Reese Jones again from Singularity University. They're going to tell us all about how blockchain and AI may be the perfect pairing together. Welcome to the stage, Radhika.
So hi everybody. We're in for a really big treat because we've got some heavyweight experts in AI, and I'd like to introduce Dr. Ryan Hindley and Rhys Jones of Singularity. And I thought I'd let them do their own introductions. I'll just briefly start. I'm co-founder for StarChain Ventures. It's a blockchain-focused fund that's focused on enterprise as well as foundational protocols. And we're especially excited about the intersection of blockchain with AI and IoT and other deep tech kind of technologies. So I'll keep it really brief. Ren, would you like to introduce yourself, please?
Hi, everyone. My name is Rand. I've been in tech since I was a kid, started coding at 10, built my first company at 14, ended up doing a PhD in machine learning when I was 21. I was an advisor to the French government on the privacy and AI issues. That eventually led to the creation of €1.5 billion fund for AI in France. And for the past 5 years, I've been running the largest AI startup in Paris called Snips, where we've been building privacy-preserving voice assistant technologies. And my goal is very simple. By creating a completely open, decentralized, private by design alternative to Alexa, I'm hoping to finally break the kind of wrong mindset that we've been having for the past 20 years, where a few companies are using this data to basically impose a vision of the world to everybody else. Thanks.
So I'm Rhys Jones, and my background's in biophysics, and I helped start Singularity University, which has been running for 10 years now. It's the same age as Bitcoin. And I've been tracking AI for a long time, and I've noticed a certain phenomenon that AI, if it's called AI, is something in the future that doesn't exist yet. But if it exists and people are using it today, it's called software.
I like that. So I'll open up with a rather, you talked about Alexa. So we've been reading so much about the exposure of, I think, centralized systems is really what I want to talk about. And how blockchain, with the assistance of things like smart contracts and whatnot, can be used to bring out the best of AI rather than the worst of AI. So I thought I'll have you address that, because I think the applications of AI are tremendous, and we can think of many, many different situations, not just adding convenience to our lives, but also adding things in healthful ways for our own personal health. So I'll let you address the scope of that.
So the way I got into this intersection of AI and blockchain was, again, for actual privacy reasons initially. As part of this goal that we have to pretty much destroy Alexa and every other product out there that's just sucking your data, we had to find a way where we could train neural networks, machine learning algorithms without any compromise in privacy. And so we found a way where you could combine something called federated learning, which is a form of decentralized machine learning, with a technique in cryptography called multi-party computation, so that you could train a neural network on encrypted data. So as a user, I would never send my actual data, I would send encrypted data, so I would have no issues with privacy. However, the only issue is that to make this work, we needed to incentivize people in a network of compute nodes to participate and to do it honestly. And so in that case, blockchain and using a token was a great way to do it, because you could not only reward people for participating, you could also, through some kind of zero-knowledge proof systems, make sure that they're actually doing what they're supposed to do. And so it just ended up being a fundamental glue in that puzzle, without which nobody would actually care.
I'm glad you brought up zero-knowledge proof. That's something that I talk about frequently as a way of preserving privacy and confidentiality, and yet be able to share the data. So for those of you who may or may not be aware of what zero-knowledge proof is, it's an ability to show your identity, to validate your identity without necessarily divulging sensitive pieces of information about yourself. So the classic example that most people talk about is, you're at a restaurant or a bar and somebody needs to see your ID to show that you're above 21 to order a drink. How do you do that without divulging everything about yourself? If you give your business, your driver's license or other identification card, it has your name, your address, it's got all the sensitive information about you, and all they needed to see was that you're actually over 21 to be able to order the drink. So I'm glad you brought up zero-knowledge proof, because that is embedded into your technology, correct?
it's a way basically to prove, so it's not the way that we train the neural network, it's the way that we prove that the people who participated did it in an honest way.
One of the things about AI is it's an adaptive learning system that changes over time as the data gets better and as it's presented with new situations. And one of the things about blockchain is unchanging, it's immutable, it doesn't change. And the smart contracts are kind of rigid in that they are like borders or boundaries that say, if this, do that, if not. And so AI, in a sense, is somewhat different than smart contracts on blockchain in that you can have smarter contracts that are adaptive based on machine learning that decide based on the context how to execute something. And that's a much smarter contract or an AI type contract. But a basic smart contract on a blockchain is something that executes the same way all the time in a very predictable, reliable way. Not really based on new information, it's based on a fairly rigid structure and programming. And so they're a little bit different in that way.
So how do we design systems that are intelligent, that are able to learn, but not run into those types of situations we've seen like with Tay, the bot that kind of went out of control?
So Tay, for those who aren't familiar, was one of Jaron Lanier's projects at Microsoft, which was a Twitter-like chatbot that had a personality, and it responded to people on Twitter. And once the crowd on Twitter figured out that it was a learning system, they started to program it to be racist and sexist and politically incorrect and so forth. And so the bot learned to respond in very inappropriate ways. And Microsoft quickly shut it down because it was getting out of control, as you would say. And so that's a learning bot that was given essentially public data to learn from. And the public data was smart. It was people saying, let's play with this thing. And the outcome was unpredictable in that way. So some of these things are going to happen over and over again with learning AIs that respond to the data that they're being trained on and being fed. And so one of the safety mechanisms is a kill switch to stop it in case it's going in an unpredictable way.
Yeah, it's basically impossible to prevent that from happening because the system works in that way effectively, right? There's an entire area of research in AI called adversarial attacks on AI. So how can you trick machines so that it doesn't do what it's supposed to do? So you could use it to make a neural network not work the way it's supposed to. Imagine, for example, you've got a self-driving car. You could find a specific type of input that would make the car just crash, for example, right? So people are working on finding these things. But conversely, you could also use it to protect yourself against AI-based systems. So someone, I think it was a Yandex, I don't remember, did like this super cool thing where you would paint your face in specific ways, and face recognition AI algorithms wouldn't recognize you anymore. So that was a way to basically hide from face recognition stuff.
So I'm glad you brought up that, because I'll talk about this, and Reese, you've heard me talk about this before, which is the issue of bias in AI. The fact remains that in many AI data sets, you do have inherent bias. They're being trained on data sets that are quite limited, that are not inclusive of our human population, so to speak. So how do we ensure right from the get-go that we're training the AI appropriately, but then maybe once it's released, if you're raised to your point that you have to keep learning, or these learning bots or learning AI really do need to function at their optimum best when they're released out into public data, how do we ensure that there is a governance model, that there is an ethics sort of underlying structure that then prevents harmful things from happening with AI?
Well, these are difficult problems where you could train an AI about global humans in every country and every culture in a different way. But then if you were to apply that trained AI to a problem like Eskimos' fishing choices, and that if the goal is how to fish in the snow in the North Pole and how to make a proper meal, well, it doesn't really matter if the AI knows about vegetables or knows about lounging on a beach or margaritas. It doesn't apply to the North Pole and Eskimos. And so you can have this training
But in that case, you want the AI to be biased. You want it to know about surviving in the polar region, and be better tuned than that. And the neutral point of view really isn't applicable to specialized situations. And so driving a car, for example, is a very specialized kind of application, and the AI driving the car in snow needs to be well trained on that, but it doesn't matter if it can drive in the desert.
But bias can be positive or negative depending on your interpretation of it, right? And I think this is something, I don't think there is a universal definition of what unbiased AI means.
Well, I'll challenge you on that. So take, for example, facial recognition. You mentioned that. The data is clear that facial recognition algorithms have been based on white male data sets. That limits the capacity to recognize anybody that's not a white male. So how do you deal with something like that?
That pretty much makes it useless, right?
Yeah,
So I
exactly.
think there's a bit of a rule of the market. If you build something with useless data, it's useless in the real world. Nobody's going to use it anyway. You know what I mean?
Well, here again, so we're seeing, for example, phone technology with facial recognition built into it. So mainstream adoption is already sort of happening. We're already at the throes of that. And so how do we ensure that how we're moving into a positive application of AI is really possible? Because I'm a big proponent of AI, and I think the promise of artificial intelligence to add greater depth and sophistication and insight into who we are, how we behave. I think this is all really important. And in healthcare, I see huge applications. But I'm also very worried and concerned about responsible utilization of AI.
So when it comes to biases, just to be clear about what I meant is that there isn't going to be an unbiased data set, right? The best you can do is de-bias it as you interpret those biases and see them happening. So a good example of this is actually natural language and speech. So the way that you train a chatbot or an AI to understand human language is that you first need to convert the words into effectively numbers, right? And feed that into your neural network. And the way people do this is they take Wikipedia and they try to look at how the words are basically connected. And based on this, you're trying to give a number to a word that represents its place in the space of all words. Because of that, you can then start computing on those words. So you can say, okay, so, man plus queen, king plus woman equals queen, right? So you can do these type of like relationships. What they found was that if you do man plus job, what it gives you as the closest concept is lawyer. If you do woman plus job, what it gives you the closest concept was, how do you say in English? Like mom at home, basically. And so the reason why this happens, right, is because it's trained on Wikipedia in English, which is mostly contributed by white American males. And so those biases are not explicit biases someone put in, they're just implicit biases in the language. And the only way to solve that is to have a human look at the data, find it, and correct it. And this is like an iterative process you do all the time.
So here's a question to you, and this is kind of applying to the future of how blockchain can potentially solve some of these issues. We're moving into an era where self-sovereign identity is really the wave of the future. I think it's not too far off in the distance when we see our personal identity belonging to us, the data belonging to us. This is one of the great quests of blockchain, as well as associated encryption technologies, and how we can contribute our data, be able to monetize our own data for specific purposes. Is it conceivably then possible for all of us to participate more actively by contributing more positively to this kind of data towards things like AI? And so that, when we are talking about training on appropriate data sets, we've got a patient pool in healthcare, we've got an identity pool in just everyday mainstream, medium that we can then utilize in positive ways to be able to ensure that whatever data we're using to make AI more intelligent, in fact, is by giving it the right kind of data.
Well, that brings up a lot of issues there. But one of the issues that is commonly talked about is how we should own our data. And the data about us isn't necessarily our data. Like the credit reporting agencies or the government criminal record about somebody isn't our data, it's the government's data about what our behavior has been. And so we don't really own that. We can't change it. We can't erase it. We can't improve it.
Unless you're European.
Right. Okay. And it works.
Every personal data company has a value.
Okay. And so there's this desire from a consumer point of view to say, well, my data on Google or Facebook is mine, and it doesn't belong to them. And you can say, well, the data that you put there, when you had it, it was yours. When you put it there, you volunteered it into a system. And there's a kind of misunderstanding about how some of those businesses work, in that if I'm Pepsi and I would like to send an advertisement to all the people who say they like Coca-Cola, I need some people to do that for me, and that they need to figure out of the database of people which ones like Coca-Cola, and then other engineers have to figure out, well, how does my ad about Pepsi get to the people who like Coca-Cola? And that's tens of thousands of engineers and technical people who do that based on the data that's already there. And that's where the real value comes from. That's why they can charge a lot of money for those ads. But if there's just a blockchain that has my information on it, even if it says I like Coca-Cola or not, it would be next to impossible for Coca-Cola itself to mine that blockchain and say, okay, well, we're going to sort out of the 2 billion people, which 100 million like the thing we want to advertise to, and then we have to figure out how to send an ad to them. What do? Your email? So it's not a simple situation.
A friend of mine
Last minute thoughts, because I think we are out of time.
A friend of mine gave a good metaphor for that. He said that a lot of people are focusing on the value of data, and not enough people are focusing on the value of how data flows and how it's actually being exploited, which is exactly where the value is. The data in itself is worthless. What's really interesting is what you do with the data. And so I think, what you described here is a very good example of that. And in general, the idea that you could potentially compute on encrypted data would basically enable every single use case without any actual risk on your own personal privacy because of your data. So, I think it's very spot on.
So unfortunately, we're out of time, because I think we could spend easily the next hour talking about this subject. But I think that, please give a big hand of applause for really these great experts of AI. I think it's been pretty exciting to find out another side of AI that we don't usually talk about. Thank you.
All right, thank you all for that fantastic panel. And we have another fantastic panel right now for you investors especially. Anyone who's interested in making money, maybe there's a few of us in the room. This is the Crypto Investment Pros and Cons of Equity versus Token Investment panel. The panel will be led by Vivi Lin, former Reuters TV producer in China. Joining her will be Abhishek Punya from Draper Associates, Norman Liang from We Harper Group, and Yubo Ruan from 8 Decimal Capital, as well as Anastasia Sharkova from Republic Crypto. Please join us on the stage. Welcome.
Okay, good morning and welcome to the panel. Okay, so before we begin, we'd like to have a little bit of, to see where everybody stands in the spectrum of pros and cons of equity and token. Let's just start from Sue.
Thank you for having me. And then I'm one of the partners at Amino Capital, and we have been around for around 5 years. And I think in 2012, our investment thing is always in data, because back then people, online, offline, marketplace type of company are hype, were hype. So we actually invested in a lot of data company, and I think large data plus analytics plus domain experts is actually the future of AI. And then precious data that's never been shared before, plus blockchain, and also token economics, which is a promise of Web 3.0. So that's why we actually invested a lot of blockchain company back in 2014. And it was like very novel thing, so we actually had to start the blockchain university at the Castro 3 Mountain View in 2014. And then one of the two companies that we invested, one is SkillChain with incubated Infinity, and another one is String, incubated Infinity. Another one was called SkillChain, which haven't had any, like token economics. Is it's just the blockchain and working on Hyperledger, but they have real customers like GE, and is doing kind of like working on the real world blockchain scenarios. So I think it's very interesting, like in the year of 2016, when AI was a hype, and then so a lot of the companies become too expensive for early stage investors like us. And then suddenly, to 2017, we actually joined the pre-sale of a company called Go, and then nobody knew whether ICO will be a big thing, and then whether it will be successful. But it actually turned out to be the first ICO unicorn. And then after that, we became very careful and then didn't invest in much blockchain. But AI was actually, not a lot of capital actually investing in AI. So a lot of the companies that are doing autonomous driving, and they actually started it, in 2017. And then I think overall, the best startup for early stage investors, especially writing first check, are those type of business that they just want to start a company because they have this product that people really like, and they don't care how much money they actually could raise. So that's the kind of company that we actually like.
So when you actually invest in those companies, blockchain-focused company startup at early stages, do you take equity coming from your classic investor, classic VC's road, or you also accept tokens?
Because we are early stage investor, we are actually very flexible. We don't have strategic investors. So we have 80 LP plus venture partners. They are all like early Google employees and Facebook employees. So it's our own money, so we're quite flexible. So if they have to raise token, and we give them token. And then I think, but investing in token is really about token economics. So I can talk more about that later on.
Yes, okay, so yeah, we'll come back to the topic of tokenomics a little bit later. So Norman?
Hi everybody, my name is Norman Liang. I am a partner with W.I. Harper. We have, over the past 25 years, invested in network, marketplace, and media companies. We are the traditional VC in the room. I invest in crypto by night and in blockchain by day, and now I'm merging everything into one. When we look at all of these companies, we look at them fundamentally as companies. We invest in technology companies, and it's our job to vet technology companies that we think can be foundational building blocks as we go from 0 to 1 with the technology. But with that being said, we're always equity first investors. We're not looking at if tokens come as part of an equity preferred financing, that's great, but we're a classic VC. We're not about making exceptions for ICOs right now. We will do them on a case-by-case basis, but remember, it's like it has to be limited to 15% of my entire portfolio, or else I have to redo a bunch of things. And so for us right now, as we think about that, that means that we need to set up for what we invest in a new class of assets, which we call the digital asset class. And that's really where we look at it from this perspective. And that's why you're starting to see new institutional funds pop up.
Okay, great. So Norman, your stance on the topic is equity first, and always equity first, coming from the classic VC investor's point of view. And
Yep.
Sue, whatever Sue is more flexible in the issue. And you both?
So in terms of equity and token, we have experience in both. So we started with a VC fund, and then we invest in all these traditional projects. We give them a seed round, and then wait for maybe 7 years or even 10 years to exit. It's a long time. And later we have a crypto fund that focus on all those token projects, and we invest into their private sales or even ICOs. But personally, I think that whatever fundraising ways, fundamental things is if the company can solve a problem and create value to the consumers or the clients it's based. And so we're on the stand of mix for, so we prefer both, and it really depends on the nature of that business and nature of the computations. If we think that the token economics really works and it can provide much more value than the traditional one, then we just invest into the token projects. Or else they doesn't really need any token involved, then we will just support them on the equity side and then grow the business for a long time. So it really depends on what type of company they are doing and the users could be benefits from having a token or not.
Okay, so also it depends case by case that whether come back to the fundamentals of a company. And Anastasia, you've been advising for for a lot of startups in their tokenomics and also global strategy. And so, what is your stance in this?
Well, I would like to preface it by saying that the opinions and views I will express are my personal opinions and views, and they should not be taken as opinions and views of Republic Crypto. Republic Crypto being a regulated, SEC-regulated, FINRA licensed crowdfunding portal for both token sales and equity fundraising, and we'll touch upon the regulation components absolutely. But as far as equity versus token conversation, I don't like this question, and I'll tell you why. I think that we need to start moving past equity versus token conversation, and we need to start looking at the nuances of what a token represents. So I like to look at those investments from the perspective of what is your investment thesis and why are you buying this asset or why are you buying this thing, because tokens are really, at this point, I think there's a lot of confusion, and tokens are those abstract things that people see and they look at them as an investment class, and they're not. They're just a cryptographic digital representation of value, and it's up to each investor to determine what value they're seeking. So if you are a traditional early stage venture fund, you will want to purchase something that's more equity-like. You may purchase a token, and you may purchase an equity interest, or you may purchase a token that behaves like equity. And we're seeing an emergence of that, right? If you are a trader and we have a more speculative lens, you may want to consider those newest currencies that are, again, represented by cryptographic tokens. If you are, Republic would deal with retail investors, and retail investors want to support companies they believe in and they want to use the products of those companies. So you may want to purchase a token that's an access kind of entry ticket into using an emerging platform. Or you may want to, you're a developer and you want to get the hands on the tokens that allows you to develop on the platform. So I don't see it as equity versus tokens debate. I see it as a, what's your investment thesis and why do you want to purchase this asset and everything else stemming from there. And I would like to see more nuance and kind of move past, the 2017.
Yes, this space is actually moving very fast, and like a token that we're talking about today, it's very different than we talked about probably 6 months ago or a year ago, because token ran, before probably we look at the token like with something that doesn't come with voting rights and everything, but things are changing, right? So, Punia, and so how about you at Draper Associates, and what do you prefer when you invest in crypto or blockchain startups? You choose what's your ratio in terms of equity and token?
Yeah, I think we've done both. I guess it's just to preface it, the idea of an ICO as a fundraising mechanism, I think is going to radically change following the next 2-3 years. So this question might not even be relevant going into the future, but as it stands today, the question is, how do you best align with the entrepreneur? If it means a token investment, because that's kind of where all the value is being created, and that's where the entrepreneur plays kind of his stake, then that's what we'll invest. But if he has an operating company as well that he has equity in, then we want to be that too. We want to be aligned as much as we can with the team. So So how that conversation plays out informs our choice between the two.
Norman, you want to?
I mean, like every other investor, we make the bets based on teams, market, and technology. Like at the end of the day, the technology is blockchain. The market is digital assets. And the teams are you guys and anybody building a project, the people that are working with you to build this app, to build this protocol, to build this standard, to build this network. And to Punya's point, we want to be aligned. You know, every investor is, when we're coming from the traditional venture world, we're looking at it specifically from those three lenses. And so the structure of that investment, that's going to change. That's why, 5 years ago, we didn't have safes, and now they're everywhere. You can't do any early stage investments without safes or SAFs or SAFTs. It's because they're equity friendly. They're aligning the interests of the investors and the company. And ultimately, at the end of the day, what you guys want is you guys want money, resources, and time. We're long-term investors, and so we're making a long-term bet. We're building a partnership, and we're trying to work with you guys to grow and hit those milestones. Whatever financing structure happens to be employed, that's all merely those things to Punya's point. I think, and everybody's point, that's going to change over time because the markets change over time. What happened 50 years ago is the same as what happened 5 years ago. It's the same as what's happening 5 months ago.
Yeah, I think it really boils down to whether the project is good or not, right? So it's pretty much a negotiation between the startup and VC. So what kind of deal that you can come to close. And
so basically for us, if you believe that tokens and this token blockchain will be around for the next 5 to 10 years, because right now it's only like less than 100 million user-controlled wallets. Compared to Facebook, Meta, they have like 2 billion users. So it takes time. It takes time. So, but if you believe this will be around, and then what engineers does is that if the problem is well defined, then it's really about execution. So that's why, even though this was so-called crypto winter, but for early stage investors, we've seen so many top-tier engineers from Google, from Facebook. They had an idea because of the hype and bubble last year. So they really thought of this. So we've seen so many talented people actually came out and then work on scalability, security, privacy, usability, and then that's the promise we see, and then we are actually very hopeful. On the other hand, token economics is why it's so important, because without token economics, and then your token, eventually everybody get your token, they just want to sell it. So that's happened with a lot of those type of platform coin that happened in China. So it doesn't go up, it went down, because the token economics doesn't work. For example, like as early stage investors, we always say we look at team, great team, they can execute. And then also we look at the data that they can graduate the product, right? So they can gradually accumulate a lot of data. What's tricky in terms of crypto is that a lot of the product, their team is great. They are, especially for those type of wallets and also security verification. The team is great, and also there is real usage and usage of the product. They make money even. However, if the token economics doesn't work, still people won't actually use buy your token to pay you to get discount. People don't do that. People just pay you for your service. So that kind of business, as an investor, you really have to actually study token economics, and then to decide whether you wanted to actually get equity to actually enjoy the valuation, or you wanted to actually invest in token to really incentivize the open source economy. So, which is a little bit tricky there.
Yeah. So in the topics of tokenomics, we're really seeing some really new trends, and the markets are coming back to the fundamentals more and more. So the pump and dump game is probably hopefully over soon, and so we are also seeing some new trends like reverse ICO and also tokenized security offering. And so I'm wondering, how is that? How are all these new trends, have an impact on your investment strategy, or how do you position yourself in this, constantly changing environment?
Just add on one point to Sue's opinions about the token economics. There's a lot of good things about it, but I want to point out that it may be not good to have too fast to liquidate founders or investors' cash. So I've been investing in a lot of projects. Most of the the founding teams, once they have cash out their their shares or stakes, they lose their drive and then they start something else. And you can see the rate of starting a new fund, leaving the original one and start a new one is pretty high. That's one problem. Another thing is a lot of tokens they claim to be a token payments. In a sense, is that you buy the tokens and to pay for their services. But in reality, the token price is unrelated, kind of unrelated with their real values created. So and also it's highly volatile. So it's really hard to be a payment method or a medium of change. So those are some common mistakes that a lot of token design. A lot of entrepreneurs, they are start a company for the sake of starting ICO or token. It's not really a good idea. But there are a lot of good things about tokens, especially the new waves of security token offerings, such as STO. So people started looking at that as a new replacement of ICOs. There are several benefits of that. So the first one is that they are backed by some real values. Either it's equity, a future of income, or some assets. The other side is that they provide global accessibility, so everyone in the world can invest into a company. And it has a smart contract enabled programmable money and contract, so you can probably produce some positive efficiency over the company operations. And also they provide a 24/7 market, and also like fractional ownerships can allow users and both shareholders to be the same people. So incentivize the entire community to work on the same projects and then contributes to that. Those are the benefits over the traditional equity, but it's still like an equity token. So I think this is a market that a lot of investors can take a look, and entrepreneurs can start to think about that. And it's getting started. So
yeah, and I think Anastasia could pitch in on the regulations point of view.
Well, the regulations point of view, which ties intimately into security tokens point of view, right? And to go back to my point, I think it's all about your investment thesis and why you invest. I think a lot of professionals, a lot of institutional money has still been kind of looking into the space, speaking and just kind of laughing and waiting until things begin to shake out a little bit. And now security token offering experts emerge. But a lot of those experts have never issued or structured a security. And so I think we will really see a demand in people that both understand financial engineering and both understand the technology that underlies cryptographic tokens. And there are just very, very few people in the world that can understand both of these, highly complex fields, but I think that until there is an understanding, speaking of token economics, until there is an understanding of what this token represents, why it's there, what are the incentivized behaviors on the platform that it's supposed to inspire, and how the technology, the cryptographic code, can assist in those behaviors, I think we won't have a real conversation of security tokens or why they're better than traditional security.
I think you're missing the point about traditional venture. Like traditional venture is at an inflection point. We invest in 3, 5, 10 years beyond, right? So our investment strategy are 3 years, 5 years, and 10 years beyond. What do we believe, 10 years, 20 years, 50 years down the road? The stuff we invest in is the stuff that when I was growing up didn't really exist. The internet didn't exist, computers didn't exist, mobile phones didn't exist, apps didn't exist. We invest in those things that are going to become standards at some point in the future. We invest in things that are going to reach large pools of people. What's it going to take to what are going to be the standards for the next 2 billion people who will be fully digital all the time? They won't even know.
Yeah, I think it really, there's it really boils down to whether you believe in blockchain or not, right? Whether you hold the long-term view and like quick money versus long-term gain.
Can I speak to that though? I think that I actually am 100% agreement with you from the venture investing long-term horizon standpoint. But my question is then, why do you want to purchase tokens that are highly volatile, highly liquid, and highly misunderstood instead of kind of sticking to your guns and investing in equity? You're a professional. Your track record is, you really deeply understand how innovative technology companies are built, and you have the patience to wait. So the switch from we're a venture firm with a 10-year exit horizon, but now we're going to amend our LP agreements because we want to, play in the token space all of a sudden because this is hot. Like, how do you reconcile your long-term horizon with a highly, let's face it, highly speculative and a highly misunderstood space of purchasing tokens?
We play in the technology space. We don't play in the token space, right? That's the point, right? So what we're doing when it comes to the technology market is we're figuring out, at the end of the day, any early stage firm is founder friendly. And if the founders, that's what they're doing, we have to adapt to their rules because ultimately what our investors are paying us to be in front of are founders and startups who are building new tech companies. And if it happens to be a token and we happen to be able to see a pattern, repetitive, then we have to take it seriously. We have to talk about it. But that being said, it's still a small fraction of the amount of venture capital that's out there that's going into this. It's 2% out of $100 billion that's going into venture every year in over 5,000 startups.
Yeah, I think this is really interesting because actually Anastasia and Norman actually get from two different perspectives. One is from crowdfunding, giving the power to the retailers and people. One from the traditional, VC and classic investment point of view. This is very interesting. Due to we have very limited time, I would like to just ask every one of you to look into the future. If there's a crystal ball, and could you just tell us, what's your view in the investment environment? What do you see in the future?
I think actually, we as an investor, we want our portfolio company to make money and also to be compliant. And then I think it's really a strong need for the government to understand technology because regulation really drives adoption. And to reach that 1 to 2 billion, user control wallets, we need adoption. We need regulation here. And then on the other hand, when we actually invest in the early stage company, and then we also encourage them to apply for grants, not just equity or SAFT or SAFT, and also like Ethereum Community Fund and Ethereum Foundation, they offer grants. And a lot of the early stage products, they don't even know whether they actually, a token is actually a necessity or not. You don't have to actually issue token if there is no necessity. So you can just be, and then there are so many foundations offer grants, and you can enjoy your research, and that way. And on the other hand, if you do have necessity, there is no point investing in equity. If you are the next Ethereum or Bitcoin, why do you want to own the equity? It doesn't have central governance.
Thank you. Thank you.
So basically, tokenomics and everything, it's a tool, right? So it only comes back to the necessity. You don't have to just issue tokens for the sake of joining the hype, right? Okay. And so we do see the like the whole industry moving into a little bit of the compliance kind of direction. Maybe later on you could correct me if I'm wrong, Norman.
Just focus on building the technology that's going to be the standard that lets this thing grow and scale. If we're limited to a transaction a week, that's not very useful for the world. So try to build those things that really help this thing scale out so it supports the billion people that are on the internet and their phones and the next 3 billion people that are going to be on the internet and their phones and other devices that we don't even know about yet.
Thank you, people.
So I would still think of the blockchain. People will not actually just talk about blockchain, but blockchain will become part of our life, and then will just be something seamless and then it's involved into everyone's life. Your valuable assets, very, very expensive things, may be on the blockchain, and you wouldn't know this is that technology. Just you're still using your phone or your app to access your assets, but they're based on some new technologies that people don't really have to participate, but just like a service and like internet you use every day.
Yeah, so blockchain is going to stay as a service. Okay, understand.
I'm in complete agreement that blockchain will eat the world and most people will not know how it powers and what it does. They'll just use blockchain-enabled products. As far as regulation space and investing space in general, I think we'll see erasure of borders. I think we'll see that investments will move more freely, and I think that investment instruments will be programmable and they will simply know who is able to purchase, who is able to resell, and which hands it should transfer into which jurisdiction. And so we'll have to think less hard in the 10 to 20-year-old horizon about regulation, because regulation will be built into those assets.
Right, regulation is going to be in the picture.
Sure. I think we're really interested in investing in crypto-native projects, and not so this idea of taking stuff that exists in the centralized world and just trying to splash into the decentralized world. So crypto-native assets, primitives, and those new business models.
Okay, thank you so much. And if you are interested in the topic and you feel free to reach out to all the panelists and myself, and you can find us on LinkedIn, or we could carry the conversation off stage. Thank you very much. Thank you.
All right, thank you all for an exciting panel. I know you could have talked for an hour or two longer. There's a lot of information. Up next, we have one of our most exciting panels of the day. I know a lot of people are eating lunch or coming back, so get ready for this. This is our global investment battle, Silicon Valley versus Asia. I know some of these projects personally. This is going to be very exciting. Josh Kosing from TechCrunch is going to be our moderator. He's going to be joined on stage by Avichal Garg from Y Combinator, Jing Sun from IoTex and Sparkland Capital, Kingsley Advani from Chain Fund Capital, Sunny Dillon of Signia Venture Partners, David Ritter from Penta, and Sinai Lee from GBIC. Welcome them to the stage.
Hey everybody, thank you guys so much for coming out. I'm really excited about this because I think throughout this conference we've heard this theme that things are just really getting tough for blockchain startups in America. Between the regulation, the uncertainty, lukewarm consumer reactions in the last few months, it's become a lot more difficult to get something off the ground. Meanwhile, we've seen definitely lots of markets in Asia being much more receptive to the business, making new economic exceptions to assist it. And while there has been a crackdown in China, a lot of the other countries are trying to pick up the slack around Asia. And so I'm excited to get to talk with our panelists today about what is the laws of physics and what are the difference between those laws of physics for crypto between the US and China as well as the rest of Asia. So let me, each of you guys could just quickly give an introduction to yourself and maybe a line or two about what do you see startups from America and blockchain moving over to Asia, or do you think they're going to stick around here, and why?
I'll start. My name is Avichal. I'm managing partner at Electric Capital. We're an early stage crypto token only fund. Most of my background is actually in startups. Started and sold a few things. Most recently was at Facebook, which acquired my previous company in 2012, and then obviously in crypto for many years. I am not at all worried about it, actually. I think I tend to have maybe a contrarian view, which is waves of technology really consolidate in Silicon Valley for very reasonable reasons, and so I'm actually sort of a Silicon Valley maximalist in some sense. So I actually don't worry about it too much in the long term.
Hello everyone, my name is Jane. I'm the co-founder of Altax. Actually, we are a blockchain platform for Internet of Things. A bit of my background. Actually, I was born and grew up in China, Shanghai. And then I moved to Singapore, start my VC, career. And at that time, I was, taking care of the Southeast Asia market. And then I moved to Silicon Valley. I spent the last 6 years as a venture capitalist in Silicon Valley. And we focus on investing in the frontier tech. My focus will be the cybersecurity, the IoT, and the AI. And we start to look at, the blockchain sector late in 2015. And since then, we feel, not only just like from the crypto side, but actually we are seeing, how blockchain can solve the real world problem in the real world. So yeah, today I will be more, sharing my experience, the investment experience, and also as an entrepreneur perspective.
But what's your opinion? Do you think that blockchain startups are going to be sticking around here, or do you think a lot of them are going to end up fleeing to Asia?
I would say there's a combination. Actually, just like in Asia and in Silicon Valley, actually they have very different, criteria how to evaluate, the company or the team. And also they have very different perspective in terms of the long-term view. Yeah.
Hey, I'm Kingsley Advani, founder and partner of Chain Fund Capital. We're a $20 million blockchain fund, and we primarily invest in early stage blockchains. So we've invested in blockchains from both Silicon Valley and Asia, likes of Zilliqa from Singapore, Thunder, Oasis Labs, Icon. In terms of Silicon Valley versus Asia, I think there will be a continuation of a hybrid model where, for example, US-based companies would have a headquarter in Asia. For example, many do have headquarters in Singapore, which does have generally more favorable token regulation than the US. Although they can still have their operations in the US or their research and development in the US. So I'm in favor of a hybrid model. I think this will continue over the next 10, 20 years.
Hi everyone, I'm Shinhei Lee, a partner at GBIC and Block72. So GBIC is a blockchain fund based in the United States, China, and Korea. And we started in 2016 from arbitrage trading, and then we started doing a lot of blockchain investment from early 2017. And we have over 50 portfolio companies, again, from basically everywhere from the world. And then how we differentiate from other funds in 2017 when money was really cheap was by helping our portfolio company on acceleration. So we had that function, but then we decided to separate the fund and then the consulting arm. So we established a consulting arm which is called Block72. Just a little bit of background, I'm native Korean, but I work and lived in China for like 2 years, and I came to Silicon Valley for my MBA at Stanford and worked at fintech startup in Silicon Valley for the last 4 years. But I moved to Korea like recently because Korea became one of the really, really important markets for the blockchain. And to answer your question, Josh, I think just blockchain by concept is very global. So it's just very hard to say like, oh, it's gonna be only Silicon Valley or Asia. Every market has different perspectives. So I believe that a lot of core technology is gonna come up from Silicon Valley just because we have very strong tech foundation here already from the existing tech. but from like a lot of innovation are actually coming from China and Korea. And Korea has been one of the very strong the secondary markets. So if you look at the data, at the end of last year, Korea had like about 50% of the entire transaction of top 12 coins in the world. And you probably heard about kimchi premium, which was the Ethereum price was like 30% higher on Korean exchange compared to other, and at peak was like 50% higher. And there are a lot of reverse side store coming out, means there are like existing users. So I can go on and talk about it, but I don't want to like pre-answer some question that Josh might ask. So I'm gonna stop here.
Hi everyone, I'm Dave, CEO of the Penta Global Foundation. We're based out of Singapore, and we're a public chain, next generation public chain. So we've actually received investment from all over the world. We've invested, as a way to answer your question, we have investment from the United States. Tim Draper is one of our investors. From China, we have a significant amount of investment, also from Europe. So I think that I really agree with what Shin-Sang was saying. It's a very global market. And I think that innovators will go where the regulations are friendly. But the capital markets, I mean, we have to recognize that blockchain is at once a technical product, it's also a financial product when you have cryptocurrencies involved. And when we look at the financial markets, and I come from a finance background, money will come, products will go where the money is. And the money could be anywhere. And we're going to see a tremendous amount of money coming in from Asia, also from the United States, especially once our regulatory questions are answered here. I think that's a major bottleneck in the US that we can talk about. So to give you just a little bit of background on Penta, we started our journey in blockchain as a service provider. So we really started by doing permission blockchains for enterprise and have leveraged that experience to build a public chain, which is coming out in December this year. I think that we're a great example of a project that shows East meets West approach, where we have support on both sides of the Pacific. Thanks.
Hi everyone, my name is Sunny Dillon. I am a general partner at a seed and Series A Bay Area fund named Signia Ventures. We're about 6 years old, backed by a couple of movie studios in LA, by the Smithsonian Museum and a few others. Our foray into blockchain came from our background in gaming. My partner co-founded a company named Playdom, which sold to Disney in 2010. And digital currencies and tokenizing particular behaviors and kind of creating an economy around them is kind of the behavior sense, the consumer behavior that took us down the chain, so to speak. And some of our early investments include more investing in and around financial infrastructure, so real-world asset tokenization with investments in companies such as Harbor, Trust Token, and then investing in some of the base chain infrastructure, because further what some folks said, this is a tech product and there still are technical problems that need to be solved, so we've been making some investments there too.
So based on your guys' experience investing across both markets, I'd love to hear, what is your slate for how the US should regulate cryptocurrencies based on avoiding the pitfalls that we've seen in Asia, but also employing some of the best practices that they've had over there? Everyone doesn't need to answer, but I'd love to hear us try to get towards what the SEC should really do. Anyone have like a burning opinion about what this SEC should do? I could jump in here. I think, recently people followed in the news these ETF applications, which were denied and then they're under review. And Hester Pierce at the SEC came out with this comment. The emphasis of regulators should be on disclosure and meeting high business standards, not on picking winners and losers. And I think that's a really important message for where we can go with regulation. The caution, I think, for regulations as they come forward in this country is not to push out retail investors from the marketplace. Because if we raise the barrier of entry too high, then it's just going to concentrate the power back in the hands of the people who already have it. And the big investment institutions are going to capture massive market share. So I hope that's what doesn't happen in this country, and we recognize the importance of keeping a low barrier to entry, but also higher disclosure requirements, I think, is a good place to place the emphasis.
I'll jump in for a second. So even beyond the SEC, I think if you think about regulation broadly, what does the government really care about? They care about 3 or 4 things.
The SEC wants people to not get scammed, which is pretty reasonable. The IRS wants you to pay your taxes. You should pay your taxes. And the government doesn't want
you should pay your taxes.
Everybody pay your taxes. It's October. Pay your taxes. And the government doesn't want you to give money to terrorists. Also very reasonable. So actually, like what the government wants you to do is generally actually pretty reasonable. And so when you double click on that, I think the way that plays out is actually the SEC will slam some scammers and they'll kind of step a line and everybody who is on the wrong side of the line will move over. The IRS will slam some people for not paying taxes and then everybody will freak out and everybody will pay their taxes. And the existing tooling of fiat on-ramps and off-ramps with KYC AML is how you enforce people don't money launder and give money to terrorists. So actually we have all the tools, and now I think it's just a matter of when the SEC gets comfortable with saying, you know what, we have the disclosures that we need, we have transparency in pricing, we have custody so that if large amounts of money move into the space, we're pretty sure you can't get robbed, things like that. So I think they're basically doing the right thing, which is they're waiting for pieces to be in place, but I don't expect them to do anything draconian.
So just going back, it's not only about SEC, right? So definitely SEC is leading a lot of leadership on regulatory, but just like overall, like globally, what the governments care, right? Number one, they need to protect their retail investors. Number two, they don't want money to go outside of their country easily. Number three, money laundering, right? So even like, for example, China, because China released a very strict regulation like a few months ago, and then everyone like freaked out because they shut down the WeChat, and they said they're gonna go after KOLs and like exchanges, etc. But again, like from the Chinese government perspective, and the same thing for Korea, right? They wanna encourage the development of blockchain. But number two, they are worried that people will send money outside of China and then do money laundering through cryptocurrency. That's why they are kind of like setting out that kind of regulation. But I think just overall, that's like what the government is trying, like every government is trying to do. But every country has like different law systems. So for example, it's very different from like United States. United States has negative law system, means you can do whatever it's not like written on like the law. But versus Korea and Japan have positive law system. That means you can only do what is written in the law system, in regulation. So that means, for example, like Korea and Japan are trying to come up with a new regulation because they are behind, right? There have no law or regulation on new technologies such as blockchain and cryptocurrency. So for example, like the Korea government is actively like moving to come up with the regulation ICO. So like for example, like they have to, like every white paper have to go through the third-party approval, and also every like investor need to go through the KYC, and after that they have the obligation to report how they use money and etc. So I think like again, like SEC is leading the kind of like is a thought leader in the regulation, but it's not only SEC, it's like coming from every single market. It's they want to protect their retail investor, but at the same time they don't want the phenomenon that's happening globally, which is blockchain cryptocurrency.
So I'm interested to hear about your perspective on one of the bigger questions, which is around what should be regulated as a security. You know, what are your guys' opinions there? Who do you think is doing this right around the world, and who isn't?
I think, so you have, if people are familiar, you can just Google the Howey test, is kind of how they do it in a regulatory sense, right? Like you about what classifies as a security. I think a lot of the folks that we've looked at investing in, that we've invested in, have kind of erred on the side of conservatism, not saying it right, being conservative, to treat everything like a security. That way you're kind of covering yourself when it comes to regulatory compliance, Reg D compliance in particular, about when liquidity comes, when are you going to be able to trade, who are you going to be able to trade with, further to what Avichal was and David were talking about. what does the SEC care to protect? You're not basically double dipping, trading, unreported trades that are at the expense of retail investors. So I think that when we talk about lockups here versus some of the Wild West, I guess, that we've seen with more lax controls or lack of regulation in parts of Asia right now, we've been erring very much so on the side of being SEC compliant with everything we've been doing. I think a lot of folks out on the West Coast have been.
Yeah, I think that brings up another question. With all this regulatory uncertainty, what is the best path forward for blockchain startups here? And if you're a blockchain startup in the audience, what should you be doing to prepare other than pretty obviously hiring legal talent?
Well, firstly, if you're an early stage blockchain, you want to be sufficiently decentralized, which is very important. So I think Ripple recently there was some news about whether it's sufficiently decentralized to have a utility token. But for startups now thinking about launching a token, I think it's wise to look at other jurisdictions as well across the world. For example, Singapore, Malta, Liechtenstein, Switzerland, to speak to lawyers around the world to think about where they should have their headquarters. I don't think the US is particularly forward-thinking in terms of their guidance around security tokens. So, for example, Singapore has been quite forward-thinking. The Monetary Authority of Singapore has issued a guide to digital token offerings, and this has been quite supportive for entrepreneurs wanting to issue tokens. And so we've actually seen recently in the past year, Singapore has outpaced the US in terms of ICOs because it has more favorable jurisdiction that has clearer guidance on issuing tokens. So I think entrepreneurs should look globally and think where they want to have their HQ before they launch their tokens.
Can I just disagree? So I'm just going to go on a contrarian rant for a second. So I don't think anything other than the SEC really matters. I don't think it really matters what happens in Singapore or Malta or any of these other places. And the reason is that the United States has this really interesting property for probably another 15 or 20 years, maybe not much more after that. We'll see what happens in China. But at least for the next 20 years, which is that the domestic market is large enough such that when the SEC decides to do something, a lot of people shift what they do. A lot of other countries then follow lockstep. And if there's ever an issue, the courts are trusted enough such that you can escalate the issue. So this is the fundamental problem is if you go and follow the guidance of any of these other markets, the domestic markets aren't large enough. Other countries are not going to follow along, and even if you decide to headquarter your startup there, what happens if you get sued? Right? What is the case law? How do you actually resolve these issues? Which is why I think so many people re-honing on the SEC, because that is actually going to set the law for basically the world. I don't think that's true forever. I think it is true right now, and I think it has been true, which is why I think there's so much focus on the SEC. And so TLDR, I don't think it really matters what the rest of the world does. It only matters in so much as it influences what the SEC does.
Yeah, actually, as an entrepreneur, we still see, when we look at those blockchain companies, how to make their company, regulation, properly, positioned is still one of the biggest problem for them. We will see just like we're building up another, company in other traditional tech area. This is a long journey. So actually, we can see this as a long term and short term. So right now it's still very early stage. So it's quite reasonable for the SEC or for the countries government. They need time to spend time to understand the entire scenario and to categorize different type of the blockchain companies or tokens. Right? So I would say my suggestion to the founders better when they are raising the fund, they still need to think about they raise funding from different countries, have the access to different investors because of their investors. They do provide really useful resources in terms of legal counsel and the regulation side. And then just set up your entity in a country which is have more clear the regulation guidance. And then just you still need to move to the stage to, for example, US and also or Singapore, which have the mature regulations, because you will raise additional funds, and all those investors, they really care the safety of their fund and how they will exit in long term. And for long term, they want the company be in a more regulation mature countries. So that's also very important.
If I can just add a short answer, the regulation is one thing, but if you want to operate a successful company or project, you have to think about other things like operation as well. So agree with what Jimmy says. You should set up the foundation in the country where the law and the regulation are more favorable to you, but it doesn't mean that you have to set the entire team there, right? So again, blockchain is a very global concept. You probably have a very decentralized organization. So that means you probably have your best tech team out of Silicon Valley, but you can also have the marketing and the PR team based in China, in like Korea, for example. So I want to separate like where you set up your foundation and the bank account can be different from where you operate day-to-day operations.
Great. So beyond regulation, I want to hear a little bit about what's great that's coming out of China. I think a lot of the investors here stay a little bit myopically focused on America. So we'd love if each of you could give me like one project or company coming out of Asia that you're really excited about that's unique and different than what we're already seeing here in America.
Well, I will not mention one specific company, but I want to say a lot of disruptive business innovations are actually coming out of China. So you probably heard about trans-equal mining exchanges. So it started by a company from China called Fcoin. I'm not saying that what Fcoin did is right or wrong, but just because they came out with this new concept, which is pretty disruptive, because after that idea, there are hundreds of exchanges who are adopting the same trans-equal mining idea. So that can...
Could you just explain that idea and how that works for us?
Trans-equal mining. So yeah, so how centralized exchange works, right? You pay the fee when you make the transaction on the big city, so centralized exchange. But trans-equal mining exchange is basically you get the certain percentage of that transaction fee as the exchange token. So for example, what FT did was, okay, if you make a transaction on Fcoin exchange, you will get like 80% of that fee in FT, which is Fcoin's coin. So you basically get the fee from the transaction.
Okay, so I think this is like super interesting concept. The idea of Fcoin or Binance Coin or some of these like experiments that are coming out of China is really fascinating. I actually think if you step back and think about it more abstractly, what's really happening? So what is a security? If you think about securities today, you buy a share of a company. What do you really get? You get three things. One, you get some information rights. You get to understand what's happening inside the company. Two, you get some governance rights. So you get to often have like votes to elect the board. And that's how you have influence over the governance of the company. And three, you get some share of the profits of the company. And in the US, what we've done is we've taken these three things for the last 100 years, coupled them together and called it a share. And what's happening, I think, in China is they're taking these three concepts and decoupling them. And they're saying, well, what if you actually have no governance rights, but you get some profit of the network? Or what if you take something like Maker and you say, well, what if you get no share of the profit of the network directly, but you have some governance rights, and you can control how the protocol works. And so in essence, what tokens are doing is decoupling the properties of a share or security. And because there's no SEC in Asia, the search space and the experimentation space is much, much broader. And so what you're seeing is companies play around in that space. The other thing I think you have to think about with some of these experiments is if you look back at the last 20 years of technology, one of the really interesting patterns that seems to emerge is that places like Korea, Japan, are very good at experimenting in these markets. It's like if you live on one of these islands, which is like
super creative about finding these edge cases. So you look at like social networks, you look at mobile, you look at mapping, you look at blogging, communication products, like just esports. There's so many of these interesting social things that start in these places, but then they really sort of get adapted and go mainstream as the US companies sort of absorb them. So I kind of look at it as what's happening in Asia with these tokens is very, very interesting experimentation, and I would not at all be surprised if what you see is somebody absorb those ideas from the domestic US market and take it to 10x scale, and then use that leverage to back into a global market.
I'm really, oh, go ahead.
I really agree with what he said, Joe said, because for example, like Korea is a very, very connected society, and same as China. And I will expect that the mass adoption will happen in Korea and China. So because the Korea has been like very, again, like number one, like 30% of population is or has experience in trading cryptocurrency. Number two, the average knowledge about the blockchain is very, very high in Korea. Number three, there are a lot of existing business with existing users, millions of users are adopting blockchain technology. So combining these three, I think like the Korea can be the cryptocurrency or the blockchain country which will show how blockchain can actually use in the real life. Probably it's gonna be the first test bed showing like how blockchain can be massively adopted. And China has been really, really strong in consumer tech, right? For example, if you heard about WeChat, WePay is like everywhere. Like there's no cash in China, basically. If you go to like even tier 3 cities, everyone like taxi driver and like small mom and pop shops, they all use mobile payment. That's how the mobile and IT industry is advanced in Asia. And I see a lot of consumer apps are coming out from China as well. So you probably heard about My Token, which is like #1 Ethereum wallet globally. It's also from China. There are hundreds of consumer apps related to the blockchain cryptocurrency are currently coming out from Asia. So.
Yeah, just to come back to your question, I'm really glad you brought up the example of Fcoin. If you haven't heard of Fcoin, it's an important example. It's a controversial project. I'm making no value statement here, but it did totally disrupt the exchange model, the status quo of exchanges as they were. And this is an example of how it's a global market and innovations coming out of China can affect the entire industry. And another thing that I would say is a lot of products that we may think of as coming out of the West or coming out of the United States actually have incredibly strong backing from China. So some of the biggest Bitcoin and Ethereum whales are Chinese, Korean, and from other places. So these are global projects, and everybody should be paying attention to what's coming out of China, South Korea, other important markets in the space. We definitely should not be myopic. It would be a mistake on our part in this country, from a strategic perspective going forward in this industry, to do so. And one other thing I'll say is that, we've been bogged down in political craziness in this country, debating whether or not climate change is real. Countries like China are investing hundreds of billions of dollars in alternative energy technology. They're investing hundreds of billions of dollars into blockchain technology. So while we move slow here to have our political process in this country, other countries are coming to the fore and filling a gap with very important research and development dollars. Great. So to recap some of the awesome insights from our panel, the Silicon Valley is resilient. There's so much money, there's so much talent here, it's hard to beat, and the SEC is still sort of the gold standard for regulation, and other countries are always going to follow what they do. But that said, there is opportunities for hybrid models, whether you're putting your HQ in Singapore or another country with favorable token regulation, while keeping things like ops and R&D, or maybe marketing and PR or executives over here in Silicon Valley. Korea is especially emerging as a strong secondary market. At one point it had 50% of the top 10 coin transactions, 30% of the population have actually traded. But really the money can come from anywhere, so the startups will go wherever they can get the money. That said, the investors are going to want those companies to reside in places where they still have agency, where there's still stable regulatory and legal systems, so if something goes wrong, they have recourse. The emphasis on, as we evolve regulation, really needs to be around transparency instead of picking winners. And too high of regulation will raise the bar for new startups to actually enter the market and could end up consolidating power in the existing incumbents. But really, when regulators think about these problems, they need to be figuring out how to have no scams, people are still paying their taxes, and avoid giving money to terrorists, while protecting retail money investors and keeping money in the country. In Korea and China, they have a really big opportunity here, and in America, companies really need to play conservative with securities. So if you're out there prepping, think about either becoming sufficiently decentralized and putting your HQ elsewhere, or setting up here but maybe having parts of your other operation elsewhere. And in the end, opportunities like new exchange models like Fcoin and decoupling voting rights from profits are going to give new opportunities for blockchain. So we're still really just in the first inning here. Thank you guys so much for coming, and thank you all for watching here at Global Blockchain Forum.
I need a break.
All right, blockchain is getting very exciting in Asia, in China, Korea. I hope you're paying attention to what's going on over there. They are leading the way, so make sure you're educating yourself on what is happening in Asia. Those people who just spoke would be great people to talk to if you're interested. Now, a very important subject, but only if you don't want to go to prison. This is legal compliance and regulation aspects of the crypto economy, led by Pepe Stockholm, who will be moderating a fantastic panel, including Ben Bartlett from the city of Berkeley, Colin Breeze of Crypto Group, and Tony Petrov of Sum and Substance. Welcome them to the stage.
So guys, welcome to this panel. As you can see, it's all about regulations, it's all about the legal stuff, but I mean, it's all about not getting into jail. So I will start with you guys. I mean, tokens. Are there any risks considered to that? I mean, are there any differences between utility tokens and security tokens? And this is the warm-up question. What do you say?
Well, thank you. My name is Ben Bartlett. I'm an attorney at Tech at Bartlett, and we represent blockchain protocols, investors, funds, entrepreneurs, ICOs, STOs, etc. And you know, a little context I think is required here. Right now, you have the genesis of a new economic system, a new technology, a new platform to deliver value to people in the world. But this is not the first time we've had something birthing, but usually these births fail. They fail because people don't follow the rules, they don't set it up right, so it collapses in itself. So right now, in terms of the risks, right, the people I talk to are really ignoring the risks lots of times. And the risks look like this. And you know, we're familiar with the SEC and the enforcement. If you don't follow the rules, they'll come after you, et cetera, et cetera. But the real risk is not in law enforcement because they don't have the resources to catch all of you. The real risk is in the plaintiff attorney. So when you do your ICO and you release your token and you're excited, it makes all this money, it's so exciting, and you didn't cross your T's, dot your I's, but it's okay, no one noticed. But then a year later, when your token has lost 90% of its value, the investors are really unhappy. And they're going to find a lawyer, they're going to team up, they're going to sue. And they're going to sue everyone along the chain of promotion of that token. From the PR company, the marketing person, the team, the investors, the board. And you know, this term rescission is the greatest risk of all. Because that can hobble you and destroy your efforts and make it so expensive for the next entrepreneur to operate that, again, this market could become stillborn. So that's, in my mind, is the greatest risk. It comes from the plaintiff side.
So, Colin, you are in fact dealing with such kind of risk. I mean, you have done everything from advising, but also setting up your own structure for your own project. I mean, what kind of thoughts did you deal with from the legal side when you had to approach your global idea and to set up your structure?
Well, it's like this. As a securities lawyer with a couple of decades of experience, I've been through up markets and down markets in Silicon Valley and in New York. I've handled the startup phase and the public phase of companies in technology space and also in sort of mundane retail spaces. The things that make me nervous as an attorney are the same things that make me nervous as an entrepreneur. And as an attorney, I always tell the clients, look, there's a way that this market works, and there's a way that this market doesn't work. And the way that it doesn't work is just to throw it at the wall, see what sticks, take the money, and then move to Bali and do some surfing. You can do it, but you can only do it once. And I want repeat clients, and I want repeat business. So the flip side is, how do we structure our business, and how do we structure our clients' relationships with its partners and its market so that we can avoid windbreakers and guns. Windbreakers are the FBI, the IRS, and various other government agencies that would very much like to shut you down for bad behavior. And the windbreakers don't just come with windbreakers, they come with the enforcement regime, which has the capacity to take your assets and incarcerate you. So let's think about that. Why would we set up a business that automatically puts us in the crosshairs of a dubious and skeptical regulator just so that we can try and throw something at the wall and see if it sticks? I've said no to a lot of clients in our group. I said, what you're doing doesn't make sense. We're the crypto group, we're not, crypto light, we're not blockchain light, we're not, we're going to use the word blockchain in order to get a better marketing position for our company, which is ultimately not a blockchain company. I say no to those clients because it doesn't make sense. I think to myself, I would rather say no to a client who ultimately is just trying to use buzzwords in order to get a better response from the market, but that will eventually lead to lawsuits from investors and potentially litigation and enforcement risk from the regulators. So we spent a lot of time worrying about, on behalf of our clients and also on behalf of our project, we spent a lot of time worrying about which is the right jurisdiction, what is the right way to set up. Yes, we're in the infancy of this market, still in infancy, but that doesn't mean that we can't use existing structures, existing concepts to make sure that the risks that we're adopting are risks that we understand, and the regulatory regime that we want to exist, which doesn't exist yet, we can push in the correct direction by following existing law.
So this is extremely entertaining. Can you feel it? I mean, we are talking about prison, we are talking about risk, and we are sitting here, everyone in this room, and we really want to do some business. We really want to do a change. And then you're talking about risk and prison. I mean, what is the upside in all of this? Is it just down the drain, or how can we handle it?
I don't think it's down the drain. I think there's a lot of really great work to be done. I talk to entrepreneurs all day, every day about what they're interested in, how they're approaching the market, what kind of technological solutions they're using, whether they're building it in-house or whether they're using components and modules from other firms. We do it in our business, and we're excited about how this is going to work. But excitement doesn't mean not nervous. I mean, it sounds like I'm cool as a cucumber up here, but my ears are a little bit hot, and I'm still a little bit nervous, and not super comfortable because I'm not having a one-on-one conversation with the folks up here on the panel. I'm having a one-on-200 conversation. That doesn't make me not want to do it. It makes me want to do it in a way that works. So that's the key aspect, is making sure that it works.
So Tony, you are the expert within AML and KYC.
Yes.
Now, what is going on the global scene right now?
So we are a solution for basically online verification and identification of clients. So we help ICOs and crypto platforms to identify their clients without seeing them in person. There's a lot of going on in the like AML, and KYC sectors. In Europe, probably you heard this fifth AML directive that has been adopted that basically ends anonymity, including the crypto markets. And so you need to work, if you want to get the European license, for example, you need to establish certain level of AML procedures that is quite close to banking license, kind of like level of identification. Also, what is important is the new technologies to identify a person. You've probably heard biometry, facial recognition, other technologies. Some jurisdictions, such as, for example, Malaysia, has recently stated specifically that they allow biometry as a method of online verification of clients, which is fine because facial recognition as a biometrical factor is good because you can basically say that the person on the photo or on the video is the same person as on the document. So you can basically tie up the biometrical factor to the document, and the document is obviously the second factor, which is also quite important. Also, GDPR is a major thing. If you collect money from European clients, you need to apply GDPR. You need to be compliant, and when you work with KYC providers, you always need to think about that. So kind of like many things, many topics that we can discuss in this regard.
Perfect. So now we go from all the boring stuff, all the negative stuff, to all the positive stuff. And I mean, Ben, you have tokenized a lot of things. But I mean, what do you see regarding tokenizing? Are there any limits? Or, I mean, tell a little bit about your practice and what you have done regarding tokenizing stuff.
Well, yeah. So tokenizing the physical world, or there are other aspects of our economic activity, I believe is integral to our future on this planet, because the existing modes of finance are not getting the job done. I was just overseas 2 weeks ago with the United Nations Refugee Assistance Program, and they were telling me that due to global warming, you're going to have, in about 50 to 60 years, half of the human population becoming homeless. That's 4.5 billion people on the move. So what we see now in Europe, and to a lesser extent, our southern border, is just the very beginning. Because the capital expenditures to desalinate and keep the world hydrated, and to do mass agriculture and hydroponics in greenhouses is too expensive for governments and a few 1%ers to pay for it. The only way to pay for it is through crowdfunding. So in my city, in Berkeley, we did a small version of this. It's underway now, where we crowdfund municipal debt in a pilot to have the community own a fire truck or what have you. These are bonds, right? But in small increments, you can buy it for $1. And that idea, once it got out there, took off. And now the World Bank has done it. Austria is doing it. Australia has done it. There are corporate forms of the same apparatus underway. China is exploring it with their One Belt and Road Initiative, and more. The state of Ohio, and more. So when you talk about this asset, fractional ownership of assets, tokenization of assets, the token is a representation of your ownership right to this asset, and the blockchain allows you to note who owns what, and in real time notify when the ownership changes hands.
So Colin, I mean, you're working right now on to create a global marketplace for tokenized assets. And I mean, when we talk that something is globalized, then we also see a lot of different jurisdictions. So how do you navigate between all those countries and all these rules?
A lot of times it has to do with local partners. So when somebody says to me, I want to come and raise capital in the United States, and so you can do that. You do it via Reg D. And when you do your Reg D, you file in with the SEC, and then you file a notice in the various states in which you touched investors. Whether you have California investors, but not Nevada, whether you have Texas, but not Arizona, Connecticut, because that's where the hedge funds are, but strangely enough, not Massachusetts. You only have to file in those states, but then you have to make sure that you've done it right in those states. So it's all jurisdiction specific. When you're looking at a project like my startup, which is IDEA, the issue that we're looking at and trying to solve is how do we make it possible for people located anywhere to invest everywhere? The only way that happens is if you reduce the investment minimum to $1, $5, $10, and make it possible for well-capitalized, otherwise wealthy enough investors from whichever jurisdiction to be able to participate in the system and in the market. You know, back to my co-panelists' comments, we have to know who they are, and we have to be able to allow them into the system, because venture capitalists and 1%ers, the extraordinarily, unbelievably, hopelessly wealthy aren't going to be able to take on all of the projects that want to get tokenized. And we also know that existing solutions for funding startups are really limited. Not only are they limited on the entry, they're also limited on the exit. We look at how the window closed in the early 2000s. It was a great boom for technology companies to get funding, build their company, and get liquid, which is great for investors. But then that window closed in 2000, and it really didn't open again until 2010. It's been a really, it was a really long, dark period. But those entities that can tokenize, according to the David Saxes of the world, those that can tokenize will tokenize. And the reason is that the cost of doing so is so much less than the transaction costs of doing venture capital financing, cobbling together that $1 million from one person or two people. It's much easier with modern technology. It's much easier to put together $1 million that you need to fund your project from 1 million different people, even 1 million people. Maybe it's 100,000, maybe it's 10,000. But those conversations aren't the same level as talking to VCs on Sand Hill Road and saying, I like you, but I don't like your market. And great projects die on the vine all the time in the current market. We're trying to change that.
So, Chris, and I just want to say that's really exciting that you're in this marketplace. This is exactly what I envisioned when I wrote my investment thesis called The Smart Path. And so to that end, I have people approaching me now with projects around mining, around timber, around water, other resource management, very expensive infrastructure projects that are right where you're talking about. Amazing.
So now we take a very positive approach. Now we assume that we are not in jail yet. We have raised all our funds, but now we have to declare our taxes. How can we optimize a structure in order for that structure to benefit most of the different tax systems we have on global level? What do you think, Tony? Are there any tricks you can say today?
Yeah, just my apologies. I said biometry was allowed in Malaysia. I meant Singapore, of course. It's just mass. It's the name of the regulation board body. Yeah, about your question, I can tell about this from the practical side, because we have lots of projects that are raising money and structuring their businesses somehow. And of course, many of them take, let's say, offshore jurisdictions. Establish foundations there and try to raise money on, accounts that are tied to offshore structures. These people might, it would be necessary to note for the people that use these structures that there are limits for that. If you are, for example, a U.S. entity or a U.S. person, and you want to raise money through such structures, you always need to think about the U.S. laws that can actually make you non-tax exempt in this situation, and you will pay taxes in the U.S. As if you did this in the U.S. So you need to take this into account. But of course, every project is specific. You need to create a specific structure for the specific project. You always need to consult to your lawyer about that.
like you. Take away, but I mean, SEC, they are aggressive, and IRS, they are also aggressive. So I mean, death and taxes always go almost hand in hand. But how do you see it? Do you agree that we can just set up an offshore thing and then, or what?
Absolutely not, right? This is a longtime practitioner of the dark arts. I'm telling you, you can't really avoid taxes. Ben Franklin said so. I agree with Ben. I stand with Ben. The fact of the matter is that there's a massive difference legally and emotionally between tax avoidance, which is illegal, and tax optimization, which is legal. And it's exactly the same thing, except one part is legal and the other part isn't. The second phrase that I want to bring up is a very famous tax opinion called Gregory versus Halpern. So this is deep into the weeds for you non-tax lawyers out there. But it's my favorite case ever because it's where the judge said there is no patriotic duty to so organize your affairs to pay the most tax possible. That allows for tax optimization. You can say, I want to do a tax-free exchange of this asset for that asset, and not pay tax on the capital gain because I'm pushing my bet forward. Right? This is all great stuff, but that doesn't mean that what's happening in the United States doesn't bleed into how other jurisdictions are also assessing taxes. I know lots of people from my business and from my past who are tax refugees. A UK citizen living in Germany, about to see some massive exit from his investments, magically figured out that if he moved to the Russian Federation, he would pay zero tax. So he moved to Russia and got married, so it was a win-win. But still, there are all sorts of ways, if you're not a US person, to go and handle this. Key aspect, if you're not a US person, and most of the people in the room are US people, and you're going to be taxed worldwide on your worldwide income.
Okay, we are about to closing this session, but up till now we have talked about the legal treatment of tokens, we have talked about legal planning and structuring, we have talked about tokenization of assets, a little bit of taxes and tax optimization, and now comes my final question, and that is for the audience, because I'm pretty sure they want 5 takeaways from this panel. How to stay out of jail. So what do you think? How can we stay out of jail? 5 good things to remember when this panel is over.
I hope we will share these 5 things, right?
Of course.
I mean, I think that the most important thing, so that you would never go to jail, is to hire a good lawyer. Seriously, because I mean, I have many clients that do ICOs or even crypto platforms. They do not really have a lawyer. They have like a lawyer, for example, that does like corporate, issues, but not like AML or international tax planning. So please do not spare money on that.
Okay, so tip number 1, engage a very expensive lawyer. Tip number 2.
Tip number 2, remember that nothing that we're doing today is really all that novel. Yes, blockchain is great, and it's a new way of recording information, but it's still just business. So operate your business cleanly, soberly, prudently. Hire a good lawyer, sure, but if you take the approach that I want to enter this market, I want to build a business that is lasting, I want to build legacy wealth for myself, for my family. The easiest way to do that is to build your business consistent with existing law so that you don't immediately draw the attention and attraction of all those guns and windbreakers.
So tip number 2, be compliant. Tip number 3.
And I'm kind of building on Colin's point. Just because, again, it's a new technology, and you're an innovator, and you're a genius, and you're saving the world and all that, there are fundamental principles that the law sort of embodies and that courts recognize. And that's just fairness. And fairness and uprightness. So as you do your business, as you create your business, as you communicate your business plan, all that, just remember the fundamental aspects of fairness, and you'll by and large stay out of trouble.
Perfect. So tip number 3 is fairness. And then regarding tip number 4 and 5, we lost that to the taxes. Thank you very much, gents. Thank you very much, audience, and have a nice day, and take care out there.
Thank you, gentlemen. Thank you for keeping us all out of jail. That's very important. All right. Our next talk today is from the Crocodile Dundee of blockchain. He's an Australian living in New York, but he did not bring his knife with him today on the stage. Please welcome Justin Moses to tell us about Haven and breaking barriers with the blockchain. Welcome.
Hey everyone, thanks for coming out. So yeah, my talk is titled Breaking Down Barriers with Blockchain, which sort of seems well timed actually after the panel that just came on, and you'll see why. So yeah, I'm the CTO of Haven, yes, in Australian. The company is actually based out of Australia. I'm setting up the New York office. I've been there for a number of years. And what we are is a decentralized stablecoin and payment network. We're live right now on Ethereum mainnet. And we are actually also looking to support both EOS and Zilliqa in the not too distant future. And what we're talking about today is how we can unshackle the flow of capital. And I want to sort of walk you through the idea behind this. But first, I want to talk a little bit about one of my favorite authors at the moment, Yuval Noah Harari, which a few of you might know. His breakout book a couple of years ago was called Sapiens, and he's a professor of history in the University of Jerusalem, and he pretty much mapped out a narrative of humanity from prehistoric times all the way through to the modern era, and that's quite a feat. I think it's part of the reason why he's so popular. And I've been reading his latest book, 21 Lessons for the 21st Century, and it's just about the current problems that we are dealing with in this day and age. And a quote really popped out at me when I was reading it. And the quote was actually with regards to the rise of nationalism and how that's a threat to the global democratic order. And the quote is that we now have a global ecology, a global economy, and global science, but we're still stuck with only national politics. And I think it really highlights the fact that global economics are at loggerheads with all these national entities and policies. I would assert that we live in a world where individuals do have limited access to this global economy. A lot of us here in the US are very privileged, we have a lot more access, but there are people all around the world that are very limited. For example, an entrepreneur in Bangladesh needing investment capital for their startup, or say a family in Bolivia queuing for food, dealing with the fact that the bolivar is reducing every week. Or perhaps, let's say, a migrant in Singapore paying about 7% or more in fees to send part of her paycheck back to her family in the Philippines. All these people, their ability to access the global economy is restricted by government, or good or ill. This could range from something small, such as a requirement for anti-money laundering and KYC laws for the small global remittance market, all the way up to blocking of capital investment in some nation states. We see that a decentralized system like blockchain can resist censorship by these nation states. Now, a lot of you probably would say, well, what about Bitcoin, right? Isn't Bitcoin the answer? That's decentralized. Bitcoin's been around for about 10 years, it's sort of working, right? Well, unfortunately, not while it's this volatile, right? This is the last month of Bitcoin versus the greenback, and we've seen it lost 10% of its value. This was taken a couple of days ago. We don't see that as a tenable solution for people around the world as a store of value, let alone as a medium of exchange. One day, hopefully, maybe crypto will completely take over from fiat currencies, but for right now, we have fiat and we have to accept that that's the way the world's working. So what about some other options? What about some stable coins? Like I'm sure a number of you have heard of Tether. If you've ever been on many exchanges, Tether or USD or Gemini, these effectively are working as such. They are stable. But the criticism from us and from a lot of other people is that they're very central. And in the case of Tether, we don't really know much about them. We don't know much about where their backing is. It's allegedly, potentially in money in Puerto Rico, but nobody really quite knows where that $2.4 billion is right now. The danger of this kind of approach is that a nation state could block that coin. It could say, you know what, we're not going to allow Tether anymore in our country. And that's scary for people who are looking to, if they're going to move into crypto. So we assert that a stable, decentralized solution is resistant to censorship, and that can break down financial barriers between people across the world. So here's a couple of examples. MakerDAO, which some of you might have heard, and ourselves, Haven, we're both live on Ethereum. And BitShares is another example. It's a decentralized solution, and they have their own blockchain. All three of us all have a stablecoin that's pegged to the USD, the greenback. BitShares also has one pegged to the Chinese yuan. But for us to sort of get global adoption, we feel like that we need to go beyond that. And so for us, we've been pushing for a new approach. And to that end, we're about to release multi-currency, which instead of just releasing a USD stablecoin that's backed by our collateral, we're releasing a basket of currencies. Now, these currencies that you see obviously are pretty much first world currencies, Aussie, euros, pounds, yen, yuan, but this is like our first approach. We see that we can release a claim on our collateral as a basket of different currencies, a bit like an SDR, and we're able to release this in the next couple of weeks. Eventually get to a point where we think that, we hope that the entire people from all around the world can actually get into crypto through their local currency. There might be a case, in some cases, where somebody wants to hedge against inflation. They may want to get into crypto and move on to the greenback. But there's plenty of other cases where we think people who are earning and spending their money in a local currency might want to get into crypto. They might want to get basically banking services, but they don't want to be exposed to foreign currency. And we see this as our multi-currency solution as a way to basically help them bank. So we're going to do one more quote. It's a bit longer. This is from another of Yuval Harari's books. It's called Homo Deus. And just bear with me, but I think this one is quite interesting. He says, according to this view, free market capitalism and state-controlled communism aren't competing ideologies, ethical creeds, or political institutions. At bottom, they are competing data processing systems. Capitalism uses distributed processing, whereas communism relies on centralized processing. Capitalism processes data by directly connecting all producers and consumers to one another, allowing them to exchange information freely and make decisions independently. Now, for good or ill, capitalism has defined the global world economy. We think that the gains in the West, we want to see it benefit the entire world. We need to liberate people from the restrictions of these governments. That's it. Thank you so much for your time. Really appreciate it. Have a great rest of the conference.
All right, thank you, Justin from Haven. And next, we have one of our most exciting panels of the day. It's going to be led by CNBC's Crypto Man Rand, and it's going to be on ICO due diligence for investors. If you ever invest in ICOs, this is going to be very important for you. We're going to learn how the best do their due diligence before they invest in an ICO. So please welcome to the stage Crypto Man Rand from CNBC, Andrew Wong from IBCM, John Choi from the Ethereum Foundation. I'm sorry, I'm reading the wrong names. Eugene Zhu, that's the next panel. Eugene Zhu from Block Crafters, Yasil Cho from FBG Capital, Zin Chao from JLab of JD Capital, Irina Birkin from Pladio, James Haft from Crypto Oracle, and Charles Michael Yim from Cointopia. Welcome.
Thank you very much. If you haven't had enough of me yet, I've still got 2 more panels, so by that time you'll definitely have enough of me. I think just before we start this panel, by a show of hands, and this is open to both the audience and of course to you guys, How many of you have invested in a scam before? Come on, don't be shy. Come on. Okay, great. So I think that's a good kickoff point for a panel around doing ICO due diligence. And I think the background here is that we've probably created the most powerful financial instrument in the world, or that the world has seen for many years, and that's the utility token. I think that the functionality of the utility token is something that no security or no financial instrument has been able to achieve to date. The problem is that it's unregulated, and as a result, we see a lot of scams, and maybe not even scams. We don't have any access to real information, and therefore, we don't get what we should from the company. And I think the big question is, with the limited information that we get, how do we go about doing the due diligence? So I'm going to kick off with you guys to say, maybe just a quick introduction from you, and maybe 1 or 2 points about how you guys do a due diligence. And let's start off with you.
Hi, my name is Irina. I'm from Platio. And I've spent most of my career across the street here working for a public accounting firm in audit. So due diligence is very close to heart for me. And the first thing I'll say is you should do due diligence. From what I hear, a lot of these scams, sometimes it is very much on the surface where you can find, you just ask a few questions and people just don't even ask the most basic questions. So let's start with agreeing that we should do due diligence.
So are you saying that going onto Twitter and reading a tweet that says that you should buy a token is not a due diligence?
That would not pass.
Just checking.
My first, due diligence point.
You see? Just do an intro, tell us who you are and...
Hi, I'm Isol. I'm venture partner at BZ Capital, and then I'm also running a very small accelerator, and usually helping the tech companies. And I will answer to your question a little bit in minutes.
So this is Jen. I run a crypto fund for the largest P fund in China, which is JD Capital, and we are the only public traded fund in China. And we have 150 public traded portfolios, and that's why I joined them as a partner, because of the fundamentals and the infrastructure support we can give them from our portfolio system. And of course, I ran a traditional VC fund before. It's actually a VC fund, so we invest seed round, Series A. Especially for seed round and angel round, there's no financial projection. There's financial projection, but there's no real revenue. So a lot of due diligence is focusing on people and what kind of track record they have and how much they have the ability of doing user acquisition and growth hacking. A lot of on the track record side of things.
And Jen's hosting a big party next week, so maybe you should, afterwards when you meet her, try and get a ticket.
I'm James Haft, founder of Crypto Oracle. We're a community-first venture capital firm. We assist companies in figuring out how to tokenize and how to create businesses out of ideas using tokenization. We also have an accelerator, a co-working space, and run a large media channel on Medium where you can read about crypto, my partner, Luke Kerner. In terms of ICOs, first of all, the answer for the Twitter, it really depends who wrote the tweet. So there are people who would tweet buy, and I would buy. And it would probably be
like John McAfee, is he one of those?
You'd be surprised. So due diligence is definitely important. It's important in everything you do with your money at any time. Whether it's practical or not in this environment is another question. You might end up being better off following the intelligence of the crowd, which really is one of the underpinning concepts for decentralization and the new economy. If you're doing due diligence, you have to look at the people, you have to look at the business model, and you have to look at the technology. And you have to figure out if you're the right person to do those, and if you're not, you need to get together with other people who understand, and then form groups where people have expertise, and then, again, go back to the intelligence of the crowd really is the best way, I think, to approach due diligence in this environment.
So I'm glad you said that, and we'll definitely dig into it, because it all sounds amazing in theory, but in reality, there's some real obstacles. Eugene, guys, Eugene's very shy. He warned me before we got onto stage that he's very shy. So maybe just a big round of applause for Eugene.
Thank you, Ron. I'm Eugene from Blockcrafters. We are Seoul and San Francisco-based accelerator and crypto fund. My role at Blockcrafters is more about like technical due diligence. So I think there are three main area for due diligence. First is product and business model. Second is operation, and third is about technology. And I'm personally more focused on technology and technical side. So I think blockchain is a technical product. So engineers should sit on the first row to be successful in this area, and the technology and the product should be really focused. So when I do the due diligence, I usually do more than a couple of calls with the engine lead of the team, and then if possible, I ask access to GitHub repository. So I read over the codes and their commit history and how they work really daily basis. So can I add one example that I did?
We're gonna get there. So this is just the quick intros. For someone who's shy, you did very well. Now you just want to hug the stage. Charles, over to you. Just a quick intro.
Hey, my name is Charles. I basically am the founder and CEO of Cointopia. For the ones that don't know, we basically are a global token offering platform. We provide access to very selective, high-profile, I wouldn't even say ICO, it's more so token projects, to almost close to now 175,000 accredited investors. Pretty proud about that. And so our focus really, and what differentiates us, is we focus in Asia. So essentially we provide deal flow back and forth, but we focus on extrapolating it from Asia. And my network personally is really heavily networked in Asia. And so outside of the US, as a lot of people know, regulatory is fairly unclear. But until then, our focus is there, and globally speaking. So that's us.
Okay, so now that we've got the intros out of the way, let's get down to business. And specifically, let's talk about 2017, which was the year of the ICO and the year of the frenzy. Put your hands up if you really believe that you did a real good due diligence in the hype of 2017 before investing in companies. Be honest, put your hands up. And for the audience, I want to hear your thing as well. Let me give you the scenario, just so we're all in the same scenario. Your friends phone you and tell you that there's this ICO or this token sale called Icon. You've never heard of Icon before. They tell you you've got 24 hours to send the ETH, otherwise you're not getting in. And you've got 24 hours to do a due diligence. How many of you actually really did any kind of due diligence, even going to look up the tweets? Put your hands up. You can be honest, this is a safe space. Oh, there we go. So, as Shinhei said yesterday, she said something yesterday. She said, the one advantage that we have now in the bear market is that we have much more time to analyze deals because the frenzy's gone. And in this market, a lot of you talk about evaluating the teams, evaluating the technology, evaluating the legal. Let's go through those things step by step. So let's start off with evaluation of the teams. You get a white paper, you see the teams. Under the teams, you've got PhD, you've got etc., etc., etc. What else do you do to get to know the team? And let's separate the discussion into two things. Most of you guys here are fund managers, and your average ticket size is quite large and worth the time that it costs you to do a due diligence. But for some members here in the audience, the average ticket size is 100 ETH or 200 ETH. And that's $20,000 or whatever it is. And they can't spend hours and hours and hours going to meet with a team, flying around the world, etc., etc. So let's talk about how you guys do a due diligence and how you recommend that the people here in the audience can leverage and do something similar without having all the resources in mind. Who wants to open the floor here? Gene, you had so much to say.
Not much, but I'm going to start. So at Blockcrafters, we just start by asking the references to people that we know in the market, and then if we find that people are really legit, then we ask them to come to our office. So we have kind of IR day bi-weekly. So we see them in person and we ask them to present something that helps. So we, in a personal meeting, we ask a lot of questions to the core member of the team.
What's your average check size at Blockcrafters?
It depends. Like our
This is a safe space. This is a safe space. Everything here stays in here.
Like from several hundred ether to several thousand ether.
So, are you saying that when you invest several hundred ether in a project, you never invest in a project unless you meet the team personally?
With Hinge, we invested by having a phone call, but without any personal interaction, we don't invest.
And Jen, I see you really have something to say, so let's say it.
So for us, for me, especially I was running a VC fund previously, so I always have the private market investor mindset. And so for VC, it's very important to have the pattern recognition mindset, right? So a lot of times, so there's one partner from Sequoia was talking about, be as a good investor is not because you have entrepreneurial experiences, because you have been long enough, and then you can identify there's a lot of let's say short-term behavior people, long-term behavior people, and then you can also identify from what kind of people they hang out with and what kind of environment they grew up and what kind of working experience and education experience. So because I think a lot about especially for education, it's actually really interesting that we can find out most of the human decisions come from the subconscious. And then where does the subconscious come from? It's actually come from your experience. So if you spend a lot of time with the right group of people, and then you can actually make better decisions.
So are you saying that when you get a team, you actually really, I don't want to use the word psychoanalyze the team, but get into the psyche of the team and go and look at who their friends are and spend time with their friends?
Yes, so we're efficiency driven, right? So if we already know the founder, and if we have familiar friends that knows the founder, so we tend to trust them. And then if we don't familiar with them at all, and then it's a really good company, so we'll definitely spend more time with the founder. But also sometimes we'll do due diligence calls, right? So they're saying, oh, we already have customer, and then what's their customer think about them? Because a lot of customers are gonna be like, yeah, we actually will never pay. And then also their past working experience people and their so mostly working relationship.
So this is a safe space, and I really want you guys to be honest, because I think what we appreciate here on this panel is your honesty, not what we think we want to achieve. How many of you have ever done a criminal check on every single one of the photos that are on the white paper? And I'm going to be very honest with you guys. In the mania of 2017, 2018, in fact in February 2018, I invested a lot of my personal cash behind an amazing team with an amazing product. I found out 2 months ago, that the name of the people and the photos, even though I'd met the people, I sat in a room with them, I flew to New York to meet them 3 or 4 times. That name doesn't actually exist. Now, again, the question is, how many of you actually run a criminal check, number one? And number two, I've seen more Stanford PhDs than Stanford has issued PhDs since the beginning of Stanford. How many of you actually verify the qualifications that these people have?
So I'll chime in here. So we basically work through broker-dealer. And so we're required to actually run a criminal background check on every single one of the executives on the team. Coming from a private investor's background, I have a $10 million private fund of my own. And I would say I don't feel, personally being in space for the past couple of years, actively, not just as a trader or what have you, that you can't really necessarily apply the standard VC model to this space. My former company I created was a medical breathalyzer, and I come from consumer medical devices. So everyone in that space was super top-notch, just well pedigreed, very clean, kind of white collar. and you can accept that current kind of certain level of pedigree. But in this space, I'll be frank with you, I mean, we've probably now audited almost 100 projects and probably 5 new. And even within those 5, one of them, I won't name the project, but we pulled out because last minute, the Harvard quote-unquote founder CEO pulled a dirty multi-offering across multiple syndicate groups. We didn't want to be affiliated with it. But I would say that, long story short, is even when you run your due diligence and it runs clean and you do the background checks, that's not enough. And even if it's a blockchain applicable product, that's okay. But I've known and I've seen the founders hold dirty moves because I feel they see like there's a clear opportunity for a cash grab, and I've seen them go for it, and you got to retract back out of those deals because we don't back those deals.
And there's no legal obligation on them not to pull a dirty move because you've literally signed a document that says that they can do anything they want with no implications.
100%.
So I've done investment banking for 30 years in emerging markets. About 300 public
So you started when you were 3?
Started out in 1987. Yeah. So all those deals went through all the broker-dealer and New York Stock Exchange vetting, and there's very low correlation between the due diligence activity and whether you make money in an opportunity. So I think you have to look at why you're doing the due diligence and whether these things actually matter. I think that the world has changed, right? And now these deals are being, especially the early deals in the blockchain space, have been done by much younger, inexperienced people, somewhat idealistic, So I found that I've lost a lot more money in great deals with fantastic management and unbelievable vision, right, than I've lost in scams.
So are you saying that we shouldn't be doing due diligence?
I'm saying that due diligence probably has to change for the new world.
And when you say change, could you tell us how you would change it?
So first of all, I do think it's important to talk to the people who are in the companies. I think that nothing really beats understanding someone's intent and looking in their eye and figuring out whether they're really passionate about what they're trying to solve or not.
I hear you, but that's a very good ideological approach. The problem is that the average investor who's sitting here in this room gets a white paper, has a whole lot of people. There's a website that says for any questions, it's info@something.io, and you can never get hold of anyone. Does that preclude the for funds that are being approached?
I don't think that's true, though. I mean, I think that this new world is much flatter. I mean, if I called IBM and tried to get to the CEO, I'm never getting it, right? But if I want to call Neo or I want to call Binance, right, I can get pretty close. I can find someone who's important.
As an average investor investing 100,
go on Telegram, go on WeChat. If you really want to talk to someone who knows, do your work and find the person. The world is flat right now. The degree of separation between you and almost anyone else has been reduced by logarithmic amounts over the last couple of years. And so get on, get there and use it. You're not some guy sitting with a telephone, who has no internet, who doesn't have any idea how to market. Go in there and look and try and figure it out. I think that also you have to use other tools. If it is unrealistic to think that you're going to get, maybe you can't read code, right? That's probably a big barrier. So I would again go back to the intelligence of the crowd. Find those groups that have a good track record of assessing the type of opportunities that you like to assess. Find people who you can then trust, who are trusted nodes in the network, and use them and leverage them to find other information that you're trying to get, which has a high degree of trust attached to it. That's how it goes.
You haven't said very much. I know you've analyzed probably more projects than everybody on the stage combined, so maybe you can give us some of your wisdom.
Yeah, sure. I guess these are all really interesting information. So I'm not only investing, I'm also advising the project. So I guess and then the project I advise and invest is in the crypto market cap wise is in the 30. So I guess it's quite pretty good project I invested in the advice. So I guess I don't think I think that I did a good due diligence. So maybe let me share my personal experience around the due diligence. So I think it's a really not also complain about the time, given time or how limited time we have. And then so let's say I think it's really important for as investor to decide making a decision on the how disciplined about your due diligence. You shouldn't be affected by all this hype and FOMO because you need to make a decision how much information you're gonna get, and then you make a decision on your investment decision. So you feel like you are not, you don't understand the project enough, then you should make a decision of investment. That's what. But last year, I usually do the due diligence, and then I also spend quite a lot of time with the team, and then I make a decision of the investment. For example, for me, usually I come in as an advisor, so I spend at least 3 months in actually doing a lot of things, and so I know everything. I can make a decision. So it's very unfair. But one moment I also started to set by all this craziness, and so the made up two investment which I didn't know enough, but I made an investment. But it wasn't really good at the end at all. So I think it's really
What were they?
something and something. Yeah, and I think it's that. So two investor I really like. They usually go all the way back to even the client of the project, and then they do the interview with the clients about is this project what you work on, and then how much you work on, and what is the feedback, and then every single client. I think that's really important. So you need to make a decision about how much time you will spend, how much information you want to get, and then how many questions answered, and then you make a decision or not. I think that your own discipline, the due diligence, table, I guess is fine.
Are there any ICO due diligence platforms that, as a panel here today, we actually trust? So do you have, and each one here may have their own ideas, but for people who don't have as much time as Yusuf does to become an advisor, travel around the world, ask the right questions, meet the teams, etc., are there any resource centers that here, as a panel, we can say, we trust their reports, we trust their methodologies, etc.?
I'm in the space, I'll comment. Quite frankly, I think there's zero, and I can speak that. I'm the CEO of one now. There's just so much risk in this space, and I won't name names, but even talk about the largest. I wouldn't say largest now, but the first token offering listing platform in the space. Most people probably know who it is. One of, if not the largest project, if the largest project is falling apart. I won't name names, but like. It's just, there's so many moving parts, there's so many variables, and I don't think it just comes down to the team. It comes down to the execution, the technology. This entire space is moving so fast. None of us have been in this for more than a couple of years max. And I feel that, like software, does, we ship fast, we fail fast. But if you even look at Ethereum as a platform, like I think if you look at raise of hands of who thinks it's going to make it through, it's not. I think we all believe that it's going to be a newer platform that can truly scale. So I think we're still in experimental mode. And having said that, if you look at tying back to these listing platforms or just token platforms and resource centers, we're essentially picks and shovels. We're enablers. That's what we are. We're trying to help move the space forward, but we're not necessarily the ones that perform the actual work.
So ICO platforms, are they not conflicted? Are they not, because on the one hand, they want to get as many ICOs on the platform and sell and get the ICOs to raise as much money and as much tokens. On the other hand, they're publishing research and etc. I mean, is there no conflict of interest there?
That's a great point. There isn't one ICO platform, I would just say a token offering platform in this case, out there right now that is a full-on resource center, meaning providing kind of the crypto briefings, the due diligence, the accredited investor base, and that whole framework, right? There's not one out there yet.
It's the same as the problem that we have on YouTube, because on YouTube you get all these credible YouTubers who are being paid hundreds and thousands of tokens by the ICOs to tell everyone that it's a great project. I think our good friend, and I'm not sure if he's here, but John McAfee is I think the poster child of that.
Yeah, I mean, I think our jobs, or the picks and shovels and the platform's jobs, is to basically help propagate the quality projects and let the public, let the retail investors, the private investors, the institutional investors at this point do their due diligence, and they make the ultimate decision at the end of the day. But essentially, we as enablers should bring quality projects to the surface and not try to stuff their pockets. I mean, if you think about it, a lot of broker dealers, they're incentivized by a 5% fee normally.
Yeah, I hear you, but the problem that I find is that ultimately people get conflicted and they say, on one hand, we want to bring the best projects, but on the other hand, we may have to say no to 10 other projects.
So So again, one of the beauties of the decentralized economy is the idea that it's much less expensive now to create new businesses. And if there is demand for independent research for ICOs, I'm sure some intelligent person in this room or elsewhere will come up with a service that's then available, and then people will list what his ethics are and the way he structured his business and whether you find that's conflict or not, and then offer that for a service. I mean, that's exactly the beauty of what we have here.
A lot of time on broadly speaking about ICO due diligence and talking about the teams. Let's talk about a side that's probably as important, and that's the technical side of ICOs. Now, generally when we look at an ICO, and specifically a good ICO, they're breaking technical boundaries. They're doing stuff that we haven't been able to do in the past. Specifically, if we look at the protocols, you've got Ethereum which hasn't been able to scale, and I think I've seen about 50 white papers of protocols that say that they can easily solve the problem that Ethereum has with scaling using some kind of sharding. When you look at something like that, how do you decide technically whether this thing is going to work? Especially given the fact that no one's ever been there. And Eugene, I'm looking at you because you're the technical guy.
So when I see those kind of projects that I can solve the trilemma of the Ethereum or other blockchain, I first see their career path first. So I want to understand that this person has the track record that this guy say I can solve this problem. So this guy really studied in this area very well. So if I cannot find any clue from his or her career path, then I just pass. But if I can find a little bit of the clue from the career path, then I ask interview. So it's not like interview, it's about discussion. So I ask why do you think you can solve that? And if you have any kind of MVP or any paper that have the concept, then I read it and I share with my partners and we discuss really seriously. But so far I couldn't find any project like that.
You still see you, but you want to take the mic?
Yeah, I guess I feel a little bit bad, my answer was too spoiled. But my message I wanted to say is, I think the time and resource, information is always most important in terms of due diligence. So you actually need to extend the time. Coming back to your question, then for the technical due diligence for the project, and then you can receive the deals, but at the same time, if you actually more actively sourcing the deals, and then to find the project earlier than other people, and then you have more time to do tech due diligence. Especially the tech project, it's really much easier than actually the business project sometimes, because if you have a technical roadmap and then all the entire map in your mind, and then which technology should come next because we have a certain bottleneck, and then you can actually source that project specifically, so you actually can find a really good project at the same time under so much time for the due diligence.
So there's there's some really smart people out there running funds who are trying to focus on serial entrepreneurs who've had 2 or 3 successes prior to the one they focus on, which I think is being agreed to by people up here.
How many successes did Vitalik have before Ethereum?
Again, I think that you need that. There's no one rule that's going to fit for everything. People looking to make larger investments in slightly later stage of these token deals, because now that's where it's going for the transactions. You do have the opportunity to select those people, those deals that have serial entrepreneurs. And I think that leads to a second part, which is you're never going to be able to cover for everything in any system that you set up. But I do think it makes sense to have some sense of orthodoxy about how you approach and try and be consistent, so that you don't make different mistakes in different situations and end up with 0 in your portfolio. Or if you have a consistent way to methodologically approach it, you can be wrong, but you'll be wrong about individual things and right about others, and give you a better chance of a successful portfolio.
Okay, so we have a little bit of time left, even though I am ignoring this clock, so we'll get through what we want to get through. What you guys have said has been invaluable, and specifically if you are a big company with a big ticket size and a lot of resources. You've spoken about meeting and having conference calls with the team, meeting them face to face. You've talked about flying around the world and getting involved in the tech and advising the projects.
I want to make this more practical for the retail investor. Now we have two options. On the one hand, you can say to the retail investor, if you invest in ICOs, it's as good as throwing darts, and some will work and some won't work. That's the one option. On the other hand, we could perhaps give the home investor some practical tips in conducting some kind of due diligence before they invest in an ICO. And to summarize this panel, what I want from you guys is, and really please try and put yourself in the seats of the people here that are sitting in the crowd that don't have the same access that we have to the teams, that don't have the same access that we have to the technical skills and can understand the code and can brainstorm the technical solutions off a panel of professors. If you're an investor at home and you've got 100 ETH to invest, what do you recommend these investors do to safeguard themselves and to at least do some kind of due diligence? And please, if I may ask again, keep it practical so that people can walk away here with like a to-do list before they invest in something.
Yeah, it's actually pretty efficient that if you can do due diligence on their existing investor list, because if you already have your judgment on the existing investor list that what's their portfolio perform good and bad, and then you can actually judge the performance of this project a little bit. So this is actually come from my experience as well, and then it's always worked out.
I would say that one of the things you should do is you look at the team and you look at it and you say, does this project need all the team members and all the skills that are on this team? So I'm a CFO of a banking system. So the first thing I did is before I joined was, is there a banker on the team? Is there a tech guy who's built a bank on the team? And is there a person who knows how to go to market and after banking clients? So it's not very hard to do. You can, if the company is trying to achieve a certain goal, are the right people on the team trying to achieve that goal for them?
There are a lot of ICO projects in the world, and like most of them doesn't have, like, you cannot access the information. So just past them, there are very few projects that you can have some access on, like YouTube or GitHub or their one homepage. They have some information. For example, DAF Network is like they are interesting. They are from Israel. I didn't meet them personally, but I could see how they work by their YouTube uploaded video. So they upload or the like daily stand-up video on their product team. So that kind of project, you can access how they are working on a daily basis. So find the project that you can access the information, then invest in them if you trust them.
I would say start with don't invest or bet more than you can afford to lose. And don't make long shot bets hoping that one investment or one button push is going to create a home run for you. Pick things that you're passionate about, that you're interested in, that you have some level of knowledge that you can do some betting on, and try and concentrate your knowledge so you can leverage kind of the information that you learn, that you gather, and the relationships that you form, and create a portfolio of a couple of investments to give yourself a chance to hit one or two that have significant returns.
Charles, any final words?
I'm biased naturally, but try to go to one of the very few, let's say, credible token offering platforms in the space. Cointopia, we're just one of them. CoinList is another. I think TokenSoft is another. But there's a couple in the space that are pretty credible. But I feel it helps the process and might cut down time. But I would overlap with a lot of what was said here on stage today as well.
Great, and I think that is all we have time for. I think we are about 10 minutes over time, so thank you very, very much, and thank you.
Thank you.
All right. Thank you to our panel experts. It's truly amazing how many experts we have from around the world speaking today. I hope you learned something fantastic. You're definitely going to learn something in this next talk. We have a very important speaker tonight, Bing Lin of the Supernode community is going to tell us how they're revolutionizing venture funding. Welcome, Bing.
Hello everyone, this is Bing Ling. I'm from Hong Kong, and it's a pleasure to be here. Before I start to introduce my program, I want to give you some background about why I came up with this venture idea. In 2010, I helped a good friend of mine who was running one of the largest e-commerce portal in shoes category called S.cn to raise the first venture funding from outside parties. Before that, actually, he couldn't have good contact in the incubation or venture capital world, and he basically put all his savings into this venture. The business was very, very successful, and they are one of the top 3 players in that category in China. He felt horrible because his whole family future, financial future is all dependent on this venture, and he just could not get good funding. A few VCs give him a very low number, and he feels it's very, very unfair. So he tapped into my help as a hedge fund manager. He thinks I know a few things about venture, the funding, the capital market. So as a good friend, I agreed to help. I spent about 4 months draft the pitch book. I used my own personal network to reach out to about 30 VCs, and eventually we got about 7 term sheets. We spent a lot of time with those venture capitalists over the phone, negotiate term and do a due diligence, just tons of work. And eventually, very lucky for them, Alibaba eventually at the last minute came in and to basically secure a deal. And during that process, this industry, I feel that all depending on relationship, the information efficiency is very, very low. The price discovery is very, very inefficient. And at the end of the day, everyone feel quite exhausted. And at the end of the day, actually, I lost a good friend of mine who didn't get a deal. He kind of feel that the friendship should help him to secure a deal. Overall, the process just very, very inefficient. So I also always feel that, there got to be a better way for good entrepreneurs to have access to funding, and also there got to be a better way for venture capitalists to have access to global deal without running around to do the scouting, to secure a deal, to do the term negotiation. And in addition, I also fully understand it was so difficult to generate good return as a lay participant in this venture funding industry. And I couldn't find a solution until blockchain technology coming into place, especially the POS protocol come to place. And I feel that actually there could be a great solution for not just the venture funding, it could be a great solution for the asset management as a whole. I think that in the ideal world, the asset management information should be quite transparent. The decision-making process should be quite streamlined. The GP-LP relationship should be dynamic instead of a static one. I think that the price discovery should be quite efficient as well. And that's why we create this program as the sponsor team. It's called Supernode Community, and which right now we are in the advanced stage of launching the project and closing the funding, and have beta version come out next quarter. And this idea is very simple. We build the whole system based on EOS system. We have multiple modules for community, for decision making, for voting. And in addition, we also build such as the service marketplace and unicorn circle for syndicated funding. We actually think this program will be a very strong, interesting testing field to change the future asset management industry, where the entrepreneurs basically can tap into the global network of VCs, and not only the funding, also the service. The VC can provide a service through this, and also other service provider can provide a service through this network. And the VCs actually, or the fund managers can have much greater access to global deal flow, and also can tap into other experts' knowledge and also the community wisdom to make a better decision. And the 21 leading supernode, which will be voted by the community, will collectively make decisions in terms of the asset allocation. And also it gives the lay participant a great way to tap into this program for liquidity and also for information. We have multi-layers of membership for lay participants, where depending on the staking, they can have different degree of information access. We think what is needed is a founding team like us with talents from different fields to build this ecosystem for the community. And that's why we pull in a very strong team. The team members have very strong background from multiple fields, including the asset management field, including such as tiger funds, such as the leading hedge fund and VC funds, such as KKR, Sequoia, and also from operations side, we have the team member who've coming from the largest investment banks, such as Deutsche Bank, Goldman, and also from leading consulting firm, such as Bank Consulting, Essential, etc. And also from technical team, we also have people from Google, Yahoo, Facebook, all those leading platforms. And we want to create this platform not just for ourselves. It is a truly decentralized model. The funding team is just one of the supernode. We hope that we'll continue to be a supernode upon the community voting. But at the end of the day, we are just one of the supernodes. There are 21 supernodes who are collectively making decisions within this model. Will basically gather the best talent in the industry for the deal sourcing, the vetting of project, and to make better decisions for participants there. We are going to become a global network. We are not going to be controlling this supernode community by ourselves. We are going to share this program with the community. So it's very exciting for me to come here to share this platform with the community. And we'd like you to follow us in our website, which is very simple, snct.io. snct.io. It stands for Supernode Community Token.io. snct.io. So we hope that we will get very strong support from the community, and together, I think we are building something that's quite interesting. We think that will change the industry, the asset management industry in the long run, and we think that will be an interesting starting point by introducing this project to the group. Thank you so much for your time. Thank you so much.
All right, thank you, Bing. And he said if you can't remember his name, just think of Bing Crosby. He doesn't dance, but he might sing for you in the VIP room if you ask nicely. All right, the future of exchanges is up next. We have our favorite panel host, CNBC's Crypto Trader Show host, Crypto Man Ran is back, and he's joined by Andrew Wong of IDCM, John Choi of the Ethereum Foundation, Paolo D'Alberti of Bexham, and Monty Metzger from LCX Liechtenstein. Welcome to the stage, gentlemen.
Are we missing a panelist? Are we missing someone? Should we? Missing someone?
So it's just the two of you, just the three of us. Yeah. So I think exchanges are a topic that we could talk for much more than the 25 minutes that they've allocated to us. I think specifically we've seen the rise of centralized exchanges. We've had this promise of decentralized exchanges coming in. We've got this whole dilemma about regulated and unregulated exchanges. And then we've got China, who's thrown in this new curveball into exchanges, which is the transaction money exchanges. So I think with all of those things, we could sit here and talk about all of those things forever. So I think I'm going to start off this panel by asking you guys a question. If you could invest in one type of exchange, so you had a check, you could only write one check to one type of exchange, and your holding period is a 5-year holding period. So you can't sell, whatever you buy, you can't sell for 5 years. Where are you putting your money? And you can't say in your own exchange, okay?
Yeah. So it's a very easy answer. So I spoke about that with the Prime Minister of Liechtenstein, similar question. And I think that the next growth wave of the industry will come from institutional grade exchanges, meaning able to trade all kinds of crypto assets, including security tokens. So with these security token exchanges, we are looking in like building key infrastructure, not only for 5 years, but for the next 50 years probably. And it will disrupt the whole financial industry as we know it.
Okay, so we are going to get to your answer. And did you hear the answer? Pablo, did you actually hear the answer or not?
No, sorry.
Okay, so the question is, and you can think about it for a second, the question is, you've got decentralized exchanges, centralized exchanges, transaction mining exchanges, and a whole lot of other exchanges. The question is, if you could write one check, you only had one check, and you had to invest in an exchange, and you couldn't sell for 5 years, what exchange would you write the check for? Okay, let's talk about the securities tokens exchanges, because there's a lot of questions that need to be asked about what that statement actually means. What is a security token exchange? Let's talk about the nuts and bolts of it. Is it an exchange that can trade an ERC20 type token or an ERC721 type token? What is a securities exchange? What are you actually investing in? T0 raised 100 and who knows how much the real number is, but they raised a lot of money. You've had a whole lot of other money being raised. What is a securities token exchange? What makes it different from Binance?
Yeah, so what is a security token exchange? Meaning, like, what's a security token is probably what could be traded over there is part of the question. And I think what the industry needs is clarity and transparency in terms of like what is actually this kind of token, this kind of token. So there is something in Liechtenstein happening which is called the Blockchain Act. So that's the new set of laws, a new framework being developed since 1.5 years by the government and had been now bring to light in June and will hopefully pass end of this year or early next year. And they are categorizing tokens. So there is a clear like a utility token, a payment token, and a security token. And they also define a token as being a kind of a container. So it could be filled up with different things. You could basically take an equity stake or part of a derivative or like any real estate share and put it into the container which is represented by the token. So the concept is very interesting. And then if you think about what is a security token, then we can like talk about the exchange and what it actually does.
But I mean, if I strip what you're saying, a token is a token is a token. It's a token that can be transferred across this technology which we call the blockchain. And when you say a securities token exchange, are you saying an exchange which is built to be able to transfer blockchain tokens, which, by the way, in a certain jurisdiction is licensed to trade this thing called securities?
Well, yeah. Sorry, if I could also jump in. You say a token is a token is a token, but at the end of the day, it doesn't matter what we call a token if the thing behaves differently. So I can very much understand this argument that to have a securities token exchange, a place where, okay, we have these tokens which behave in a very specific way that is generally considered to be a security.
And that behavior is defined by regulation?
At this moment, it's the American legislation that is very much defining that. But question is, yeah, I mean, we can always ask, should we just follow the American legislation, or are there more legislations who also agree how a security behaves? and then do based on more than just one legislation.
So you're saying that you're going to write your check to a exchange that is built that allows the transfer of blockchain tokens, and by the way has a securities license regulation, a regulated securities license.
So my answer would be a security token exchange.
I would have exactly the same answer. And I think I was speaking of this with Monty earlier backstage, and it's funny you asked that question to start because I'm almost 99% convinced. If I could write to your question one check to any kind of a exchange, it would be towards the securities exchange, but everything's going towards the STO path, very, very rightfully so. We're moving into a more kind of regulated environment as any kind of emerging asset class, let alone cryptocurrency, kind of moves towards. So that's the thing to your first question. And to your second thing around ERC20 or whatever kind of thing runs on the exchange, I think we're looking at different types of protocols. So if you look at Polymath and what they've done, and looking at the ST20 kind of standards, to that I think we come to a new kind of establishment. What is a securities token offering or exchange? It's something that would be compliant, and the proprietary technology that goes into it is all going to be around what the SEC has come to agreement with, or kind of other first movers have already come up with, and has precedence rather, that they are allowed to kind of subsist or exist within the regulatory framework and pass how we test and everything like that for normal securities.
Are we under the same assumption here that we think that very soon, let's not say very soon, but soon enough, all securities will be on the blockchain? Are we saying that in 10 years' time there won't be a single type of security that is not traded on the blockchain?
I think that's a good statement. I don't know if it will be in 10 years, but our assumption is really that we are still at the early beginning. There had been kind of a proof of concept with utility tokens and the kind of the first wave of the industry, but the next wave will be much, much bigger, driven to do like any financial asset being tokenized.
Okay, so I really don't want to spend the rest of this discussion talking about securities tokens, because I've been talking about securities tokens for the last 6 months, and I think we get the gist of it. I want to tap on this topic of transaction mining. And first of all, does everyone here in the audience understand how transaction mining actually works? Yes, no? Hands up if you don't. Does everyone on the panel understand how transaction mining works? Okay, so transaction mining works by returning the fees that you paid to trade on the exchange back to the users. So for example, if you're trading Bitcoin and you have to pay $100 fees for trading Bitcoin, you pay the $100 fees back, but you get a certain percentage of that money back in the tokens of the exchange. Now the tokens of the exchange give you certain rights. Some of these tokens give you the right to a percentage of the revenue generated by the exchange. Some of these tokens give you the right to allocate the next token to be put onto the exchange. Some of them give you general voting rights. Essentially what they're doing is they're giving back the exchange to the people that traded on the exchange. So the more you trade, the more tokens get mined, the more tokens get given to you, and the more tokens you own, the more rights you have in the exchange. These tokens have seen phenomenal returns. I mean, Fcoin, which was the poster child of all of this, had phenomenal returns. But since then, there's been a whole lot of others. There's BGoGo, there's CoinPark, there's many other transaction mining exchanges. By giving back the revenues of the exchange to the community, is this a sustainable model?
Well, it's hard to say at this moment. So it's right at the beginning. So it's how will it behave when more people get into it? Because one thing is when you have the real core fans who are super excited with whatever idea you came with. Another thing is when all of a sudden it becomes so popular that you have any kind of person coming in and just trying to break the model.
So how the transaction mining systems work is they only mine a certain number of tokens. It's a finite number of tokens, which effectively means the people that trade on the exchange first get the majority of the tokens, and then they can sell the tokens in the open market. I've seen some transaction mining exchanges give 105% of the money back, and I've seen that those same type of exchanges buy back the tokens at 105% daily, which means that they really are putting their money where their mouth is. Now, again, do we think that that model is a sustainable model?
from my perspective, I don't think it's a sustainable model. I mean, you look at the F-coin model and you look at other variants that have come out, especially from our space in Asia, what we've seen a lot of the copycats come out. It's more a marketing tool and gimmick, in my personal opinion. So to your question, I don't think it is a sustainable model.
You don't think that a transaction mining exchange is the answer to getting the community to trade on the exchange that creates that network effect? Because I know that if I get revenues back every day by virtue of the fact that I hold the token, I'm going to get all my friends to trade on the same exchange, right?
Correct. No, I completely agree. The angle I'm coming from is more like, the way I think about it is this, right? Ultimately, in this current landscape, it may work because everyone's so focused on the trading aspect of it. But like anyone also knows, if you're looking at cryptocurrencies as a point of technology, if there's no real adoption for it and people are just trying to play it like a gimmick, it's not a stable model.
Let's work under the assumption that we're working under the assumption that cryptocurrency will have adoption. We have to start at that starting point. And then the question is, what is the future of exchanges? And is a transaction mining exchange a good investment? Should we be moving all our trading to transaction mining exchanges so we can start getting the tokens because we know about it early enough?
Yeah, no, I don't think so. I also have to agree it's not a sustainable model. It's always good to integrate the communities and incentivize them. But I think where the future of the change is heading is not about incentivizing the community more, but rather increase the community and have like several ways of joining them. That could be driven by either institutional investors coming in or creating substantial values for other people. Like you see where inflation is very high, you always see jumps in where people flee into cryptocurrencies. That's where I see the bigger opportunities to make that happen. And talking about incentivizing the community something, it's just like a minor topic for me. If you think in 5 years, it might be gimmick or whatever, but it's not.
So I'm going to challenge you on that, and the reason is because I was initially a very big skeptic of transaction mining exchanges. When I met the guys from F-Coin and I met the guys from Bigogo, I said, I mean, this is a fraud. This is blatantly a fraud. I then changed my tune to say it's actually not a fraud, but it's a very unsustainable model because you have an exchange that actually effectively has no revenues because all the revenues are paid back to the users. But as I dug more into the model, I actually think that the transaction mining concept around exchanges has done for exchanges what the utility token should do for networks. And it creates a community effect and a network effect that are second to none. And it puts the ownership of the exchange back in the hands of the community that are using it like a protocol. And for me, it seems like it's a very logical progression. And on top of that, I've done the mathematics, and the mathematics actually do work.
From my point, I mean, first thing that would come to my mind with a transaction mining model where especially you get 105% is that I would just create a bot to do fake transactions all the time and make money out of that. And then, of course, then it looks like, wow, this exchange, it's working so well. People are there trading. There's a lot of what's the word? Capital, or there's a lot of liquidity going on. But as soon as it would hit some cap, as soon as there would be some restrictions, I would stop and go somewhere else. Like if I would really think just economically speaking, what would be my best economic interest, this is how I would behave. And this is what am I, from hearing this about these models, I mean, you say you've looked at the math and that it could work. I could consider a 10-20% return on the transactions and then making the whole ecosystem, maybe, but one where we give more than
it's only for a certain period of time, and of course the graph that equalizes. I think we are running a little bit short on time, and I don't want to spend the whole discussion on transaction mining. I think the takeout for me certainly was the more research I did into the concept, the more actually I went from being an absolute skeptic, saying this is I'll never forget, I stood in front of one of the guys from F-Coin and I said, you guys are blatant scammers, and they actually weren't. They're actually running a concept, or they're pioneering a concept that might work. I do want to talk about the other category of exchanges, which is the decentralized exchanges. So last year, decentralized exchanges were the flavor of the month. Why? Because the centralized exchanges were getting hacked. We had a whole lot of big hacks in a row, and everyone said, we don't want to store our money on the centralized exchanges, we'd rather trade from wallet to wallet. and we had a couple of decentralized exchanges start being developed. And I haven't heard about a decentralized exchange forever. I mean, I've been trying to see where the volume is. I see IDEX is doing okay, but what is the future of these decentralized exchanges? Does the community really want to store their tokens in a wallet and match them peer-to-peer? Or are we going to just move to a world where we have centralized exchanges which are insured? In other words, if they do get robbed, if they do get hacked, then there's insurance, like banks today.
I think my perspective in that is you're right. I think we move towards a model where it becomes more centralized, right? Unfortunately, just because of the liquidity issue. That liquidity issue is that I'm not sure if you've ever tried trading in a decentralized thing. I've tried it several times, and it's very frustrating from a user point of view to actually be able to get any decent liquidity to do any kind of trades, even on the IDEX side.
Because there's no adoption and because there's no volume. Exactly. But in that spirit, you have applications like Total, T-O-T-L-E, and Total basically allows you to buy with one button to buy across all decentralized exchanges. So it's an aggregator of liquidity. So it's a function of liquidity, which is a function of adoption of decentralized exchanges. And I think the question that I'm asking is, does the user want his tokens to live in his own wallet and not to live on the exchange? Or is he going to be comfortable with his tokens living on an exchange and being insured? I want to add one caveat to that. Let's talk about the institutional investor. Let's talk about the day when the big institutions get onto blockchain. Are they going to want to trade in a centralized insured exchange? Or are they going to want to manage their own wallets and trade peer-to-peer?
Well, I think that this is, it's one of the questions, but there's also a whole other bunch of questions in it. The fact about customer service, about ease of access. These are all things where right now the decentralized exchanges have a harder time than the standard centralized ones, which is actually one of the things that we at Bexam are trying to tackle. This is why we're going for what we call hybrid exchange, a hybrid solution where we try to take positive elements both from centralized and decentralized exchanges as sort of a halfway, something that would bring the security from decentralized trading, but not making it so inaccessible for new traders.
So recap for me, what are the advantages of a decentralized exchange?
Well, for sure you have the security. A decentralized exchange is much harder to hack than a centralized one.
Okay, let's assume for now that we've got insurance, that all centralized exchanges are going to be insured. What are the advantages of a decentralized exchange?
I think the question here is completely right. So, but sometimes we have to take a step back and see like how the industry evolves. And the concept of a decentralized exchange gives a lot of power to the ones who are trading with it, so they can be their own kind of custodian service. I've been running a venture fund in the past 5 years, and I know that you're actually, as an institutional investor, sometimes you're not even allowed to do that on your own. So you need a service, a custodian service, to do that for you. And if you have an exchange, for example, who has it as a package, it becomes more interesting. And then they actually have to have an insurance. They have to go that path. For an institutional investor, it's not a question. But with entrepreneurship and the opportunities at the right time, there had been also social networks being developed early in the 90s, but the internet was not ready for that. And it's the same here. I think the concept of a decentralized exchange is great, but probably it's too early for had like massive adoption.
So I'm challenging the viability of decentralized exchanges as a whole. And let me take you a few years forward. JP Morgan has a custodian service. It's called Jamie Dimon's Bitcoin Custodian Service. And they have a trading desk, which is called Jamie Dimon's Bitcoin Trading Desk. And the question is whether the custodian, because they own the custodian and they own the trading desk, are they going to trade this on a decentralized exchange, or are they going to go and deposit their money into a centralized exchange? And I think that what I'm trying to get to here is there a need for peer-to-peer decentralized exchanges when we solve the insurance issues?
So the investors go there where liquidity is. So that's what's...
Let's assume there's uptake and let's assume there's liquidity.
Yeah. I don't think there's a need. for that. At least not now. And also with the institutional perspective, investors we speak to, and my own perspective is they're not even allowed with all the hurdles they are facing. They are all super interested to go on crypto assets, but they're facing all these regulatory issues. They're like barriers to entry for them. So to get them down, it's much easier to do that with a centralized model. Maybe later decentralized, but at the moment I don't see relevance for that.
And again, I need to ask the question: is the only advantage of a decentralized exchange that they don't hold your funds in one basket?
I wouldn't say so. So another advantage that I see of decentralized exchanges is that they don't have a central server. They don't have a place of one point of failure where you can go and hack, which is a standard place which is a standard thing for a more centralized institute, but they have it spread around about multiple computers who help run the exchange. I think the idea of having a node server and then all of a sudden your computer goes off, but all the others around keep running the exchange, I think it's a very positive point.
But the beauty of a decentralized exchange, actually, the concept can be very powerful because we could create really a global financial market for the first time in history. So that's actually where we could end up, having really not only a NASDAQ in New York and London Stock Exchange or an Australian Stock Exchange, but really having a global market who dominates it. And that could be like a decentralized exchange. But as said, probably not now.
Great, so we've got a few more minutes, and I think one of the topics that I've certainly heard here a lot today, and I think you guys have heard it as well, is that everyone here is very positive on non-fungible tokens and collectibles. And it seems to be that there's going to be a big race between what's going to be the flavor of 2019, whether it's going to be NFTs or security tokens, and 2019 will tell us that. Where are we going to trade the non-fungible tokens? If I'm holding a football card of one of my favorite football players, and I'm holding this in the form of a digital token, where do I trade this thing?
Frankly, I think the NFT will be a very niche market. So if I'm a fan of, let's say, League of Legends, a game, and I want to go and trade my skins, then it will be a very specialized exchange that will allow me to trade the skins, but it will not be a global exchange where everyone will be involved and would like to go into it, because the idea of football card or a game skin having a value is something that might be for many people very difficult to accept.
And okay, so I mean, again, we are running completely out of time. Any other comments around non-fungible tokens? Are they going to be exchange traded, or are they going to be peer-to-peer traded on certain apps?
I think there will be a particular exchange doing that. And so what we are currently preparing is making like a bigger announcement around LCX and our key equity partners. And one of the partners are actually closely involved with one of the major projects in that. So there will be experiments happening in that area.
Okay, now, a few weeks ago, or a few days ago, I tweeted something on my Twitter. My Twitter's @CryptoManRan. If you haven't seen it, giving myself a little push. If you had a check to invest at the same terms, so the terms of the one deal are the same as the terms of the other deal. Let's say you had a check of $100,000 to invest, and your holding period is a 5-year holding period. Would you put your money into Coinbase, or would you put your money into Binance?
Coinbase.
Elaborate. Will you give us your thinking?
Yeah, for sure. I think where Coinbase is positioned and how they have that. Let me put it this way: for Binance to turn, and I was having this conversation again with Monty just then, but for Binance to turn its direction for where it is now, it's a lot harder to do. And I think where Coinbase is actually positioned and built out the infrastructure in the back end, it's from an infrastructure point of view as well as who's backing Coinbase. I think from the more Fed Reserve side of things, I think Coinbase would have a much better chance.
So Coinbase is very highly regulated here in the United States. They have very few tokens. You talk about infrastructure that they've built. I'd like to understand what you mean by the infrastructure that you've built.
Yeah, sure. So from my perspective, right, I feel like that Coinbase, especially moving towards this kind of like we touched on earlier, this STO side and everything. And to your point, I think it's everything around regulation that gives it that edge over Binance, especially for Binance to kind of turn around where it is now. I feel like it's like a behemoth that has already gained its marketing name. For it to then kind of take over, or for it in the next 5 years to change its marketing play or what its strategies and whatnot, I think would be a much more difficult game for it.
Yeah, I think it's Binance. And the reason why is agility and entrepreneurship. I think the leadership team of Binance is one of the very legit players in the market. They want to get it right, but they also want to get it like quickly and fast. So they rather go to jurisdictions where they're welcome, where they can work with them and create like a group of companies, not only one, where they can do experiments and learn and see how it goes in a very legit and in a good way. So one of the experiences actually with us in Liechtenstein, so that's Binance LCX, the Fiat Gateway, which has been announced in this August. So, and we will be like one of these group companies where we figure out what's the right way. So, and I think they're taking the path of like being the agile player in the market, rather than Coinbase, who are trying to get it right from the beginning. But sometimes you have to be quick and then make it right at a later point of time.
I knew I shouldn't have asked you because I actually forgot that you were the Binance partner. Paolo, I'm looking at you. So do you take your $100,000 and put them in Coinbase or Binance?
I know we are out of time, so I'll keep it short. No comment.
No, that's a chicken shit approach. Come on, Coinbase or Binance and what?
I don't like the offer of you have to choose between these two big players. If I had a 100,000 check, I wouldn't go and look into the big ones. I would go and look into the new opportunities.
And which new opportunities in exchanges would you put your $100,000 in?
Well, of course, I cannot say our opportunity because that would be too cheap. No, I would really look at someone who's doing things differently, who's there adapting themselves to what the market is demanding, and who's there out to grow and to develop.
And that someone is?
Well, as I say, I cannot say ourselves. Excellent.
All right, guys, thank you. We're all out of time. Thank you very much.
All right, thank you for that talk on exchanges. Very, very important topic. The center of all cryptocurrency right now. And now the job market on the blockchain is our next topic. We're going to be talking about the all-important job market. If you want to work in this industry, this is a very important topic for you. Or if you're hiring, also extremely important. Please welcome to the stage, we're going to have Li Jiang of GSV Capital moderating our panel. Along with Li, we're going to have Anastasia Green from Aura Lab and Fred Kruger from WorkCoin. Welcome to the stage.
All right. So robots are going to eat all the jobs, but for the ones that are left, we're going to decentralize them, right? So thank you guys for being here. Can you just tell us a little bit about how you got into the space? Why? What does decentralized jobs mean? What's your motivation in building your companies?
Hi everybody, my name is Anastasia Green and I'm founder of Aura. I heard about blockchain in 2013, but I didn't believe it's true. And since then I was just like watching the space, working in tech for the past 10 years and hiring and managing and firing development teams, locally, abroad, distributed in all possible way. So I've been really feeling the pains and the struggles of managing development teams and talent in general. And I saw so many opportunities with transparency and distribution and crypto payments that are simplifying transactions globally that can be applied to the hiring market. So when the revolution started happening about, let's say, a year and a half ago, 2 years ago, then it was like, okay, this is the time. This is the time. That's my story.
Yeah, well, that was pretty cool. It's sort of similar to me in terms of timing.
I've been hiring people all over the world. I had an office in Moscow. I had an office in Tula, Russia, the birthplace of Tolstoy. I did a lot of work in India, in Belarus, so, and in places like Poland. I've hired all these people, and I think sending money to India is an absolute nightmare. If anybody's ever done it, basically what happens is you send your money to Sanjay, and he's like, "Fred, we have not received the wire," and then you're like, "But I think I sent it 2 days ago. Let me verify." And it's like, "I did not receive it," and then you go back through this this thing, and it literally takes a week usually to get it. And there's this very uncomfortable pain period where they haven't done it. So the minute I saw crypto, and I was like, this thing could be the solution, right? So especially if we can send this stuff in a smart contract, you can see that money is in the smart contract. Okay, like there's no question that you're going to pay it. The money's in the smart contract. Okay, and then there's some procedure for pushing the button and sending that money to you in 1 second. That's the key to me.
So, Fred, you guys are building on EOS, right?
Yes. So, we tried building on Ethereum, and I use the word try because Ethereum basically just doesn't work. Newsflash. Okay. And I think I've said this many, many times. And, a lot of people say no, Ethereum's not. But guess what? Right now, if you're developing an actual application that actually people are going to use, you're not going to develop it on Ethereum. Like, there's no way, because Ethereum it takes a minimum of 2 minutes to send some Ethereum from point A to point B, and that's if you're lucky. And so, and then the only way of communicating to your application to a wallet in Ethereum is using MetaMask, which means Chrome plugin. Nothing wrong with Chrome, but like a lot of people don't know what Chrome plugin is. Okay, they do not understand how to use it, and by the way, they don't work in mobile. So, basically, you've got the 10% of the people who are not on mobile using it, and then you get 10% of those who know what a Chrome plugin, and you have 1% of your user base. So basically, we switched to EOS, and we sort of said, EOS had a lot of the same problems, with like no good mobile wallets and so on. So we built really the first really good mobile wallet with an API, and that's kind of our product, EOS Links, and so we're building on that.
Awesome. Anna, can you tell me a little bit about what your company is doing and what your approach is?
Of course, we're building a decentralized workplace, and we're focused on tech talent globally. So we're connecting engineers, especially from emerging markets, like Fred mentioned. Like, how can you find an engineer in India, in Nigeria, in Zimbabwe? How can you trust in their tech skills? How can you trust in the relationship that you're going to build? So how that's going to be managed? And then how can you pay them easily? So that's what we're building. And just to add into what Fred said again about the blockchain, we started with Ethereum, mostly because of the Ethereum development community, because we were doing a lot of education as well, a lot of hackathons and boot camps. So we're targeting the community that is already there and technology that's been, the ecosystem that's been developed. But we came to this point where we were like, okay, so we have our alpha launched, and it's a web application, and it needs MetaMask, and it's paid. So we're on the edge of considering moving to another
Come to the dark side.
So talk a little bit. So you guys know, obviously, Upwork. It's going public. It's a big company. These are two-sided marketplaces. So what's your go-to-market plan to get enough people on both sides, supply and demand side, from scratch, right?
So I would say, look, there's two or three fundamental weaknesses of Upwork, and I think the first weakness of Upwork is you can't see the identity of the person that you're hiring. And I think Anastasia mentioned that, right? And sort of like you're hiring a guy named, Fred, or Fred Krueger, but like you can't look at my LinkedIn. You can't see that actually. Like, why would you hire this face and this guy to advise you on blockchain strategy? Absolutely, you wouldn't. But if you maybe followed me on Facebook or on LinkedIn and you saw some stuff that I've done, you might actually say, well, maybe Fred should look at my tokenomics, right? So I think identity is like a huge, huge thing. And the other thing that's huge is that sort of payment, right? So if I can get paid in crypto immediately, and especially true for like sort of the smaller gigs, you know, I think that's a really big deal, you know, and that's why, by the way, Upwork's going public, but there's another company that's probably about the same size, if not bigger, which is called Fiverr. And, you know, I think Fiverr, in my opinion, is kind of more the future of the market than Upwork, to be honest.
How do you compete against those established players?
Yeah, so I think you compete in niches, right? So where the niches are going to be right now is people who want crypto, right? Jobs that are, you know, techie, but in sort of the crypto space, you know. So guys who can manage your Telegram, guys who can, you know, advise you on an ICO, you know, anything that touches crypto, the crypto world generally. They're going to like this. They're going to want to be paid in crypto. They think that's a plus, not a minus, right? If you're talking about a lawyer, that's going to be a little bit more difficult, right? And I think a head-on approach to either of these is not going to work. But I think both of these players, I'm not even sure that you're overall going to displace either of them. But I think that there's pretty significant opportunities in sort of the small gig market. And I think also just in the identity model for really hiring people, whether it's part-time or full-time, I think the identity thing is just enormous.
Yeah, anything to add?
So our niche is more, we're more against or with, but from another side with TopTel, because we're focusing on finding the best of the market, no matter where they're located. And I think one of the biggest trends that's going to be happening in the 5 next years is ownership of data. And right now, you basically give all your data to Upwork, you give all your data to LinkedIn, to Facebook, Google, all of these platforms. And we're talking, in our case, we're talking about engineers. You know engineers, right? They don't like to post pictures on social media. They're not that public. What they care about is who I am, what kind of skills I have, and I want to be identified by my skills and not by how incredible Upwork description of myself I have. So our defining feature or value is actually identifying your talent through the technology and allowing you to own your data, because we're a decentralized platform, decentralized network, and it's not tangible yet. I think we're only starting to feel it here in Silicon Valley, where we're like, oh my God, all this terms of service from Google that is going to be, or privacy policy, right, that is using our data.
Well, even more than that, let me give you an example from Upwork. If you look at the terms of service of Upwork, if somebody hires you afterwards, that company has to pay your employer 2 months of salary, okay? So really Upwork, and that's a significant part of Upwork's revenue, actually. So, you know, actually Upwork's sort of a recruiting firm in disguise, right? So, a lot of people are very reticent, to actually say, well, if I'm on here, and what if some guy from Google then hires me, now that they're gonna know that I have to pay me extra, maybe they're not gonna hire me, as a result. So I think the terms of service are not good. I think the delay in payment is not great, okay? If you look at their actual terms of service, they can pay you up to 90 days later. Now, in practice, if you're a good Upwork, and actually, look, I'm hiring some guy right now on Upwork. So it's not terrible. I don't hate it, but it's not perfect either. It's far from perfect. And I think there's these. You have to find these niches where I think those exist.
I really wish we had somebody from Upwork or TopTel here in the room today, seriously, to join the panel. It would be amazing, because I feel like we're in such early days, and people like Fred and we have a vision how hiring world, how hiring market will be changing, and we are just so early.
I would say another thing is, like, if you look in the room, right, everybody in this room, a lot of us would like to earn a little bit more money, right? A lot of us would say...
Who would want to earn more money?
Raise your hand if you want more money.
Yeah!
Okay, so of you guys have some special skills. You know, you might be really good at marketing. You might really, you might be really good at. You might be a lawyer. You might have some introductions to, like Israel or some country or some market, right? Now, are you going to go? How many here are actually have a profile on Upwork? Raise your hand. Not a single one.
One person.
One person. So my point is, in this entire room, not one of you is selling your service on Upwork. Okay, so that to me tells me, and all of you guys are like, this is like the prime, the brain trust of America, right? This is the Silicon Valley, right? So, how come I can't go on a site and hire you for what you know? I would like an introduction to GSB, or I'd like you to look at my pitch deck, I'd like Anastasia to, kind of talk about the San Francisco ecosystem. There's a lot of things that I would pay money for, or other people would pay money for. So there's a market, except we're not communicating that market here.
Can you guys talk about your business model, and is it a utility token on the network? How does it work, and how does it scale out?
So we started with the model of utility token. Then we saw 2017 happening, and we decided that we're not going to be doing ICO for utility token at this moment of the time. So we switched and we did a private equity round. But the business model itself stayed. We're going to be using stablecoin for the transaction and charging 2% on top of the transaction on the company side. And we're going to be doing sales of the smart contract templates for the engineers. So it's a feature value through the feature on the platform.
So very similar. So however, we did do an ICO. We're still doing an ICO. And I think we're issuing a token very similar to like a BNB token, like you're saying. So a percentage discount off. I think it's a valid utility token. I know the ICO market is not great right now, but I think the business model of all these things is, I think, get users. So if you've got users, if you've got a thriving ecosystem, people are going to get interested in you. So our approach is a little different because we built this wallet called EOS Links. We built it about 4 months ago. We started on it, and the wallet's really taken off. So we have really a lot of users and a lot of active users now. So WorkCoin is not on the shelf, but we're sort of waiting to finish Links to really launch WorkCoin. So our go-to-market thing is, we've got this wallet with all these users, and now we're going to show these users that, hey, if you're on Links, and you want to make money, go put your skills on WorkCoin. And that's, they already have the wallet, so we don't have to sell them on crypto anymore, And so, I'd love to integrate Anastasia's thing too, because I think anybody who's building any of these applications is going to need to integrate with a wallet. And, that's your market, because those people understand crypto already. They've already got that they've gone through what's crypto? How do I use it? Isn't that scary? So I think those are the things that, that's the approach, and I think it's going to work pretty well. And I think the EOS ecosystem is showing some really resilient growth. And I got to tell you, the numbers are looking great. Like even if you look at the price of Bitcoin, you think, okay, we're just plateauing like 2002. But I think if you're looking at EOS, there's some pretty interesting things happening.
And I wanted to add about our go-to-market strategy. So we decided that, because I bootstrapped several startups before, and even though we fundraised this time, we really decided not to wait for the market to be ready for what we're doing, and we focused on developing the first piece of the assessment of skills and building a database of engineers globally in the community itself. So now we're facilitating the process of hire for blockchain and other innovative companies, of helping them to assemble teams around the world. And that helps us to see the whole problems of the process, and specifically working with blockchain companies who are much more open for distributed teams, and they're extremely innovative. We see that, yes, paying in crypto, hell yes, let's do that. Give me
Every
the wallet.
single person in this room would take crypto for a payment. So right here in this room, we have enough people to start a both of our companies. That's kind of like the crazy thing. So everybody's like, when's it going to take? Well, these things we have critical mass of people who will do it, and people who will work, and people who will hire. So right in this room, we could just start here.
Should we throw up a QR code so everybody can get the app? So what advice would you give to people who are building in the decentralized space compared to, you guys have all done startups in the centralized world. So what's been the biggest challenge? Like, what advice would you give to people who are maybe 6 months, 12 months behind where you are?
I have a quick answer to this. Okay, so I think one of the things that you should stop focusing on is decentralization and think about just simply tokens, right? So I think a lot of people last year got really entrenched in like, how should this blockchain talk to that blockchain? How can I do all these super low level things? And I would say, don't do that. Do something that's much smaller, much more simple, and that like uses like an interface that we've developed, like the API, to talk to the users and get tokens, right? It doesn't have to be raise $10 million to do this. You can build something really amazing that works and that you can build in 3 months with 2 developers or 3 developers, and that takes tokens and works. So I think it's totally doable. Like a game like EOS Knights. It's a very simple game. It's got 4,000 daily users right now. You know what I mean? And it's like developed by 2 guys. So this game is going to make a lot of money. So.
Well, I guess for those who are new in the space, and if you're on the engineering side, I would definitely suggest doing hackathons and like just trying on the technology yourself and building something that's incredibly simple, but something that is working. The other thing that I think is good to do is to think about the concept of decentralization, because one of the main shifts that is happening in development is how do you explain engineers the difference between decentralized app and centralized app, because it's a different paradigm. And instead of diving deeper into the white papers, into the really hard technical things, just look into, for example, Wikipedia and think about how it looks, like how decentralization looked before blockchain, because it's been there for a while, and that's the trend where we're going. So there are so many easy ways to understand what's happening, easy ways to try it on, hands-on, and then it's going to change the way you're looking on the products that are going to be appearing.
I would say one other thing is take a look at EOS, because I think there was a lot of great ideas last year, but unfortunately they were on the wrong platform. Okay, so it's not that the ideas were bad. It's just the platform was bad. So I really think if you start looking at EOS platform, you may very well find, oh, you know what, I can do this pretty simply. And I would, especially since there's a bunch of developers here, I think, I would really look at that.
We can have another panel on EOS, but 1 minute. So, what's the time frame in which you think the killer dApps will take off? Are we pretty close, or is this a 10-year journey that we're at the beginning of?
We were going to have an Instagram within a year, an Instagram type thing. I mean, we are going to have massive adoption. Like everybody in San Francisco is wrong about this, but I can tell you that from the way I look at this, between stable coins, mass buying, crypto, and all the rest, I think we're prime.
I think that EOS, yes, promoted the idea that we're going to be there very fast. My CTO has some questions towards you guys, so I'm a little bit less optimistic. I think it's going to take about a year and a half to build better protocols and infrastructure, because we definitely need that. And then in about a year and a half, we're going to see amazing dApps arising.
Okay, crypto Instagram in 1 year. You heard it here first. Thank you all for the panel.
Thanks, guys.
Thank you.
All right, everybody's going to go and start getting paid in Bitcoin and Ethereum and EOS after today, right? Just remember not to keep it in all your money in there. Spend some of it. Okay, the next panel is pretty exciting. It's called Point of No Return. global marketing to raise public funds. Our moderator is Alexa Lopez from Diginex. We've also got joining her Min Kim of Block Cultural Studios, John Slusarev of SMC Capital, Simon Bogdanowitz of Block Team Ventures, Sharon Henley of the British Blockchain Association, and Fu Styles from Blockchain PR and Women in Blockchain Foundation. Welcome to the stage.
Hi everyone, how are you doing? Good. Hello. So thank you for the introduction. My name is Alexa Lopez. I'm with Diginex, and I want everyone to introduce themselves really briefly about like what you're working on now. For example, I'm going to kick off with myself. So Alexa Lopez with Diginex, we do blockchain solutions and financial services. So we do work with the projects, we work with corporates, and we also work with governments. So it's really important to know what kind of the projects you work with nowadays, so we can pivot our discussion to a certain direction. You start first?
Sure. So my name is Shinju. I'm the head of growth at Solana, which is a layer 1 high-performance blockchain. I'm also a mentor at 500 Startups, and I was a former head of growth at Stellar Lightyear.
Min?
Hi guys, I'm Min. I'm founder of Block Cultural, which is a blockchain-enabled business consultancy for marketing and for community and events. And previously, I was director of marketing at Huawei's exclusive US partner HBus, and before that I was co-founder at BToken and briefly worked at Civic and at Draper University under Tim Draper.
So it means you're mainly working with projects now, right?
Yes, I'm mainly working with
a variety of projects.
Projects and exchanges as well.
Okay, projects and exchanges, good.
Yeah, hello everyone, my name is John Slusarev. I'm managing partner at SMC Capital, and before that I worked at ICO Rating, like a CMO and CPDI.
So now, again, the scope of work is mainly with projects, right?
Yeah, now I work in SMC Capital. We help startups, to build the global brands, list them on exchanges, and also, we rapidly invest in companies.
That's the thing I'm asking about. Thank you. Who?
Hi, my name is Fu Styles. So I'm the CEO of Blockchain PR. We do marketing and PR and event marketing for all things blockchain and tech related. I'm also a venture partner at Valorum Capital, so I invest in this space. I'm also the founder of Women in Blockchain Foundation because we're all about diversity. And
we got 5 women on the stage, and it's not about women in blockchain.
It's not a minority. And I'm also the co-founder of a co-living co-working space called Startup Villas.
Great. So you work with projects on marketing, and you also invest in projects, right?
Yes, and we do PR as well.
Hi everybody, I'm Sharon Henley. I'm the Director of Marketing at the British Blockchain Association. And our mission really is to help British companies working in the blockchain space. I'm also a consultant in the same space. So primarily I work on projects across the board, many different kind of varieties of blockchain-based projects. And prior to that, I was head of marketing at the Royal Mint, where I worked on a very specific project, which was essentially bringing gold cryptocurrency on blockchain.
Thank you so much. So I'm going to start with my own experience working with startups for the last 13 years that were mostly traditional startups. And now, as I've dived into the blockchain space and ICOs, I had to, learn it all from scratch. So I had to make sure I'm doing the right work in terms of the marketing and PR. I was always on the intersection of fundraising, PR, and marketing. So would you like to say something about how does the industry change for the last couple of months? And we see we have to adjust all the time. So it's an ongoing process. We have to learn it all the time. So the traditional startups and the blockchain space, how do you adjust your marketing strategy, marketing PR strategy? I want to start with Pooh because she runs the agency called Blockchain PR, so I want to learn more.
Well, I come from two sides. So I actually started a VR startup a few years back that's still running, and I also have an AR startup. So having been a founder in the traditional tech side and having to raise money and deal with all that, it's so different than this side of the church, where there's just an ICO, where it's like you could just raise money so easily. Last year was the golden age. You know, the last few months have been the winter, and it's been very difficult. But now, when we were doing, well, with our PR, it's just we can't pay for ads or magazines. It's just with PR, it's just traditional pitching, and it's always talking about just the company and their founders and what they're doing. Whereas when we're doing marketing, it's a completely different strategy. So does anyone deal with either one of those sides?
I think Sharon has to say something about it.
Yeah.
I mean, I think, so I do consulting for a lot of different startups and they're blockchain based. And fundamentally, marketing does not change that much regardless of the space, regardless of the technology. And one of the things that I always say to my customers and my clients is, okay, who is your customer first and foremost? What is your product? What's your value proposition? Do you know who your competitors are? And really is, what is the message that you're trying to get out there? So are you trying to basically promote your company in terms of you want investors to invest in you? Or are you trying to promote your platform to build the community, to get developers to be part of the community? Or are you building a product in which you actually need end consumers to use your product? So I understand that, you know, it's very a nascent space and that word is used all the time, but the fundamentals of marketing is your customers, your value propositions, you know, your competitions, what value you adding, those sorts of things really don't change. And I think that that gets lost because, especially with those sorts of people that I deal with, they spend so much time trying to explain what blockchain is. And I read that all the time. It's like, well, tell me what your product is. What's the benefit?
But the product is the king at the end, right? I had a great chance to work with me before, so I know she shares the same views. Would you like to share some more about it?
Yeah, I definitely agree that it's back to the basics when you do ICO marketing. And I think with the whole blockchain space, it's very crowded and a lot of people are very product-centric in terms of how they want to present themselves, but for me, it's really important for all the entrepreneurs that I work with to have a personal story and a personal mission around why they're actually, doing this project or company, what have you. And I think the projects that have succeeded in the past few months have been the ones that have, kept on focusing on that vision and mission rather than the ones that were a little more monetarily focused. So I definitely think that helps you stand out, and that's the first thing I do with any of my clients, just focus on the person. And yeah, the talent.
I totally agree with that.
Right. So Tron has Justin's son. A lot of these projects have a face to them, and I think that's really important. So narrowing down on who that face is and what their story is important.
I can confirm that. Mean starts right from there. And then there is another part of that is the community building, right? So when it comes to ICO, and we have to concentrate on the community building as well. So Simon, I would like you to, as an expert of ICO rating, right? John, right? Sorry about that. John, as an expert from ICO rating previously, would you like to tell a bit more about the community building?
Yeah, but before I would like to say maybe general things, but the market has changed. This is not surprising. Right now we have a lot of retail investors. We have a lot of institutionals, venture funds, hedge funds, family offices, and another infrastructure players who would like to invest in companies. And usually funds are interested to invest only on the private stage, on the early stage. Usually startups have money on this stage, and they should try to create the FOMO. Because if you have a FOMO, you will have a lot of interest among investors and you can attract this money. Because all things regarding development, the PR, media, conferences, this stuff is good. But before that, you should start thinking about your brand. You should create a brand, you should create a FOMO, and you should, have some sort of interest among investors. Regarding the community, of course, this is very important, this is crucial. And your community has a good advantages when you will start conversation with funds. You can say, guys, I can bring to the table my community, strong community who will help me on the secondary market, who will generate big trading volume on the exchanges, and you will have liquidity. You will have the growth of my token, and you will have the profit from this deal. Of course, but before that, you should attract attention from funds. Community is the second step.
Again, as product first, community second. But when it comes to community, as you said, market has changed. So is it the same of the value of the community building as it was like a year ago?
Yeah, I think a year ago we have majority part of value from the community, it's investments from retails, but now community it's more about secondary market. I think the value is different, but community I think became maybe more important than 1 year ago.
Even more important.
Yeah, because a year ago a lot of startups thinking about okay we will raise the money and maybe we will do something in the future. But right now majority part of high quality projects understand that they should have the good performance on the secondary market, and community is the best tool to do that.
Yeah, because they thought we're going to raise the money anyways, and now it's not the same, right? So most of you are on the intersection of the investment and marketing and PR. So I would like to hear, John, from you about that. Like, how do you do the due diligence on the projects before you either invest in them or do the marketing and PR for them? Is it the same due diligence, or are you going to do differently?
Hi, this is Simon Bogdanovich. I'm quick intro. I'm co-founder of Blockchain Ventures, strategic investment advisory firm based out of Los Angeles. And the way we perform our due diligence, it's becoming more and more of a wall, right, between the advisory and investment side of firms like ours that can do both. It's, when we do due diligence for investment, I'd say we dig into definitely more diligence, more detail, because we have to dig in kind of all aspects of the company as well. Because as a fund with with LPs and whatnot, we have to make sure that not only does the team sound, there's traction, there's actual product. Nowadays, you do need some kind of product or prototype or something before you go to marketing and things like that. But you need to dig into the technology as well.
True, but if you're taking a project for the marketing PR, right? You want to also do the due diligence.
100%, yeah. So yeah, the diligence process for looking at advisor clients versus looking at those who are investing, they're very similar, but there's like a greater length. I think that most would say maybe it's unspoken that you take as an investment because you are more long term with that client versus advising for a 3 to 6 month period or whatnot. As a company, we focus not only on the kind of the pre-TGE or pre-ICO STO advising, but also more and more on the post-ICO advisory. What is the company's go-to exchange strategy, go-to-market strategy? How are they marketing themselves? How are they actually building the product? And we really look at everything across basically 3 Ps in diligence across the team, the traction, and the technology. And then from there, you always have to think about regulation and compliance. Where are their jurisdictions? If they're in the US, are they doing STOs or dual token model? And you have to kind of go through the whole kind of 9 yards for both sides, but definitely more diligence on the investment side because that's going to be long. We think of it as a long-term investment.
Yeah, just another very short. I think that this approach should be absolutely the same because we are investment fund too, and we usually use absolutely the same approach because we take majority part of our payments and tokens. And I think this collaboration with Bearfield, it's absolutely the same as investment too because you don't take money but you take resources, so you give resources.
Responsibility, right?
Yeah, and for us to do just absolutely the same.
Thank you so much. There was a great panel discussion on due diligence just before I was listening to that great discussion. And then let me quickly shift to the geographical location of the project in comparison to the PR and marketing activities on the geographical locations, right? So the active presence of the projects and the markets where the projects want to be now, and like what's the last trends, or where you want to be now at the events, and with the PR as well. Shinju, would you like to say something about it?
Yeah, so before I even touch on that, I guess like what I want to mention is how exciting right now that we are in a down market, because in terms of this space and like the evolution of marketing, especially for ICOs, like people are learning what it means to actually do a blockchain project. Because like back then, like during the peak, when people raised money, like a lot of it was very dumb money that people got, and that's why there were so many scams. But like the thing is with marketing, like tactically, when you think about it, it's not that hard to do ICO marketing. It's like traditional marketing with just different like KPIs.
Spices.
Yeah, with spices. Different procedure, different like framework. But tactically, if you can do marketing traditionally, you can do marketing in blockchain. The thing is, the reason there were so many scams is people didn't understand what they were targeting. Therefore, like when projects went to mainnet, like they had a shitty community because they did really shitty ICO marketing initially. Because you built a very low quality community, and this community will ultimately be retail investors when you are on mainnet. So when you talk about like local marketing and going into other markets, it's not important to be in every single market. It's important to be in the market that will help your product grow long term, in finding strategic investors. Like even if it's not a lot of money, that will help you grow your retail investor base post-market.
Yeah, Shinju, thank you so much for wrapping it up. For the connection between the due diligence of the project, the marketing people should also do that, right? And the marketing strategies for the geographical locations. They actually, PR and marketing people are also helping projects to go to the right direction, right? So where do you recommend to go now?
Asia.
I've seen you in Korea and you were pretty active there, and that's what I thought you were going to answer. Maybe more details on that?
Well, I've been all over the world. I really average 2 countries a week at this rate.
And the travel panel afterwards, like who have been where, like
I lost my luggage. I'm wearing my yoga pants because they still have my luggage somewhere in another country. But I haven't seen an audience as active and engaged as they are in Korea, China, Japan. Just out here, I mean.
What do you mean by audience? Is it like the audience in the room or the investors,
Both.
The community?
Both. So at an investor event, the room's full. A pitch event, the room's full. A conference like this is pretty. This is good. Especially, this is good for here. Especially in the last few months, it's been.
I think it's not bad.
This
Give us a sign. Is it good?
Yeah. No, this. I'm at size wise.
No, we have people.
No. But there would be like 1,000 people here easily, in Asia, and they just keep coming. And week after week, there seems to be a blockchain week in every city, and it won't stop.
Yeah, just I would say it depends on your aims. For example, if you would like to attract investors from Asia, you should think about how they will help you develop your business in Asia. Because usually you should attract investments and community in the key cities and your target market. Because you investors should be the smart money, should help you develop your brand, promote your brand in their domestic regions. This is the main aim why you should attract investment. Because you investors, it's your partners who will help you develop your company. And of course, Asia is very rapidly, very growing sphere with a lot of retails, a lot of institutionals will rapidly invest. But you shouldn't forget about the United States market. Because if you will have articles in Wall Street Journal, for example, Business Insider, you will have articles on Inc.com, you will have global attraction. You will have global attention, global interest. This is very important. And you can't promote your brand only in China, only in the United States, only in Europe. You should try to be global, but focused on the main regions. For example, I can recommend United States, China especially, and the Southern Asia, and maybe Europe, London, Berlin, and Amsterdam.
Pretty much everywhere.
Pretty much everywhere, but you should create a well-balanced strategy. You shouldn't, spend a lot of money for all over the world.
I totally got the point with the strategic investment. Totally agree with that. But maybe other countries like emerging markets, Vietnam, there's a lot of things happening there.
Yeah, I was going to say, when we think about it nowadays, you're seeing a lot more money coming in from like the private markets, even institutionals and crypto funds versus the public markets. So you got to kind of think about like different buckets of investors. Your institutional investors that care only about the return. Your kind of retail investors, and also your like kind of enterprise investors, or your users of the actual token, if it is like utility token, or even if it's in a dual token model. And then from there, kind of segment out, be like, okay, what is the product, service we're building? What are the focus markets of that product, and then you're going to be attacking them strategically, those kind of markets, and then from there, segment off between those three different types of buckets of investors. It's going to be very different conversations, and we're seeing a lot of success of companies that we're a part of, where they're very pointed, very directed. They have a strategy going in for each round of their fundraising. They'll be selectively part of conferences where the ROI is perceived to be high. Other times they'll just host like a small private investor dinner or a little event, or maybe they'll do a family office event if more institutional play has interest there. So it's very dependent on the project, the customer that you're looking to have be a part of that project, and then investor base from there, where there would be interest based on sector.
Yeah, thank you. Then Sharon, I want to ask you a question about the British market, because you're working for the British Blockchain Association. Are you concentrated only on the British market, or it's globally? How does it work?
Well, the organization is to basically help British companies, organizations within that space, or even academia. It doesn't actually have to be companies. So we work with a lot of universities. There's actually 40 universities now that have a course of some sort in either blockchain, cryptocurrency, DLT. So we help those promote their courses to students as well. So right now it is primarily helping organizations within the UK, but they have a global reach. So their customers are all around the world. And just as the rest of the panelists said, it's go where your customers are, go where the fish are. Don't do a whole spray and pray approach, which was, I can't stand for marketing, because people do that all the time. And it's really understand, again, it's fundamentally not that different. Your product, your messaging, your customer, your audience, and it doesn't change with
We start with
blockchain.
fundamentals, basically. So if you say go where the fish is, so how's the fish in Britain?
It's actually, I think it's really vibrant.
I was just there.
Yeah, exactly.
That's right. We were both at the US Hackathon last week.
It was
amazing. It was the biggest hackathon I've ever been to.
It really absolutely was unbelievable. There was about 900 coders, designers, entrepreneurs there. There was about 90 projects, and there was a massive buzz. And I don't want to knock being here in San Francisco, but there's not the same kind of buzz here. So I've seen it.
Wait till next month. They're having their hackathon in November.
They are, I guess. So yep. But
Thank you so much. We just have 3 minutes left, and just to wrap this panel up, I just want to hear from you, from each of you, is like the final advice that you can give to the project. What to concentrate on? That would be a community, or the product, or a specific strategy that you can recommend, or the marketing tool that you can recommend to concentrate on. I want to start with Shinju.
I guess for me, in terms of advice, I think what would be the most important thing is just figuring out what you want to be and start building towards it, instead of trying to raise money very fast. Because the more product traction that you have, and the more partnerships, and the more people you talk to, the more opportunities you have to actually build something real, instead of just doing another ICOCM. And it's whether you believe in this industry or not, or whether you just want to get rich very fast, because there's a lot of projects that just want that, an opportunity to fundraise. And because we're in a down market right now, it's a really great opportunity just to be able to see what is real, and to be able to focus on what matters. So focus on the tech, focus on talking to people that will actually help your project, instead of just getting money very fast.
Sure, I want to keep it really practical. I mean, what would you say?
Yeah, I would say that if you focus on positioning, right, and say, have a tagline that everyone associates your company name with, right? Is it eToken, the first decentralized European B, right? Are you the largest? Are you the most accurate at something? That would be something to focus on all throughout your PR planning. And,
so you mean the market analysis, right?
Yeah, competitive analysis and just understanding what you're the best at is the greatest thing, because I think most of the marketing is actually just word of mouth. That's the most effective marketing, even though you do have these huge digital ad spends. And so for someone to explain to someone else how you're better or faster or cheaper than an existing solution is the best form of evangelism. Just to focus on that tagline will definitely save you a lot of costs in the long term.
Thank you. So we got positioning, then competitive analysis. Let's go even more practical. What do you have to say?
Yeah, I'm gonna take a little different route here and say, like, build the best team around you that you can of proven operators in your industry that you're building to. People, at the end of the day, they don't invest in products or services, they invest in people. I'm sure a lot of you have heard that before, but that's always going to be the case. That's still the case today, until we have singularity and everything else, a different topic there. So make sure you have an amazing team around you, core team, advisors, partners, and just have that really carry the weight. And then once you build a great team, that's the biggest focus that we look at from marketing, for advisory, for investment, is team first, and then from there we look at the product and everything else.
Great, team. What else?
Yeah, I just would like to give you the 3 steps guideline. First of all, you should have support from the big institutionals. For example, we have 2 cases, the HashGuard and Every Token. The guys who invested dozens and dozens institutionals and dozens would like to invest in them because they have a phone. First of all, you should spend all your resources, all your attention, all your time to attract institutional on the early stage. After that, of course, second step, you should try to create a global brand. You should show to all market players that you have a global ambitions, that you have a global resources to build up your company, to build up your business. And the third one, you should scale your community and you should scale your brand, because you should show current investors and future investors that you have the good results in the secondary market. Only 3 steps, but never spend a lot of money for advertisement. Never spend a lot of money for for package. You should spend a lot of money for attract investors, build a strong brand, and build a strong community. And forget about advices from the guys who will tell you, okay, let's buy Google ads for $1 million. So now we can't, but 1 year ago, a lot of guys spend a lot of money for this one. Forget about that. Investors, community, strong brand. If you will have attention from big funds, you will have success. If you haven't on the first stage, sorry.
Thanks, Sam.
So I'll just build on that. So yes, team and community, and so free marketing. Do guerrilla marketing. Wear your own brand of a T-shirt. Like, everyone should know what your company is because you represent your company. Just really simple and cheap things that you can do that cost you very little money, and give away free stuff if you can afford it to your community, because you want them to evangelize you as well. Brand recognition is everything. I might not know what you do, but at least I recognize your brand, and I'll look it up, and eventually, just look at Dogecoin. Like, they have a huge community, and look at where they are now. Who would have ever thought?
Guerrilla marketing, thank you. Sharon?
I think just one other final thing, and not to repeat anything anybody said, I think it's also about the relationships and the PR side of things. So I build a lot of relationships with the journalists, with the people that do podcasts, with the people that do work at the Financial Times, and there's a lot of new kind of areas out there. And again, just build relationships with them. I'll write a piece for them, or I'll do an interview with them, so that when I need to get out something, I say, hey, I helped you out last week, can you please put just a little mention of this particular company or something again? Like
that's a great comment. I really want to talk about that a little bit more, but we're just out of time. Probably we have to set it up for next. Thank you so much for all the advice, for being here for us, for sharing your experience, and round of applause, I guess. Thank you so much.
All right, thank you, marketing panel. And you all know the key to marketing is one word: BitConnect! What's up? All right, if you don't know what I'm doing, please look it up on YouTube. It's one of the most interesting viral marketing ploys of the blockchain era, or I should say crypto era. And we have on upcoming next the co-founder of BitConnect. Just kidding. The co-founder, the chief ecosystem officer of Dispatch Labs, Ivan Goldenson. Welcome to the stage.
Hello. Is everybody feeling really awake and energized right now?
Yeah!
Woo! Can we stand up? You guys can do a quick hokey pokey? Come on, let's stand up. I'm gonna beg you people, come on. Stand with you. Okay, that's all I needed. Now we're awake. Alright, so I'm here to talk about why we, and I mean Dispatch as a company, is done with blockchain. And we're a blockchain protocol. I don't mean that we're done with the technology. I don't mean that we're done with believing in distribution or decentralization or the idea of bringing value and power back to the people. I mean that we're done with a juvenile, party-based, illegitimate industry. I went to an event about 8 months ago that summed up what the blockchain world of the past was like for me. It was called Crypto Sanctum. It's gained some slight notoriety in the last couple of months. And at this event, which was a 80-person private C-suite co-founder investor event, they had a beautiful buffet, and it was loaded with drugs that they hadn't told anyone about. And the experience of watching a bunch of executives in business suits trying to interact with each other, many of whom had never smoked pot before, who were absolutely stoned out of their minds, was mind-boggling to say the least. I had a new employee with me. It was her first event that she'd ever come to with us, and she disappeared at one point, and I thought, oh no, you can't be my investor relations person and come to your first event and disappear. And then I realized that everybody had been shamelessly drugged and she should probably go to the hotel and take care of herself. And Crypto Sanctum has come to represent for me many of the problems that this space started out with. And you can sum those problems up in two areas. One is, what are we doing with money? What's the ROI? What's the importance of spending it? And two is, what are we doing? The money part's easy to understand. Why are we having all these parties? Why are we throwing all these events if you don't have a goal? If you finish the raise on your product and you haven't launched your product, why are you renting out a yacht for all your buddies? That's investor dollars. We've raised millions of dollars. I fly coach. That's investor money. If I'm gonna go to a trip, I fly coach. Appreciate that. The other question is, what are you doing? And for this, I need to bring up the ERC-20 standard. ERC-20 enabled the killer app for blockchain. The fundraise, the ICO, is what changed the world. It's the fastest fundraising mechanism in history. It is fundamental, important technology. But it also let people raise millions, and in some cases, billions of dollars without any product. In fact, sometimes without even a well-thought-out idea. We watched Tron jump to a multi-billion-dollar market cap without ever having released a line of code. Now, in the traditional venture capital world, let's say you're starting a sneaker company. You go into an investor and say, we've invented these sneakers, they're super cool. The market segment is these young people who like these flashy shoes, and we have this factory in China, and we're gonna sell these sneakers, we're gonna make $4 per pair of sneakers that we sell. And the VC would say, okay, cool, how many pairs of sneakers have you made? How many have you sold already? What are your projections to sell? Who have you partnered with who will sell the shoes for you? And those are good questions to ask. And based on how many sneakers they're gonna sell and their profit margin, you say, okay, you're worth this many millions of dollars. In the blockchain world, you go into that conversation and you say, we have no sneakers, but they're gonna be really cool, and we haven't sold any of them yet, and we don't know what the profit margin is or the business model, but we've got a really cool logo and white paper, how about $50 million? And they got it. And they got it. We raised $10 million in a week, a year ago. Like, we sat down with a bunch of traditional people who had raised companies, entrepreneurs. Matt McGraw, our CEO, scaled businesses and worked with Uber and Lyft and all the big guys. Patrick came from PwC. I came from the pharmaceutical research world and the big business video game world, like traditional industries, at least to some degree. And we thought, okay, let's fight for 4 months to raise $1 million, build up a company to get great resources and product, and then let's go to market. And then we made some phone calls and $10 million appeared in crypto. And that was a problem. It was a problem in the same way that Juicero was a problem. Is everyone here familiar with Juicero?
Yep.
Yeah, so in a nutshell, Juicero raised like $100 million from Alphabet, built this device that put out 2 metric tons of force to squeeze juice out of a bag that you could squeeze the same amount of juice out of with your hands. So that's the classic over-engineering problem. In blockchain, we have the opposite problem, which is too much money and no engineering. How many of the ERC-20 tokens that are out there have actually launched their mainnet? Now, I have some issues with EOS's funding model. I also think EOS is a cool technology, and they have put out a product. Good for them, it's live. Hashgraph put out their mainnet recently, and that's fantastic. These are companies that took an ERC-20 as a fundraising mechanism and used that to transition into building a real business. And that's what blockchain needs right now. We need real users, we need businesses, we need use cases that are changing people's lives. And the ERC-20 enabled those companies, which is cool. It also enabled thousands of people to raise money without any idea how to build what they were talking about, or even the process to build it, or the idea of hiring an HR manager, or having a team, or having management skills, and all these things beyond what are truly a group of brilliant, technical, interesting folks. So when I say that we as a company are done with blockchain, I don't mean that we're done with the technology, because we believe in the technology through and through. We believe that data is the most important commodity in the world, and that all of the data that we're generating right now on our cell phones, on our computers, from our medical devices is valuable. And we're not getting that value back. That's going to central companies, right? But we do believe that we need to bring maturity into the blockchain space. And in order to do that, we have 2 very simple things that we're looking at. And this is not unique to us. Many of the companies we partner with, many of the folks here today, we support and partner with because they believe in the same things that we do. And those 2 steps are quite simple. One is, we're not going to spend money unless it makes sense. I am never going to give away a Lamborghini, sorry guys, or an Aston Martin. Strongly consider a used Honda Civic, but that's a different topic. Thanks. Honda Civic to the stage. Everybody gets a car. So that idea of what is your money getting for you? What is it generating? Is it bringing in users? Are you hiring 25 hype people? Or are you hiring a salesperson? And sales we look at as a dirty word in the blockchain space. But sales is how you get users. And the users right now are with current enterprises. Those enterprises are hot for blockchain. They want this technology, they understand the values of it, they have brilliant people, and they have billions of dollars and millions of users to bring into these systems. We need to bring those users in. We're trying to rebuild the world from the ground up. Maybe that needs to happen. I mean, look at politics, look at economies, look at the world and the environment. There's a lot of things that are wrong. But we have to be pragmatic about how we bring change about. So one of those pieces is money, and the other piece is adoption. We're not going to blockchain conferences anymore. We'll come to this one, we'll talk. We'll send a person to go meet with our partners and friends and try and find clients. But the events that we want to be at right now, they're healthcare conferences. They're technology conferences. They're events where millions of people with actual user bases and actual services are working together to do something. And the people in those events, they really want to talk to blockchain people. They want to talk to people who understand the problem and are thinking effectively about how to bring that solution about. You know what they don't care about? Libertarianism, Lamborghinis on yachts. They want a better system and a better use case for the people that are in their networks, for the people that they're helping. They want to make it easier to get new treatments to make people's lives better to market. They want to make autonomous cars faster to make money off them. They all want to make money, and that's okay. What we need to do in the industry is to find a pragmatic balance. And I'm not saying stop having fun, because I like having fun. a pragmatic balance between getting adoption and building real companies. And to that end, we need to cut back a little bit on the party. Thank you all very much.
All right, thank you, Ivan and Dispatch Labs. Our next panel is going to be a good one. Tokenomics, the business of trust, with Li Jiang as our moderator from GS Capital. Joining him on stage is Abhishek Punya from Draper Associates, Andre Verbitsky, token economy architect, Tyler Yasaka from the Origin Protocol, and Ling King Min from iCash. Welcome to the stage, gentlemen.
All right. You got a mic there? Okay, cool. All right, tokenomics. This is a really big topic, and we'll jump right into it. Can you guys first give a little background about yourself and what your work is in the space?
My name is Andrew. I designed more than 100 token economy models during the last 16 months.
My name is
awesome.
Thanks. My name is Ling. I'm the CTO of iCash. My background is in software engineering. I worked in consulting, ad tech. Now I've been doing blockchain. So I started with doing smart contract audits, and now I'm creating a startup for evolving smart contract complexity and creating the proof of trust protocol.
Yeah. My name is Tyler Yasaka. I'm an engineer at Origin Protocol. Origin Protocol is building a platform for decentralized marketplaces on Ethereum.
So let's start with you, Tyler. Can you tell us about Origin? It was a very hot project and still is. What is the tokenomics of Origin Protocol? Like, you have a utility token. How does it get used? Yeah, tell us a little more.
Yeah, sure. So yeah, the Origin token right now is going to mainly be used for commissions and for staking on listings. So basically, when you're a seller, you're going to deposit some number of Origin tokens just as a stake. Then, yeah. Yeah, I need to brush up a little bit on that. But yeah.
How about iCash? What's kind of your guys' token design?
Our token is used also for staking. So what iCash wants to do is create a secure and private way to vote so that data incoming to smart contract is as close to 100% honest as possible. So the staking mechanism is in place to create a mapping between real value and the premium that a party wants to pay to ensure that their smart contract will settle correctly to the terms described.
And Andre, you've worked with over 100 projects. So we talked about this a little backstage. So what do you advise projects on how to, best practices with design, what to avoid when they're designing their tokens?
Well, if we are talking about utility tokens, it's a one story. And actually, designing utility tokens, it's a lot like game design. First, you craft a story. Second, you craft a set of incentive. Then you verify the business model, and then you do packaging. And the biggest problem with utility tokens, especially for fundraising, that, well, we have a pure conflict of interest between investors and real users. Investors want speculative, highly deflationary token. Users want a stable one. So if you use utility token to raise money, forget about utility function after the ICO. Because the utility value of token will be much less than speculative value of the token. None of you users would really try to use your tokens for the utility purposes. You will kill your project by yourself. And second thing you need to think about, if your token is utility, you're actually selling your future revenue. So if you sold 80% of your future tokens, and you will keep your promises. You already sold 80% of your company to investors. What do you keep for yourself?
You guys have any comments on that?
I think most token models are an exercise in brainstorming. I think the best companies use proven models, and I would echo with your points on it's very hard to find true utility. iCash is a security token. But back to the topic of economics, when tokens are used to create, just to be used as like a payment means, there's nothing supporting, uniqueness about it. There's no way the token will hold its value, and thus, that would require the need for a stablecoin. But I think the actual way to think about this problem is saying, what problem do you, what inefficiencies in the ecosystem do you want to solve, or at least buffer? I think the best models for tokens are actually exchange tokens, because exchanges, even though they get a bad rap for being very dominant in the space of blockchain and cryptocurrency, they serve a very important function, and that's to make it easier to transfer value to and from different parties. And the way the exchange tokens work is that they incentivize the user to spend money.
How would it incentivize user?
They incentivize the users to spend money because they reduce the cost.
Well, if the token can keep the value, imagine we have first time in history we have a tool to keep value forever. It's an ideal investment tool, and it's an ideal investment vehicle. Why would I spend tokens that can keep value for the utility purposes? Because digital money and digital tokens, they don't have wear and tear effect. Gold money, paper money has this effect. So even if they theoretically can keep value, practically they can keep value for long. Tokens and digital money can. So actually stable tokens and tokens that can keep value forever, they create absolutely opposite incentive to keep, not to spend.
Anybody want to?
I'm not, fully defending exchange tokens. I'm just using them as an example. But to answer your point, there's more than one use case for exchange tokens. They have a buyback program, and it's also used in voting. So the voting makes sense because there will be large entities that want to sway in favor which new coin that they most likely invested in is listed on exchange. So Huobi token is a good one that uses this model, and it creates some sort of underpinning of value to buffer the risk with liquidity.
Are there good, what's like a project that you think has really good token design?
Just to repeat myself, I do like Huobi. I like the fact that they use tokens not just for keeping the value, but also to measure what's the inherent value of my vote. iCash has a similar model. It doesn't use a collection of tokens for voting. It uses the tokens it uses token in the day-to-day automated voting process as a way to encourage users to vote.
A token that has good design, Ethereum, ETH. As far as the others, I'm not sure that anything has really been proven yet.
CryptoKitties. Great example of the token design. Right set of incentive, great story. Backed by a real idea, and people love this idea. True collectibles. Perfect.
what are some things that you tell people to watch out for when you're advising them on designing their tokens? Some common mistakes, like things that most people just get wrong.
For me, one thing I always try to look out for is making sure that you're not just creating a token for the sake of creating a token. So you want to make sure it has intrinsic value in the system. That's actually really hard. There's an argument to be made for, like, say, creating a token to compensate the initial people that create the platform or whatever. And that is kind of more of the origin and approach right now. But yeah, I think the strongest type of token that you can have is it performs some role that could not be filled by an existing token. So you say this can be done by any other ERC20 token, or can this be done by ETH? Then maybe that's you don't really need to be creating a token.
We have the way we see it is we want our token to map to the domain of the problem that it solves. If we go back to Ethereum, the protocol token, or the native currency as they would say, that represents the demand for highly available distributed computing on the blockchain. So prior to Ethereum, that has not existed, and it's very unlikely that there's going to be a need for such a thing. But there does always seem to be a need for slight variance, because there's no such thing as a perfect solution. So there's a lot of projects that are also doing distributed blockchain immutable storage computing, and they will have their demand too. At iCash, we see the problem that we're solving as what's necessary for smart contracts to evolve in complexity. So right now, in Ethereum, the only smart contracts that can be made are contracts that act as a simple ledger. This is how much you invested, this is your tranche, this is your pre-sale bonus, and this is when your vesting period goes up. That's really easy to do in the synchronous database model that Ethereum has. But if you want to start writing real contracts that closely resemble the financial needs in the Web 2.0 world, I'm talking about financial options, futures, escrows, different types of escrows like for real estate, etc. All of those require a trusted third party, and right now that does not exist. And we see our token as evolving into a protocol that creates its own system, its own distributed ledger to create that trust network.
Well, if you want to create a token like coin, first you are not creating coin, you are creating a monetary policy. Second, because your token is not backed by anything by the idea, you need to spread not your token but your idea. If people will buy your idea, they will buy your token and start using it. Third, you need to think about the set of incentives you plant into your token. What would you like people really to do? Not like on a paper, or what feature of the design of the token would motivate people to do some stuff. If you want people to keep your token, you need to implement one set of features. If you want people to spend your token, you want to implement a different set of features. So it's all about designing the policy and less about designing the token.
Would you advise projects to have multiple tokens, like one for utility, one for security, or otherwise?
Token is an idea. If you product have multiple ideas, you can have multiple tokens for different purposes. And it's not a good way to mess up idea in a mix.
Absolutely. I think a really good example is for stablecoins, in the way some good stablecoin companies are creating their creating a dual token model. There's also smart contract blockchains that don't use mining, like Neo. They have a dual token model, one's for the native currency to send, and other ones for how much ownership you have in the network.
Yeah, I mean, there's no reason why you can't have multiple tokens if they're each serving some unique purpose. It really just depends on the project.
So on the regulatory side, if you were the commissioner of the SEC, right, how would you look at the space? How would you define what is a utility token, what is a security token, and what would you say in terms of policy regulation? Like if you had a magic wand to really benefit this industry.
Well, it's very hard to say because any object has two sides. One on the side of the utility, one on the side of the security. Because even like ordinary objects like cars or stamps can be used for the generating profit if you can manage to create a deficit. So, from my perspective, we need, if something was offered to the investors, it's a security by definition. Because investors only buy stuff that can grow in value and can bring profit. And at the same time, people can try to create pure utility tokens like access keys or like discounts, coupons. Some people even can try to create coins like ideas, and it might work like it works in game currencies. The question is if you would cheat yourself and use the, for the regulators, for me, one of the red flags is using the course from the exchange to define the value of the token. If you create a closed loop ecosystem with your own token, why wouldn't you like use it like a Starbucks miles or airline miles or Starbucks points? Use your internal course, like in games. And no problem at all, but if you're okay to give people speculate with your token, and if you're okay to use this course, be prepared.
What do you guys think? How would you define these tokens? How would you regulate them?
I mean, I don't know. It seems very kind of subjective and very confusing. I don't know if I'm necessarily convinced that there's a really good, effective regulation strategy. You know, maybe I would ask what the purpose of the regulations are, and maybe look for some sort of ways to solve some of these problems without having to categorize all the tokens and everything.
This is a really complicated subject. When I encounter something like this, my rules of thumb is saying, does this work fully? Is this a working product and it solves the problem by itself, this token? And in 99% of all cases, that's a resounding no. And there are plenty, I mean, it's fine. Like a lot of companies are solving some problems and the token is doing something. But the law is pretty clear that says if you're raising money and it's incomplete, that's actually security. So I've always been the one to do things properly. In terms of design, how it, what's the best way, really dependent on the business use case and learning and growing fast feedback after you built the product.
So for iCash, it's a security token. How did you guys decide to do that? What is the security backed by? How should I calculate the value of my iCash tokens?
So the connections that we have a stronger background in law. Our executive vice president, John Matlow, holds a JD and MBA from Harvard. We have advisors that work in the patent office. We have over 70 patents describing peer-to-peer wagering using our protocol. So it's simply we got access to the right information at the right time, and we're glad we've taken the thoughtful approach. In terms of understanding the market cap, we take three representative markets that we want to tackle. So that's traditional financial derivatives, that's options, futures. That's an industry with 20 trillion in annual volume. You can look up the stats on the Chicago Board of Exchange. You can even look at BitMEX, which does crypto derivatives. They do billions in XBTC volume a day. The other markets, real estate, escrows, and supply chain insurance, those industries all have very large total market cap, and we look at what is possible with existing technology today with Ethereum. Like we don't know if Dfinity or Algorand will come out with extremely high throughput, extremely scalable high throughput blockchain. If it does, we'd be very glad to build on them. We're looking at a variety of blockchains, but the truth of the matter is this technology is still young, and right now we're limited to building on Ethereum and soon EOS. And based on that, we know that maybe a 3 to 5% subset of that market value can be captured.
My next question.
Yes.
What kind of exemption do you use to create a token? A, B?
We are a regulation D.
Regulation D, okay. Then how will your users use your token if your token will be locked for a year? And how would the non-accredited investor get access to your token?
We are targeting many exchanges in Asia. This regulation is largely with complying with U.S. laws.
So you are not your project wouldn't operate in the U.S.
Our project will be the operators of our network will largely be data centers all over the world. We see ourselves as a global solution in blockchain, and we do want eventually U.S. involvement, but we are playing to the best strategy we have.
Well, then why, okay, if your token can't operate in the US, why would you register it as a security? Because, I mean, under the your regulation, your token is utility.
Because it's quite obvious how, even though you're not an iCash maintainer of the network, you can still directly benefit from iCash. You can benefit from having your portfolio dApps all use the protocol to create more advanced functionality for trading, for scalability, for KYC without exposing the identifying information.
So we are talking about accredited investors.
Sorry?
We are talking about accredited investors in the US. These people who would benefit from these features.
Wait, can you ask the question again? I'm enjoying this.
Okay. This value you just explained, people would get by having a token. These people, according to the law, has to be accredited investors.
So private investors, even if they're based in the U.S., are subject to a 1-year lockup of their tokens after we have, as an investor, this is our opinion, but we don't want to deal with investors that plan on using the token. It would be great if they spent the token by programming on our blockchain, but we don't expect investors to have both skills.
So for them, it is a speculative tool. It has no utility for them.
The utility is the ability to, if you're investing in the US, it's the ability to invest in something that's necessary for the blockchain ecosystem. And if you're outside the US and you want to become a builder on this protocol, the utility is being part of that process early.
Thank you.
So, Tyler, let's pick on you. As a utility token on Origin, how should someone think about the value of it? Like, if I'm buying your token, or if I want to hold your token, like, what's the value of it?
I wouldn't speculate on that. I would just say, yeah, if you have use for it on the Origin platform, then great. You should use it to go buy something. To go back to you asked earlier, it's also used as a commission to pay basically the marketplaces. So if I'm a seller, I'm creating a listing. I would attach some sort of commission that maybe could boost the listing on these marketplace apps, and then if a marketplace manages to find a buyer for it, the marketplace keeps the commission. The buyer, of course, and the seller, they interact. So it's kind of an incentive for these marketplaces to facilitate the transaction. So yeah, I would just say I would just recommend using it. Wouldn't make any speculations about value.
So in essence, even though it has to deal with marketplaces and real world assets, it's still a token that facilitates greater liquidity in these sort of exchanges.
Yeah, I mean, what do you mean?
So one example I just thought of after what you just said was imagining how previously in the system you could use Airbnb credits, Uber credits, etc., just as a type of currency. But if there were bonuses or rewards that token holders are able to receive, or massive discounts they could just by in terms of the reduction of the commission. A low commission is what keeps big e-commerce stores profitable. And if you are able to create a system to take that commission number and drive it down even further, that could lead to a more efficient marketplace. And having the token model built in where it accounts for that loss in some other benefit would be a solution that benefits ultimately the end users.
Okay, that's interesting.
So well, if the token is act like Starbucks points or airline miles, company actually sharing revenue to support the value of the token. So it's easy to calculate. If this token is not backed by anything and it's openly tradable token, well, the value of the token is the value of the belief. It's a religion. When you create a token, you create a religion. If there a lot of people believe in it, it has value. If nobody believes, it has no value. And if you would like to think about it, it's good to think about the value of the token as a reputation of a person. And the reputation of a person can be intrinsic, or it can be borrowed. And the same case with tokens. Token can create a reputation over time, like Bitcoin, or it can borrow reputation from the team and from the project. Like most of the tokens that were created recently during the ICOs. And token itself has no value, it's value of the team and value of the project that really fuels this token, at least initially. Of course, token can develop intrinsic reputation, intrinsic value, but it wouldn't happen overnight.
Now we're talking about religion. This is good.
Yeah, I mean, I think there are some interesting comparisons. It is, yeah. I mean, obviously, any sort of currency is just ultimately based on the collective belief that people have in that thing. But I would distinguish it from reputation, because I mean, tokens themselves can't really take actions, right? It's really more like a coordination game where everyone benefits when they do use the same currency as everyone else, or at least a large number of people. So it's not, reputation is more like if you keep your word over time and you are trying to be honest, then you gain a good reputation. But tokens can't really take actions. So it's an interesting comparison. But I think at the end of the day, it's like with there being so many tokens now, it really is going to come down to kind of part of it is marketing and getting people to believe, but part of it is also like what can you actually do with it. And at the end of the day, I think people want to probably deal with as few tokens as possible.
I hold a different perspective. So I'm aware of there's a lot of advancements in decentralized exchanges, and of course there's actually merits to a single currency model as well. But in my view, there will be a future where decentralized exchanges will be as prevalent as being able to sign in via Facebook. So I think in the future there's going to be an abstraction where if you want to make a transaction from business A to business B or facilitate one, there would be a protocol, or it could even be centralized. There's some very low commission protocol to exchange those currencies instantly. The reason why that works is because when you reach a state where volume is high enough, you can simply have enough market maker, so to speak, on this decentralized exchange to create that transaction system, not for the benefit of the exchange, but for the benefit of the users. So this is a model that I'm aware Bancor is very focused on. So Bancor previously had issues with front running. If you guys don't know what that is, it's simply you try to buy stock and someone beats you to the punch, and they sell it, and you lose a fair amount. So that happens in Ethereum because in Ethereum there's this concept of gas. You can prioritize the transactions. Bancor 2 is released on EOS, so there's no concept of that ordering, and not to mention it's a lot faster. So being able to have those transactions settle on chain, I really see. I'm really hoping to see the evolution of DEXs on high throughput blockchains, even if they are slightly more centralized.
All right. We have a minute, so last word on, do you think people are going to figure out great token models in the next few years, or do you think it's a solved problem already? What's your, just kind of a general take?
I think we're going to find a bunch of tokens that don't work.
Some things are easy to do in programming, and some things are hard. We're pretty new. There'll still be a couple good ideas left, and excited to see what's to come.
I hope that people would recognize the nature of the value of the tokens, and they stop talking about tokens and would start thinking about how the blockchain can really change the existing businesses, because it's a perfect driver.
We're going to stop talking about tokens right now. All right, that's all the time we have. Thank you, guys.
Thank you, everyone.
Thanks.
All right, it's on. Here we go. So we just heard about tokenomics. Now we're going to discuss interoperability and standardization of protocols. Our moderator is Alex Rusnak of Zero Chain. Joining him will be Ravi Sarkar of Hexaware Technologies. Andrei Verbitsky, again, is back with us, token economy architect. Michael Lipinski from Descent. Rick Lazinski from Splend, and Paul Walsh from Metacert Protocol. Welcome to the stage.
Hello? All right, how's everybody doing?
Very well.
There's quite a few people here. So, okay, so this topic is actually quite hard. And we actually have a really good panel to discuss this. We're going to talk about interoperability and standardization of protocols. This is a very important topic because a lot of emphasis comes on the scalability. Can we build a bigger, faster blockchain? Yet, not enough of the conversation is around interoperability. A lot of the blockchains coming out are very unique, with a very unique propositions, and they sort of going to be emerging as standalone business or standalone ecosystems. Yes, it's going to be very important for those ecosystems to communicate between each other, whether to transfer value or transfer a state between different networks. So, and of course it all flows into, can we standardize this level of communication? And whether standardization at this point is too early and it's just only going to hinder the evolution of protocols and innovation, or this is something that we actually need because we need the guidelines. So we have a great panel. I'd like to maybe guys introduce yourselves and we'll go after that.
Let's start at the other end.
So I'm Ravi Sarkar. I head the blockchain and fintech practice in Hexaware.
We are a technology solutions company focused on building solutions for medium, large, small enterprises, working with a large set of asset management and capital markets companies. At the same time, we are working with some of the startups who are trying to build technology and product. And so we basically provide the CTO as a service solutions for the startups in order to build the product, bring it to market.
Hi, my name is Rick Brzezinski. I'm the CEO of Splend. Splend is working on the scalability. Just like Alex mentioned, a lot of us are working on the scalability side of the blockchain. But Splend is looking at it from a unique perspective. In addition to the protocols and consensus layers, we are looking at it from the entire layers all the way down to the P2P networking, the TCP/IP, and even lower than that. So we're looking at it from the entire layers of stacks. In addition, we also have some financial modules that we engage with customers. As a team, we build our own DApp on the financial side. So that's a way to engage customers early on.
You know you're safe to open a link or send crypto to an address when you see the Metacert protocol. And in that context, we're protecting over 1 million people in crypto from fraud and phishing scams. In the context of this conversation about interoperability, I was part of the team that helped to launch AOL Instant Messenger, where interoperability amongst messaging apps was a difficult thing. I'm one of the 7 founders of the Mobile Web Initiative at the W3C, where obviously web was a difficult thing to get right across different mobile devices before the iPhone came out. And I've been through a number of different kind of technology trends where I've experienced interoperability as a challenge.
Well, my name is Andrew, as you know. I do token economy, but I also have a 20 years experience in telecommunications. So I know firsthand what is interoperability is and how to achieve and what you need to do.
My name is Michael Lipinski. I'm CTO of Decent. One of the things that I think about a lot is when there's a lot of things out there and running in different specialized teams. Alex mentioned, how are we going to use them if you build some sort of a DApp or some sort of protocol? I started working with middleware in 1998, and so this is a topic near and dear to my heart of how do different things talk to each other and work better together.
Very cool. So, first question, I think when you look at interoperability, there are two big things. Can we transfer value between different chains, and can we transfer state between different chains? And both of those, emerge as you have to build a solution for that. Do you think that we need to concentrate on solving transferring of value and transferring of state, and allocating a separate blockchain which synchronizes the state between blockchain A and blockchain B, and transferring value and transferring state this way? Or can we have a set of protocols that does that without the need and necessity of publishing blocks and keeping the track record of all of the transactions?
We actually went into this in great detail backstage where we didn't all agree, so I hope we disagree to a certain degree here. I think the latter. I don't think we should always look for interoperability when we're at the early stages of technology, because I think there's already so many challenges trying to get blockchain solutions right, because we haven't had enough time to even iterate upon the problem and solution that we're working on. I think we should focus on best practices and guidelines between the different suppliers of blockchains, where we're looking at data usage, data retention, privacy, cybersecurity, different tools that each of the blockchains may want to use without necessarily getting each blockchain to work directly with each other.
I'm going to add a little bit to what Paul was saying. No, I'm not disagreeing with him, but I think the standards that I've been involved with previously in creating the internet infrastructures, sometimes it takes a long time to build the standards. I've been involved in some of the greatest technology and projects years, and it took 10 years through standard bodies, thousands of companies, billions of dollars. But at the end of the day, we have to have users. And that's what we are working on right now. We are, alliance with several companies together. We're trying to tackle a big use case, and we have to focus. Again, standards are great, interoperability is needed. It takes a long time to do that, to get a whole bunch of companies to work together. But we have to be in parallel. We have to go after the use cases and specifically work together. You cannot have a small company tackling one use case that have mass adoption by himself or by itself. You have to work together and create alliances for that.
So I want to answer the question pretty directly. I think that the notion of atomic swaps, people are doing that. It works, so Alice can pay Bob from chain to chain. I think the real problem, the real challenge is solving how do you get state from one place to another? And how do you leverage the really good aspects of one blockchain if you're running on another blockchain? I think the work that the guys at Cosmos and Polkadot are doing is super interesting. It's a little complex, but not too complex. I sort of wonder about whether they're too early in trying to solve the problem in a general way, rather than trying to sort of say, how do we connect two of these blockchains, exchange state in an untrusted way, and then sort of build on that. I'm wondering if you guys have sort of looked at those things, and what do you think of those?
Actually, the real problem we have right now with standardization is that all the standards are developed by private companies. And if you know something from the history, all the global standards are open sourced. GSM, SMS, Internet, email, they all were developed not for profit corporations. They were developed by institutions like MIT or Stanford, or just by big bodies. So we need to create this body for the blockchain. This is the only way. It can be a part of the EEE. It can be an independent body like in telecommunications. It's a GSM Global Forum, but it has to be something for the blockchain.
Are you advocating against tokenization of certain things?
Sorry?
Are you advocating against tokenizing certain things?
No, I'm just. My point is that corporation for profit, standard created by corporation for profit wouldn't be accepted other corporations. By obvious reasons.
So the way blockchain works and tokenization works, at least in my opinion, is people are building protocols or building standards, but they're trying to sort of be incentivized to do so, right? Like the goodwill of building TCP/IP, I don't know if that's ever going to happen again.
Well, if it wouldn't happen, then we would have interoperable blockchains. Private operated blockchains, some like semi-open blockchain like Amazon WS server. We would have Google, they would have its own blockchain for servers, Amazon, etc. And they may even reach some interoperability agreements between themselves, but well, small company will die.
Let me step in. I think I understand where you're coming from, and I would disagree. I think because the time has changed slightly. Back then, at the time when we had TCP/IP being developed, a lot of it was sort of subsidized by the government. Yet now we have these corporations like Google. Google is developing the next protocol to substitute TCP/IP called QUIC, and it is open source, but it is fully backed by Google. So we can have something similar emerge as, we already have Ripple is developing interledger protocol, which is, again, there is no coin there. It is just a protocol that they sort of want everybody to adopt. There's a few question marks about when it's going to happen, and if it's ever going to happen. But yet the work is being done by actually corporations. EOS, I'm sure, is working on something as well. Ethereum is fully open source. So I agree with you that standards have to be open source. Yet the blockchain, by design, is sort of open source.
Not exactly. Why would, for example, Chinese company accept standards from Google?
Yeah, so I will try and come in and kind of put a different perspective, and at the same time try and summarize all the aspects that we talked about. Basically, we probably have to think about a framework to even build interoperability and standards. And when we talk about building a framework,
it's about why we need to do what we need to do, and who needs to do it. And all of it is valuable because someone has to be accountable, whether we put an incentive mechanism in building something and make it comply with certain standards. It's all important. So why, what needs to be built, who needs to build it, and how do we put an incentive mechanism around it, it's important. Now, it's not just about interoperability of the ledger, it's also about the smart contract standardization. So Open Zapling, which is one of the open source projects, which is trying to provide a library of smart contracts, which can actually be utilized by multiple different types of projects, multiple different types of protocols. So I think those aspects are important. The other thing which I believe is the industry and domain-specific or domain-led standardization. So financial services and specifically payments, or let's say in the capital markets, the exchange of data that needs to happen. Those use cases will also drive some of the interoperability that is needed in certain technology protocols. So I think those aspects are also important, which will drive the industry towards interoperability, standardization, and also will define who would be the right entity to build all of it.
I don't think open source makes something the standard. For example, Firefox was open source, but it wasn't a standardized browser. You had competitive browsers where the standards came in was W3C, which creates standards like HTML. And HTML is the standard which the browsers adopted. So open source doesn't make something a standard. And nor do I think we need to create a standards body, but we absolutely, I'm going to agree with you, we do need to have collaboration. The only reason we get collaboration in the industry when it comes to best practices, guidelines, or standards is where each of the stakeholders actually have something to gain or something to lose. And the most successful standards at W3C were those that actually had commercial input, like the Mobile Web Initiative and HTML. Those like Semantic Web didn't have actually much legs because nobody really cared about it too much.
So here's a question. Do you think that the standards should be created by some independent body, some folks like Cosmos and Polkadot who are building interoperating protocols, or should the sort of main blockchains that exist right now, the big players, get together and develop some sort of standard to agree on how to do it? Which of those three do you think?
Well, a company can't create standards. It needs to be an independent, unbiased association where you've got all stakeholders within the ecosystem who can contribute. So you can actually, at the W3C, for example, you can submit something which takes a year, and you need to get peer review to see if it's good enough to go on to what's called a full recommendation, which is HTML, for example. And then it takes about 4 years, through workshops and what have you, and then it goes into public review. And the public then actually gets to contribute. By then, the vast majority of the work has been done. You've got private companies, public companies, or government agencies, universities. Each stakeholder in the ecosystem actually contributes to those standards because they all have a vested interest. So I don't think one company can create a standard in the same way that Coinbase coming up with the ability to do login or connect with Coinbase, you might think that that's better than Facebook because Facebook records your social graph. Well, what's to stop Coinbase from collecting your financial graph?
Already did.
Exactly.
So I just want to add again, some of you touched the TCP/IP and HTML and stuff like that. I was specifically involved in over 10 years on the ATM standardizations as per asynchronous transfer mode. At that time, it seems like it's really going to be the protocols to use at the layer 2, layer 2.5. And after over 10 years and thousands of companies, and bias, not bias, some big companies driving it more than other small companies. And did it scale? Oh, absolutely. It scales. You can build 40, 100 gig based on that protocol. But where is it? It did not reach mass adoption. That's why. That protocol is much better than Ethernet. Much better. But it's in the shelf. It's on the shelf right now. So to Ravi's point, right, specific use cases, applications, especially in blockchain, the way I see it right now, I went to many different customers and looking at the, for insurance company, for retail, for taxation in the government. I mean, these are different use cases. I don't think there is a specific blockchain that we can use for them. So we need to do the collaboration and alliance for a particular industry. Yes, that's what my experience is in talking to a lot of customers on the enterprise side.
Yeah, I will just add, I think there probably won't be any set rules of whether a large corporation, a private, public company, or any set rules, set of industry or company should be building a standard. I think it will be all driven by who builds something of value, which can be utilized by multiple companies, multiple use cases, multiple projects. And so from that perspective, I think whoever builds first something of value, like you mentioned Cosmos, those projects will gain traction, those projects will gain adoption, I guess.
I agree with that. Early first mover has an advantage. It's just those are small groups working on things. If someone else decides to get together, right, Ethereum, EOS, and whoever else is the top 5, they'll be able to just sort of push them aside. I wonder what would be more successful. I don't know if you guys have opinions on that. Like, say I took the word standard out of my question and just said, what do you think the easiest path is to getting there?
Actually, I believe none of the existing players can do this job because, well, they already set a wrong incentive for themselves. They do benefit from the existing business models. I mean, it's hard to say. I mean, it's like this against honey for them.
To switch gears a little bit, we have in the not blockchain space, but blockchain related, we have a lot of standards right now in the IoT space. And the situation is so dire because we have so many manufacturers of IoT devices, which publishes its own standard, which is siloed within its vertical of product. And communication, and we're going to be basically flooded with all types of IoT devices. Yet sharing of communication, sharing of data that these IoT devices are gathering, which are very valuable, would be very, very difficult. Precisely because there is no way for these two different standards to communicate between each other. As an example, we discussed that in 10 to 20 years, we're going to have a lot of autonomous driving vehicles collecting data in real time. There's going to be a car, for example, like Tesla driving on the road, and then next to it is going to be a Mercedes-Benz driving, both making autonomous driving, yet both of them on different network, yet sharing of the data sets in order for both of the cars to make better decisions, to make driving a lot more safe, is absolutely paramount. So this is where interoperability really comes in, because what we really need to share is the data. What we really need to share is a way to communicate between different networks. And the standards for these, I think, can only come from, just like Michael was saying, from actual large players who are either incentivized by the governments or incentivized between each other to actually maintain their share of business. And we already seeing this happening in the IoT space, for example. We already see an emergence of consortium players that are getting together and establishing guidelines for these standards that they are willing to work towards. So if you can comment on this, that'd be great.
Well, we have the same situation with aviation. A bunch of different players, but they do have like interoperable standards. This is why we are not afraid to fly. The cars will be the same. But we know for sure that if there will be no like interoperable standard, it will be a war of the standards. And well, it used to be and it will be.
I agree that we will at some point. I also agree that it probably will be the big companies. But when you ask me who should do it, my answer is it should be independent associations that help influence the big companies to create the standards. But we're so early in blockchain and cryptocurrency that we're barely able to just solve problems in a meaningful way that people are willing to use it. When it comes to standards, implementation, as you were referring to use cases, is actually the biggest thing. I remember when everybody was using WAP and iMode and really crappy web browsing experience on devices like Nokia N95, basically anything before the iPhone. It was really bad. And I was one of the 7 founders of the Mobile Web Initiative, during which time I had to rewrite Tim Berners-Lee's vision of the One Web, on top of which all other standards were created. Because the One Web was, you create a website once, you render it everywhere, irrespective of the device that's being used to access it, the location of the person, and the ability of that person, meaning whether or not they were disabled. It took us 4 years to write those specifications, which included best practices to help developers build websites that worked across as many phones as possible. And then the iPhone came out and kind of rendered it useless completely. And so to your point, actually, I think we should strive to guidelines and best practices and standards, but not in a way that hampers innovation. And it could be 1 or 2 big players that come out at the end of the day, like EOS, and everybody builds for that. I think we're going to see applications designed for each of the main blockchains in the same way that we have apps for iOS, and we have apps for Android, and then 4 or 5 years later we have progressive apps that work across both platforms. So I think standards and interoperability is very important, but I don't think it should come at the cost of innovation, which is almost ironic for somebody who's contributed to some of these standards and specifications.
So maybe one of the problems is that the desire for everything to be trustless in blockchain is people want these interoperability standards to be totally trustless. Maybe if removing the notion of this must be trustless, we'll probably make that a lot easier.
Actually, that by itself, the fact that we're doing these things, the fact that we're being more open and transparent, that in itself is kind of a new standard way of doing things. So to your point about the highways, if we all agreed on certain privacy things in relation to the data that we're collecting, or certain ways of tackling cybersecurity, these are things that sit in between each of the blockchains that we need to at least get right before we try to get each of the blockchains to be interoperable.
To Alex's point, right? You mentioned about sharing the data, whether it's Tesla or Mercedes-Benz, or and this is very important because 5-10 years from now, autonomous vehicle and transportation, that's a particular use case, for blockchain. And what method we're going to use, atomic swap or other methods, we need to look. If now we're talking about insurance or any other industry, is the set of data the same that we need to share, and how are we going to make it interoperable in a different use case? So that's a challenging task to be done right now. But yes, in a specific use case, they have to be interoperable because they have to work together. I mean, the cars, they can't, they have to share data.
So I will bring in another point where there may be a debate about who should build the standards or who should, what type of entity should be working on certain types of projects in order to bring it all together. One thing is certain, and there's probably not going to be much debate about that, is it's going to be developers who will actually build something, right? And from that perspective, if we provide developers the solution where they can build once and deploy it multiple times in different places, that may be a good solution. I think, one of the things that we are working on is how do we enable people who actually have been writing smart contracts today in English language, how do we enable them to write smart contracts in Solidity without knowing the Solidity language or Golang? So a tool, accelerator sort of thing, which basically enables those people who can write contracts in English language or maybe in a business process model format, and that can generate code in Solidity as well as in Golang or any other language. So I think that kind of stuff will also drive adoption and usability of multiple different types of protocols.
Well, I would like to bring one more point to the question of interoperability. Imagine that we somehow manage to connect blockchains with each other, different blockchains. With existing financial models for the smart contract, for the protocols to operate across this blockchain, it has to have all the coins across the blockchain. Could you imagine this mess for a user? I have to have 1,000 different coins just to execute one operation. It's total mess. It wouldn't work. It wouldn't fly.
You're absolutely right, and I think Ethereum is doing a really good job right now of figuring out how to use native tokens to pay for transactions, and that's something I was thinking about too. You're right. How do you pay for a transaction on another blockchain if you don't have any other currency? That's a really good point.
And I'm not sure we should expect Ethereum blockchains to interoperate with other blockchains. If you look at air miles, you can spend your air miles amongst the partner airlines. You can't spend them outside of those air miles. Or if you've got loyalty points with Safeway, you can't spend those loyalty points with an airline or another store. And those loyalty programs have been around for years. So I think, yes, it's great to try and strive and do better than those companies, given that there's now kind of a new desire for us to work together. But it has to come at kind of some common sense in that if just look at where we are today. I know growth is exponential right now in technology in this space, but we kind of need to just focus on just the simple problems and solutions. I mean, wouldn't it be great if we just had one way to charge for something that worked across different chains? Like just changing from one currency to another, whether it's fiat or crypto.
If we want to look at IoT as a leader, I did build IoT stuff in 2004, a very long time ago. The solution right now is that they basically put in, there's 4 or 5 different radios. Every gateway has 4 or 5 different radios sitting in it, so it can pick up all the devices.
How about we just start with cybersecurity? Get that right. You're talking about IoT, cybersecurity is crap. You're talking about smart contracts, cybersecurity is crap in a lot of the cases. These are the things that we should be focused on. Not just that area because I'm interested in it, but the areas where we feel the pain before we look at the long, not necessarily before we look at the long term, but let's not spend too much time looking at the long term without addressing the short term problems.
Absolutely. I think to sum up, I think we realize that interoperability is going to be a critical piece of blockchain technology, mainly because certain blockchains will emerge as go-to solutions. Yet they're going to have to transfer a state and transfer value or transfer data to different blockchains, different distributed networks. With that being said, standardization of the protocols at this point is probably a little bit premature because we're still in the phase of rampant innovation, very fast, and eventually as the winners going to emerge as the global major blockchains, major technology providers are going to emerge, they're going to come together and commit to a certain degree of standardization that will help them grow and grow the business and grow the blockchain ecosystem. Yeah, we're perfect. Yeah. Perfect. Okay, thank you guys. Thank you. It was great.
Thank you.
Thank you.
All right, guys, thank you for hanging in there. We got one panel left. You just heard interoperability and standardization of protocols. Now it's time for something completely different. We're going to talk about the future of media and entertainment The panel is going to be led by the one and only Robert Beatles, Crypto Beatles. Joining him on stage will be Alicio Mack from Vibe Hub, Jake Silvestri from CCN, Crypto Man Rand from CNBC's Crypto Trader Show, Vivi Lin, ex-Reuters reporter, and Megthan Zhang from Blocktrain. Everybody, welcome to the stage.
What is going on, Crypto family? I think we're missing a few people.
Yeah, you are.
Any Deadpool fans out there? I'm a huge Ryan Reynolds fan, I tell you what. But he's got nothing on Ryan Brown, and man.
Woohoo! Yeah.
Awesome. So today we're supposed to talk about the future of media and entertainment.
No.
Let's,
Side.
so no Alessio?
Move on.
All right, no less.
Anyone want to fill in for Alicia while we have a gap?
I'm just kidding.
No worries. So anyways, we're going to talk about the future of media and entertainment, but I think I'm going to change it up a little bit and change the future of media and blockchain. Wouldn't that be better? Because it seems a little broad just to talk about entertainment.
Yeah.
So, yeah, I mean, before we get going, I guess if we can just maybe introduce yourselves a little bit. So why doesn't everybody just take a minute? We'll start with Vivi. Just tell us all about yourself.
It's a privilege as the only lady in the panel. So my name is Vivi. I am a TV journalist. I have worked with Reuters Financial TV as a TV reporter and producer for many years, covering the financial markets in China. And I also work with BBC and Hong Kong's ATV World. And during that time, we also partnered up with China's top media like Taixing Media and iQIYI, like the equivalent of China's Netflix. So basically, I have worked in Asia and partly in Europe, and right now in the Silicon Valley. So I'm coming from like really traditional kind of first-year TV kind of background. And right now, I'm also doing a crypto-focused, blockchain-focused TV show on the block. And we are also really trying to bring, the really stories in the space to the general public, not only just for the geek or for the tech community, but rather we want to tell, what is happening in the space to people outside the blockchain.
Gotcha. Jake, tell us about yourself.
Hey, how's it going, everybody? I am Jake Sylvester. I am the host of CCN TV and the CCN podcast. My background is a little less traditional. I come out of cybersecurity and software engineering. So a lot of my focus in blockchain is on the technology, specific consensus mechanisms, and then kind of the companies that are really coming out of this space.
Rand, what you got?
Okay, so I'm from Africa. I founded and sold the biggest marketing and advertising company in Africa, and I promised my wife that I was going to retire. And I did very well in retirement. I got dragged down the rabbit hole of the blockchain. And for my sins, I once went to CNBC and I said to the guys at CNBC, we need to have a show on this thing called Bitcoin. And at that point, they all looked at me and said, get out the office, you're a scam artist, you want to sell Ponzi schemes. And this discussion carried on for about a year and a half, until one day I took the director of CNBC to Consensus in New York. It was last year, 2017 Consensus. And as we arrived, I bought him Bitcoin, Litecoin, and Ethereum, because that's all you could buy on the Coinbase app. And the prices started to go up like crazy. And for days afterwards, he'd phone me and say, why is my Ethereum going up? Why is my Bitcoin going up? And eventually I said to him, see, we need to have a show to tell people what's going on. And I went to CNBC and he said to me, go and talk to the production people and they'll advise you. And I showed them what the blockchain was and I showed them what Bitcoin was. It took me about 2 hours. And they said, this sounds amazing. We need to have a show. It needs to be 26 minutes, once a week, live, and you need to do it. And I said, well, I've never done TV before. I wasn't planning on being available once a week to do a TV show, and 26 minutes sounds like a long time. And here we are today. I'm producing a 26-minute show at least every week, and sometimes even a second show.
We have 29 left.
I'll show you how to fill up 26 minutes.
Bless you, what you get?
My name is Alessio Mack. I'm one of the co-founders for Vibe Hub. We're basically specializing in virtual reality, augmented reality, and specifically volumetric video. We create virtual meta worlds, immersive experiences where users can create virtual spaces. We call them hubs. We also have a marketplace for different digital assets, 3D objects, avatars, environments, where creators can monetize on their assets, and then you can use those assets in those personal spaces with our hubs. There's voice chat, video chat, and while you're in the space, you also have the ability to bring up virtual screens and play video content, as well as presentations, etc. One of the interesting things that makes us unique is the volumetric video that I mentioned briefly. We have a studio in Marina Del Rey where we have 40 cameras and labeled sensors, and they pick up all the light point data, and we basically create a photorealistic hologram of any subject. And we place those holograms in the virtual spaces, and people can consume them socially.
Awesome, man. So we have some real titans of industry up here, you know, in the blockchain as well as in media, so it sounds great to have you all. I appreciate it. A little bit about myself, I'll keep it really brief so we can get back to the titans. My name is Robert Beatles. I'm also called Crypto Beatles, Christian father, husband. I'm a blockchain development company. We build applications for people like the United States Post Office, co-founder of Monarch Token. So what we'll do here is we're going to ask everybody a question. We'll probably keep the response to about 2-3 minutes, and then have like 2 to 3 minutes of like open debate afterwards, if that's cool for everybody. So one of the things like in media is like trying to get people to understand what blockchain is. You know, especially like people out here in the crowd, you know, they'll hear about this great project and they'll be like, man, this is awesome. And they go to try to tell somebody about it, and they can't really explain what it is or how it works, but they're just so adamant that it's awesome, and they just hope that that love that they have for it, you know, transfers to the next person and to the next person, but they can't really explain it. So like Alessio, like you've got you know, a great tech background, you know, media, all that good stuff. When people come to you and they're like, you know, what is this blockchain? What is this crypto? Is this a scam? Is it bubble pop? Is this thing dead? Is it over? How do you, like, what do you get the best response in when you're explaining to them what blockchain and what crypto is, to where they walk away understanding it?
One of the things that it makes it a little bit easier for us to explain is because we're basically creating a virtual world. So it's almost a natural progression to have a virtual currency in the virtual world. So we just explain the benefits of it, really, and that's what I think is important to explain to people: the distributed nature of it, the transparency of it, the security of it. And I think, you know, when you take those things, I think people can see how it can be a more trusting system compared to some of the traditional systems we have today.
Very cool. Rand, what do you think, man? How would you explain blockchain and crypto to your, you know, to your viewers? How do you explain it to somebody that doesn't understand it, to where they walk away, you know, going, oh, I get it?
I just say, do you know anything about the tulip bubble? They say yes. I say it's exactly the same. It's pretty simple.
Awesome.
I find that the best way to explain it is to actually go and give a detailed explanation. So I avoid trying to explain it to someone. When someone says to you, hey, what's this thing called Bitcoin? And you have to answer them in 5 minutes. My answer is always one to say, it's not something I can explain to you in 5 minutes. You really need to spend 20, 30 minutes with the person. Because I think that we have a general problem with Bitcoin or with crypto, because blockchain is quite a complicated concept. And so I try not to explain it very in short periods of time. Having said that, I also think that it's like trying to explain the internet to someone. So you don't actually explain the internet to someone, you just explain how to use the internet or what it can be used for. And if I do have to explain it very quickly, then I just explain it as, you know, it's a way to transfer money very quickly without a centralized bank or something like that. But I think there's a massive education problem in this space.
Jake, where you're heading?
Yeah, there's a great clip. I think it's of the Today Show in the late 90s, and it's all the hosts sitting around and they say, what is internet? And you look back now and it looks like they're just being ignorant of the technology, but at the time, no one saw the potential for it. And you had to use analogies, and this was even present in the user interfaces. If you look back at the early iPhone in 2009, the notepad was not all clean. It was, you had little lines to show you that you could put notes in this application. So we had user interfaces to display exactly what these applications were doing. I think we need some of that in blockchain. Now, if you ask me to explain it to you in half an hour, I think the first thing I'm going to do is I'm going to pull out Venmo. Venmo is an application that a lot of people have used, and it demonstrates well a public ledger, right? If I send you $5, it's going to be on the public ledger. From there, you can actually show them how that would work on the Bitcoin blockchain. So I can send you a Bitcoin, and we can actually go into the public block explorer and see that on a public ledger. From there, I think you can start to explain hashing and some of the more complicated mechanisms, like some of the stuff Ethereum's doing. But I think you have to start from the bottom and go up. And I think over time, as we develop these user interfaces, people are going to stop asking, what is blockchain, the way they were asking, what is internet?
Yeah, Vivi?
Okay, so I think I agree with Ron that like a lot of people who are like all of us who are using internet right now, we don't really need to know how the fiber is working and all this underneath technology. And I think same with blockchain. So also I think it really depends on what is your positioning. Who are we talking to, right? Are we talking to blockchain startups or people outside the blockchain? So our approach is, I think one of the problems, not problems, but the situations in the space is there's too much information. It's not a lack of information. It's like you're hungry, you walk into a room full of food, and you don't know what to choose. You don't know what is, which information is bad, which information is false, which, what is good and what is bad. So I think what we do is, we try to tailor the best best we can to give you what you need. A food with protein, with vitamin, with fiber. So our approach is we follow the people. We follow like people like you, entrepreneurs and investors and really thought leaders in the space. We want to tell the stories to the normal people, and we want to show them the tech. So we're coming from the television background, so it's easier to use visual to tell the story. To like Jake said, like we just want to show them what is happening in the space, and then we follow the money, like Ren did. So we look at the data, we look at what is the the correlation between different the fundamentals. So we try to pick up the best information, like the easier information for people to understand. It's pretty much like CNBC is doing for stock market, right? They dumb it down so that the general public can understand what is happening in the financial markets. So that is what I felt that we need to work on in the blockchain space.
Yeah, no, it's definitely an educational process for people to understand this. It's just cool, like all of us being in media, we have to have some kind of really short, concise, like explanation for people. It's like digital money. Well, how is it worth something? Oh, it's worth something because you say it's worth something, right? There's got to be something that people can get and kind of grab onto. And that kind of leads into the next thing, which is like a lot of people think that crypto is a scam, right? So Jake, with your background in cyber, tech, also with CCN, you hear people all the time saying, crypto, it isn't safe. It's not, it's volatile. It's not stable. How do you, defend, or how do you, I guess, agree with these people? What do you tell them?
Yeah, I think a lot of people are scared of crypto because they don't understand it. And what I would say to them is pull out your phone, pull out your United Mileage Plus app. You really have no control over the rewards, the price, anything. And the reason I like to use that analogy is it's something that people are comfortable with and have used before, but doesn't have absolute value. So I can go on right now, book a trip all the way to Newark for 10,000 miles, right? That's not fiat currency. This is a whole new currency invented by a centralized company. And United is a public company, and they have a fiduciary obligation to their shareholders. So tomorrow they can go ahead and just say, okay, we're going to throw out 100,000 new rewards points, and that flight is going to be 100,000 miles. Are you really going to trust that less than you would trust Bitcoin and this decentralized thing that people all over the world are putting money into? And I think that's really the best response to, like I said before, relate it to something they value and go from there in explaining the value of the technology.
Very cool. Anybody have anything you want to add to it? So Rand, with
I think as the media, specifically in crypto, we have an obligation to report as many of the scams as possible. Now, it's a double-edged sword because on the one hand, you want to portray the space in as positive a way as you possibly can. I struggle with this all the time. On the one hand, you want to portray the space as a very positive, investor-friendly space because we've all drank the Kool-Aid. But on the other hand, you have an obligation to report as many of the scams as possible. Now, in my line of work, I see a hell of a lot of scams, and one of the programs that I actually wanted to create, and it's actually a program that's in the pipeline, is a program called Crypto Scam, and all it is just reporting all the different types of scams that can happen in crypto. And I think as much as we have an obligation in the media to report the growth of the asset, we should report the negativity because we need to educate people about the negative part of this industry so that they can learn and protect themselves. And this in particular because we're in an unregulated industry. And we're not doing a very good job of regulating ourselves. And so one of the ideas is to actually educate slightly more astute investors about where they can get burnt in crypto.
I think I agree with Rand in media should play its own role like the fourth estate, right? So you call out the bad actors and besides from educating the general public, but you become the guardian, right? The guardian of the general public and the interests of the public. But there is one problem here. Media is suffering. They don't earn money, right? So if people don't, I know that like a lot of people complain about pay to play, but a lot of YouTubers, there's the business model. The business model has needs to improve because and then if they don't get the money from the sponsorship from those projects, I'm not saying this is good. I'm just like stating the obvious.
I think that you've opened up a can of worms, which really talks to what the title is of this panel, the future of media and entertainment. Now, if you look at media today, media is probably the most boring industry in the whole wide world that has worked the same way for many, many years and needs to be disrupted. Media today works where you find a sponsor, the sponsor pays for the programming, and then we use that money to go and procure content. Blockchain has given us a way to disrupt media by getting people to pay per play every time they watch media. So I think that the future of media and entertainment has been completely disrupted by the blockchain. We haven't felt it yet because there aren't enough platforms today which reward users and viewers for good entertainment, things like Steam or stuff like that. But that's one, and it's not mainstream. I think that the future, because of blockchain, the entire future of media has been put onto an equilibrium where the more your viewers, consumers, etc. enjoy your content, the more money you will get to make more content.
Yeah, absolutely agree. Like I said, like Steam it and really giving back the power to the content makers and the creators themselves, and not to the centralized platform, right? So right now we are not seeing it yet because the adoption is not happening yet, and Steam it, if any one of you uses it, it's really difficult to to navigate and everything. So we are still in between this gap right now, but the future is happening. I agree.
If I could add to that,
Sure.
I think as being in the media industry and entertainment, I think we have a responsibility, and also I feel like we're in the best position to bring mass adoption to blockchain type technologies because traditionally blockchain technologies are normally in the financial realm. The fact that media is something that is acceptable to the general consumer, I think that we're in the best position to really drive that adoption. And going back a little bit just on some of the security and some of that, I think, as far as being our own media and entertainment company ourselves, we developed a private off-chain solution which helps mitigate some of the issues with the blockchain. Not just the transactional rate and things like that, but like we were pointing to before, on the blockchain, there's no customer service. It's not forgiving if you make a mistake. So I think those intermediary or gateways or private chains, side chains, they offer the opportunity to projects to have a little bit more censorship or control in those areas. And I know that kind of goes against decentralization in a lot of ways, but when you're talking about a platform, like for example in our case, you know, you need those types of things until we have some solutions on this blockchain observability.
Exactly. I mean, you look at like YouTube, you know, it disrupted basically TV, kind of like Netflix a little bit, right? Then you've got things like, you know, Facebook, which is kind of disrupting things like traditional press. What we need now are things in blockchain that disrupt those that allow everybody, you know, to get their own content out, right? And to where it's not being, you know, centrally controlled, but has a layer of customer service, right? So, and then Rand, you know, with, you know, your extensive, you know, investment, you know, experience, you know, your media, your tech savvy, all that good stuff. You know, you see things, especially through all your interviews and, you know, being in the space. Where do you think like the biggest opportunities lie right now for like crypto projects in general to become, you know, fruitful, right? So, like, if you had to pick a space out there, where do you think it's like, you know, if they entered into this space, they would be great, and then how would you market that?
So, I mean, it's a very, what you're asking is a very vague question. Last year, I would have said the biggest opportunity in crypto is to create a good protocol which can scale, and we've seen protocols like EOS, Blockchain, Thunder, etc. So now I think we're all protocoled out. Then last year, I would have said, let's build on-ramps and off-ramps and places for consumers to store their crypto. So that being exchanges, wallets, etc., etc. Now that we don't have enough, but we've already got on that trajectory of building good enough wallets. The problem is that we have to bring users to this place that we call crypto. So you look at the models that we've adopted as crypto people, and we probably adopted it right in hindsight. First we built the protocols, then we built these exchanges, which in the Mt. Gox stage were kind of really unusable. Then we made the exchanges a little bit more usable. Then we created a whole lot of wallets, which is kind of like where we're at today. So I think if I were putting my money into crypto, I'd look at two entry points into crypto. The first thing is, the winner of the blockchain space is the person that has the most wallets. And you can see things like CZ or Binance investing into Trust Wallet, or buying out Trust Wallet, etc. The owner of the wallet, the company that has the most wallets out there, is going to be the biggest financial services business in the world. And today I haven't seen a wallet that can store multiple coins and allow users to transact very quickly. So once we've got the wallet play out of the way, then the next thing is we need to bring users into our ecosystem. And this approach that we've got of bringing users into our ecosystem by telling them, buy Bitcoin, speculate, prices are going to go up, that approach, I think, has kind of reached a saturation point. And you can see that if you look at the Coinbase numbers or the Binance numbers or all the numbers which are published, the user adoption or attraction in this bear market has slowed down to a complete halt. So how do we bring new users into our ecosystem? We find real-world businesses that have hundreds of millions of users, and we give them a wallet and we get them to start transacting without them knowing that they're transacting. So in that spirit, when you look at a project like the Telegram project, which is launching next year, Telegram has 180, 200 million, 300 million users. Nobody knows exactly the number of users. But that is automatically 300 million wallets coming into crypto. And there are many other industries. I mean, I'm working on a project in the sports betting industry where this company has 250 million users. And with one switch of a button, we're going to deploy 250 million crypto wallets, one to each user. And also we're going to tell them that the only way they can bet from now on is if they activate this crypto wallet. So once we've got the protocols and the wallets, now the idea is to bring users. And instead of running around waving a flag, which is the approach that we've used up until now, we should actually go to companies that have users and migrate those companies onto the blockchain and give them blockchain applications.
Anybody want to add anything to it?
Yeah, I think one great example of that is actually Kik with their Kinit project. So they have a pretty big existing user base that they've been able to deploy blockchain wallets out to. And I was pretty critical of them in the beginning because I didn't really see a business model. But I think I've now changed my mind to where I think the most important thing is getting users on wallets and having them start to understand the concept of crypto. The other low-hanging fruit as far as adoption, I think, is actually in the enterprise space. So you have companies like Splunk that are ingesting petabytes of data a day, and this data is relatively sensitive. So maybe you have server access logs, and you need to ensure that this data has high integrity. So you do a simple check-in with Ethereum. I think there's a lot of low-hanging fruit like that in the enterprise space, particularly around cybersecurity, that hasn't been touched yet. And that once it is, we'll get a lot of new developers and chief information security officers and people in compliance exposed to blockchain technology and really excited about it.
Very cool. No, and since we're kind of running a little short on time, we still got a couple questions left. And maybe you want to maybe tell us a little bit about some of the projects you've seen, because with Reuters, with all the interviews you've done, what's some of the best use cases you've seen for crypto right now that have the potential to be massive? In your experience and the people you've interviewed, there's been a lot.
Well, yeah, the adoption is really a big problem. So I would like to just come back to the media space that, like we mentioned, that's Stimit. I think that's really, like I just would like to come back a little bit to, the outlook for media and blockchain. I really think that media has been, has been changing a lot, but Ren was right that I think media needs to be disrupted in a big way, and the adoption is not happening yet. But I think if we could just be a little bit more patient and probably it's around the corner. I think blockchain can do a lot for media. For example, like I have worked in China for many years in media, and censorship is a problem. And if we could really have the adoption, in the media space with blockchain, I think not only we can verify the information and just like really wiping out the fake news issues, but also if we could put the information on blockchain, store the information out there, and encrypt it, and there's no way that people can censor the information.
Can I just say something? It is the end of a 2-day conference, and I think we're all conferenced out. But I think let's put the bullshit aside. You just asked a question about adoption. There is no crypto adoption. I only know of 3 use cases for crypto at the moment. The one is a peer-to-peer value transfer, but only for large amounts of value because the value costs a lot of money. The other one is this thing on Ethereum called an ICO, which is a smart contract way of raising capital. And the third use case for crypto that I know is speculation. And today I challenge anybody else in this room to say to me that there is an adoption of some other form of crypto that doesn't meet those 3 criteria, because I haven't seen it.
If I could add real quick, one of the things that I'm kind of surprised that nobody's mentioned it yet, but I think a huge opportunity that we're kind of missing out on is the gaming industry. One of the things that we're specifically working on is we're working on, for example, I'll give you an example, working on a first-person shooter game similar to Halo or some of the first-person shooter games you're familiar with. Imagine you going in with your cryptocurrency, and every time somebody kills you in the game, your cryptocurrency is up for grab. I think this incentivizes not only competitive gaming, but it also draws people to cryptocurrency as well.
Yeah, I want to pick up on this. I think Ren is correct to call out the bullshit, and really there is not much adoption out there, but like people, I think everybody here has a faith in blockchain, and that's why we're here. But it's true that adoption hasn't, mass adoption is not happening yet, and I think what is interesting is after I talk to a lot of top entrepreneurs and investors, I think one thing I noticed, and also comparing to the internet era, it's always like media is very excited, ahead of the curve and reporting on, helping the hype. And talking about, like, if you remember the internet age, we were talking about, pets.com and everything's going to be internet, but it's a bubble. But internet is there to stay. I think it's the same thing. Media is very hot, and if you look at last year and this year, and there's so many blockchain media out there, crypto traders there, and so media is there to report on, giving people this future perspective and everything. But the adoption is not happening, so people are losing patience. They think, there's a gap between it. And then gaming is interesting. Interestingly, a lot of, like one investor told me that really gaming is a place to look at because gaming is the easiest place to adopt. Like, if you want to disrupt banking or the financial system, this laptop, you're basically disrupting a lot of people's interests. But gaming is like the easier territory to enter, and you have a massive numbers of people to. So this is like a very interesting space to look at.
Yeah, no, you're absolutely right. But speak to what Ryan was talking about right now. We mostly have nothing but speculators in the space. Until we get past that, we're going to have this problem where we'll never have mass adoption until we have, I think, a stable coin. I didn't want to get too technical in this talk. I just wanted to keep it kind of, media based. But you guys all have enough tech savvy to talk about stable coins. Do you think once we have something like that, and people start realizing that they can actually send digital currency, and it's not going to be, it's not going to cost them, $5-10 every time they send $1, or have that fear of missing out, from their currency going up or down? You think they'll be able to jump into gaming, be able to jump into media, like the Schemats of the world and things like that?
But our approach is wrong, and at the end of this month, Bitcoin is 10 years old. So we've got a 10-year-old technology in its current form, and in 10 years, if you compare the internet cycle, where the internet was 10 years after it launched, the internet was maybe a little bit behind where we are today. But don't forget that the internet didn't have the internet to drive its adoption. We have had all the luxuries of communication, of internet and social media, so we can spread things like wildfire. And yet 10 years after the Bitcoin white paper, we've got a couple of million accounts who with very little adoption. And again, I say to you, I think that as an industry, if we want to create mass adoption, our approach is wrong. We're building these complicated protocols, and we're expecting people to come to us to try and use these complicated protocols. I'll give you a very classic example. I'm a big fan of the prediction market platform, the Ogre. Yeah. I'm a big fan of what it can do. Have you ever tried to use it? You need to have a PhD in engineering to use it.
Yeah, you're jumping all over the point I always make, man. You need something that's blockchain that's as easy to operate as Facebook. You hit the thumbs up button, it works.
Yeah, I really hope that now that the market is down and all the hot air is gone, and people can't raise money to build all these technical protocols and dApps, I really hope that we'll be a little bit more innovative and use this opportunity to be innovative to get real adoption of the blockchain technology, because we actually do have all the building blocks that we need now. We have the ability for IoT devices to pass money to one another. We have the ability to store things on a mobile phone wallet. We have the ability to swap between the value of tokens either through cross-chain protocols or through exchanges. I think for me, certainly this week is a point where we have to change the narrative. And the narrative is we've been playing and blowing this hot air for enough time, and now for the next 12 months we have to focus on one thing, and that is getting 250, 300, 400 million users using the blockchain without them actually even knowing that they're using the blockchain.
Exactly. Cool. So Leslie, you want to jump in? And Jake, you guys, we haven't given you much time to see, so what you guys, tell us what your thoughts are, man.
Because the talk is about the future of media entertainment, I just wanted to touch on some things in that, because we're actually playing with a lot of the technologies that I believe are going to be major industry disruptors in the entertainment and media. Obviously, virtual reality, augmented reality, and volumetric video really changes the way that not only we produce content, but the way we consume it as well. And if you look at the current industry as far as the big companies out there, Intel, Microsoft, Facebook, they're spending billions of dollars into hardware, future hardware generations that we will be starting to see in the form of glasses, headsets, and various devices like that. And I think it's important for us to bring blockchain, if we're going to be encouraging the adoption of blockchain, to start getting into some of these future technologies that are going to be moving forward, instead of so much focus on integrating in current things that are pretty much going to be left behind.
Awesome. Jake, what are you most excited about in blockchain?
Yeah, I think you mentioned 3 use cases, and I think there's a 4th. And I think that this is the first time in human history that we can put a piece of data on a chain and say with 99.99% certainty that on this date, this happened. The genesis block of the blockchain actually has in it a New York Times date for the banks being built out. So I think there's a lot that can happen in enterprise adoption as far as data integrity goes before we even have to have this mass consumer adoption. And a lot of that can happen in media too.
Awesome. Well, you know, it was great speaking with every single one of you. It's an honor and a privilege. Really appreciate everybody out there in the crowd. Big thanks to Ivan, Marina, Ross, you guys were awesome. Brian Brown. Thanks again, fellas.
Thank you.
Thank you. God bless.
Don't leave, everybody. We have the announcement for the winner in just a minute.
Hopefully our companies, right?
All right. Okay, we have the announcement now. We're going to wrap things up and announce our winners for our pitch competition. So anyone who is involved in the pitch competition, the winners could get up to $10,000 and $20,000 worth of awards. So please come up to the stage. If you are in the pitch competition, come to the right of the stage right now. Thank you guys for a wonderful couple of days. I think the speakers were fantastic. Michael Arrington yesterday with the line of the day, right? The SEC or Dicks, I think that was on Twitter and around the world moments later. We had a lot of fun with Jeff McDonald this morning, with David Moss, with many, many others. It's been a great couple of days. And in just a minute, we're going to give $30,000 worth of prizes to the winners here. How many projects do we have lined up? Raise your hand if you're representing a project. Let's see, we got 1, 2, 3, 4. All right. Anybody else? Anyone else in the room representing one of the projects? Come on over here to the side, please. If you were in the pitch competition. All right. Everybody come up on stage from the pitch competition. Where's our lovely presenters of the checks? We have those? Okay, make sure those are hidden. Come on up. All right, let's get a microphone here. Tell us your name and your project.
I'm Sally Leon from TEDx.
I'm Paolo from Bexa.
I'm Manshu from Ponder.
I'm Kenneth Cologne, co-founder of EasyCare.
Great. Anyone else? Any other projects coming up to the stage? We have one here. All right. Pass it. Grab that microphone right there. Tell us your name and your project.
I'm Tony from Crowdforce.
All right. And our last one.
I'm Mark from Quicket.
Excellent. Okay. We're about to hand out $30,000 worth of prizes. So first, we're going to reveal our top 3, okay? These top 3 projects were the 3 best that our esteemed panel of judges chose from, I believe it was about 14 original entrants. So let me tell you the top 3, they'll please step forward. No peeking. Our top 3, Pounder, Pallets, is it Pally X or Pallets? Pally X, and EasyCare. All right, now we don't know which of these are the winners, okay? So we're going to give each of them just a moment to tell you one word about their project, and then we might have them, fight amongst each other for just a minute and criticize the other projects, and then we're going to tell you the winner. So just one word about your project. What does TallyX do?
We're building a decentralized platform for global trade and supply chain finance.
Okay.
So you don't mean like literally one word, right?
You can have 5.
We're a direct-to-consumer healthcare platform. So really enabling personalized holistic medicine along with the tokenized incentives program to promote cost savings and patient involvement in their care.
That was way too many words.
Sorry.
We are a gamified platform for referrals. We're trying to make the act of making a referral into a fun, easy, financially rewarding task.
And what's the name of your project?
Sorry, it's Ponder.
Ponder. And Ponder, what was wrong with their projects? What do you think? Why should you be number 1?
It's brutal.
Yes.
I thought we were gonna be a community, no?
After we win the money, yeah, we'll be a community.
What was wrong with their projects? Wow. Well,
why should you be the winner? Why should you be the winner?
You should be a winner because I think I don't know how many of you were listening to the last panel about adoption. That's the key thing right now. How do we get real life use cases which solve real world problems? And we think there's a clear opportunity here for referrals where people can earn money by making successful referrals, and those people that are benefiting from those referrals, whether it's for a job, whether it's for business referrals or for even dating, they pay tokens. So we think just the blockchain naturally lends itself to what we're doing.
Okay, interesting. All right, I don't know if I'm 100% sold, but okay, that was good. Why should EasyCare be the winner?
Okay, if we're going to go with the theme of adoption and just global utility, there is nothing more. There's no better on-ramp for just general usability than healthcare. I mean, no person on the planet can really live their lives without it if you don't have your general health, your general wellness.
Okay, we can't live without healthcare. Good point. Okay, that's a good selling point. TallyX, why should TallyX win?
Sure. So I think the real blockchain adoption has to come from a team of experts who are from a non-blockchain industry, who knows the inside out of the non-blockchain industry's pain point. So we're leveraging blockchain to really solve the problem that could not be solved by traditional technology.
Okay. All right, guys. So if we can bring the checks up to the stage, don't show anybody, stand behind them. Don't look at the checks. No, not yet. Okay, guys. We're going to announce the second place winner first. Third place, we don't have a check for you, but talk with the manager. We do have something for you. But the second place winner of $10,000 in rewards is none other than Ponder. I'm sorry, Ponder. I don't know why I said. So congratulations. You're winning $10,000 worth of services from Apiculture, which is you can use it for any of the legendary top-level services provided by Apiculture. So congratulations on your project. Fantastic presentation, fantastic idea, and hopefully this will help speed you to the next level of your project. Congratulations. Let's get a quick picture. All right. Okay. Our number 1 prize, winning $20,000 worth of services, is none other than TallyX. So TallyX is winning $20,000 of exposure at the Hong Kong Global Blockchain Forum Roadshow. So you guys are going to be invited to Hong Kong and have $20,000 worth of services to promote your project to everybody around the world there in Hong Kong. So we're very excited to present that to you. Fantastic project, great presentation, and everybody, thank you for being here. Along with all our guests here, let's bring up all the staff. all the staff, everybody, Marina, I know you don't want to come, but you have to come on stage. Everybody come on stage who was part of the event. Thank you for all your help the last 2 days. Thank you, Josh. Thank you, everybody who made this possible. This is a ton of work. A lot of people, over 120 speakers to coordinate, projects, panels, food. If you enjoyed the food, give a round of applause. If you enjoyed the VIP room, if you enjoyed the speakers, if you enjoyed the insight and the hard work of all these great people. Thank you guys very much. Let's get a quick picture of all the staff. And thank you, production staff, sound guys, for making everything go perfectly smooth. It was really wonderful. Thank you for that. And thank you, attendees, for making this a fantastic global blockchain forum. And the VIP after party starts in 10 minutes, so please come join us. Enjoy the rest of your evening. Thank you again.